Morning, everybody, and happy Tuesday. How are we all doing? Hope you are all well on this fantastic morning. I've hit the gym, I've had a shower, and I am feeling fresh as a daisy. Even got the hair done today. I am feeling gravy, baby. Unfortunately, Rich will not be with us this morning. He's a busy boy, doing some meetings, and he's got a lot going on in the background, ready to. I think he's going to be prepping for this massive event coming up in a couple of months' time. So you guys are going to have to look after me and be nice to me today because I am solo. I am Han Solo trading today. However, that doesn't mean that we can't dive deep into the markets. Guys, let me know what you're trading today. Let me know how your day was yesterday. How did New York session treat you? Anyway, what we're going to do is we're just going to dive into the chat. I'm going to have a quick say hello, say good morning to chat, and then we're going to go diving straight into the markets. I'm going to start with the pound dollar, then I'm going to move into euro dollar, and then I'm going to finish off with gold. If anyone does want to see me trade or check out any other pairs, just let me know. Right, I feel like that was a nice, positive, upbeat intro. Anyway, let's jump into it this morning. Let's see who is in. MK90. Good morning, all. What is good, bro? How you doing? What is going on with today's price action? There we go. I have truth be told, I have no idea. Like I said, I've literally just got back from the gym, sorted everything out, and jumped in the shower and got ready to hop on the market. So I'm only now opening up the charts. So I haven't actually had a chance to look. So those who haven't either will both be checking out the price action together this morning. Good morning. That is why. I don't know why the comments seem to be taking a long time to come up. Good morning. Looks like our government is dying. Oh, Danny, where you from? Where you from, man? I think it's just the way of the times at the moment. I think a lot of people think their government's dying. I think it's just the way things are going. Harsh saying, a nice love heart, green love heart. Yes, green day all around. Hopefully, guys. Yesterday was a no trade day for me. I would have liked to have forward tested gold, but I couldn't even forward test it. It wouldn't have even hit me in, tapped me in. So just one of those where the price just wasn't quite on side, even though we had the directional bias correct. We were long on gold, took the longs turned out, but just it didn't end up tapping us in, or wouldn't have tapped us in. Good morning, the best guys. Driller Jr., thank you very much, brother. We really appreciate those kind words. We will take care of you, Will, like a cute little baby. Aren't you sweet? Thank you very much. Oh, that made me giggle. Yo, Ewan Davis here from Apex Brotherhood. Hello, Ewan Davis. Big shout out to my brother. What's good, Ewan? How are you doing this morning? Ewan absolutely beasted me this morning. I felt weak today in the gym. I wasn't feeling it. I felt tired. I slept well, but I just felt tired. Just felt a bit weak. My body felt weak. I think it's, maybe because I'm losing a little bit of weight. But nonetheless, Ewan still decided to absolutely hammer me today in the gym when it comes to chest day. So big thank you for that, Ewan. My itty bitty titties are hurting today. Russia wants to trade. Okay. Then I don't know. I don't know what to do with that information. Please hit that like button and subscribe. Yes, guys, absolutely. As we see, the channel is growing, not even ever so slightly. The channel is growing fast, and it is awesome to see. So, guys, make sure that you're absolutely smashing that like button every single time that you jump on one of our streams. And even if you're not even watching the streams, even if you come just to watch the trader interviews, even if you come just to watch, the likes of Victor, when he does his segments, absolute value grenades held by the guys in the 5ers community. Or even if you're jumping over and taking part in the Discord, we're always active here at the 5ers. So make sure that you are going to smash the like button. And more importantly, make sure that you share the channel and subscribe if you haven't already done so. Garden design pictures. I think that's someone flapping cash about. Yes, maybe. Let's go. It's a cash day today, hopefully. Although we're getting a hell of a drop on pound dollar, so this will be interesting. I'm ready for Money Making Tuesday. Let's go. Yes, let's get some Money Making Tuesday on the roll here. Good morning, Felix. How you doing, brother? Good to see you in. I love the market today. Awesome stuff. Let me know why. Let me know what you are trading today. I'm assuming if you're pound dollar and potentially euro dollar, you're selling quite heavily because especially pound dollar we've had almost zero pullback. You know, we've had a little bit of a pullback around 6:30 this morning. Other than that, it has just been melting away like a Mr. Whippy in the summer sun. Good morning, Will. Couch, how you doing, brother? Good to see you in. Check the charts and see if you can guess. See if I can guess what? As in, guess where you're entering? I can have a look. I can try and guess where you're entering. You give me a pair at least. Give me an asset that you're trading. Give me a bias, and I'll give me an asset and a bias. I'll try and guess your entry. Was bearish on EU and GU since Friday? Yeah, beautiful. Yeah, really nice one. Friday. Okay, so yesterday you would have taken a little bit of potentially a bit of drawdown, but nonetheless, yeah, today you would have been good if you're in an open. I know you're talking about your bias, I'm assuming. So Omaxo saying good morning. Well, good morning, brother. How you doing, my man? Good to see you in. Nice to see my trading fees have been slashed in half since complaining. That's awesome, man. Good to see it. Like I said, you know, we don't know what issues people go through. You know, we are traders of the 5ers accounts, so therefore when we see an issue, we can bring it up. But we don't see if we're not getting those sorts of issues, and you guys bring it to us. There's not much we can do about it. The best thing you can do is go speak to support. But good job. It's good to see that you've had that rectified. That's awesome, man. Azrael, good morning, guys. Yes, Azrael, how you doing, brother? Good to see you in. Good. Be good to see some analysis this morning on Euro USD. Absolutely, brother. I hear you, man. We shall definitely be doing that. What I'll do now then. Good morning. Oh, and well, I'll bring it up real quick. Good morning, Willy Wanker. Thank you very much for that, my friend. Good morning to you. I hope you have a good day. Good afternoon. Awesome stuff. Good afternoon. Greetings, MJ Thaland here. Is your couch your co-host today? Yes, mate. My couch is my co-host. Shall I get my brother? In fact, I don't know if my brother's in the house. If my brother's in the house, shall I get him to go sit there and just look pretty? I don't know about the looking pretty, but I can get him to just sit there. Anyway, let's get a screen share up in here. We've said hello to everyone. Good morning, good afternoon, good evening, good night to all of you across the world. But now that we've said hello to everyone, let's get a screen share up in the house. We're gonna, like I said, we're gonna start off on. There we go. We're gonna start off on pound dollar, and then what we're gonna do: pound dollar, move over to euro dollar. Euro dollar, move over to gold, and then once we've checked out gold, we'll go from there. If you guys, like I said, if you guys want me to check anything out, just let me know. Morning, Will. Check on GU. 100%, man. Literally doing that now. What an awesome intro this is. Good morning, rise and shine. William is officially live. Grab your coffee, get settled, and let's get into the flow of the market. Let's get it. Let's make it a productive session. Absolutely. On that note, I'm going to take a quick sip of my coffee, get some music going, and then we're going to dive deep into the markets. That's not a bad coffee. It's not the best coffee in the world, but it's not a bad coffee. You know it's going to be a good day if you have a good coffee. I always find when I play music, which is a shame. I used to love that music. William, are you still journaling your trades? Yes, 110% I'm journaling my trades. Every single trade that I take goes straight into my journal. Abradov Lincoln, please not the elevator music. Dude, you know, the elevator music, I can see why people hate it, but the elevator music, especially for us when we're solo streaming, it just gives us a bit of background sort of noise. Because when we're analyzing the charts like I'm doing here, or like I'm about to do here, when I'm analyzing the charts, I've got Rich talking, and Rich sort of, he's like that background noise. And same goes with, you know, when I'm talking or when Rich is analyzing the charts, I'm Rich's background noise. You know, so it's nice to have someone be that background noise. And when you haven't got that help, when you've not got that sort of that person in the background just being that noise, you hear yourself talk, and it's difficult to hear yourself talk, man. You feel like you're literally talking to yourself. So what I've done on GU, what I'm going to do first, I'm just going to go from GU, EU, gold, and I'm going to mark out preset. I'm going to mark out London because we've had such a drop on euro and on the pound. I'm going to mark out pre-session as well. So I'm going to mark out yesterday's London session as well as today's Asia. So what I'm going to do is, you know, mark out highs and lows, move over onto euro. All this is on the 15-minute at the moment. Then I'm going to go back and do my top down. And then, you know, mark out again. Ooh, we equaled yesterday's London session. That's interesting. There we go. And then we'll mark out Tokyo. Okay, Tokyo, I'll mark out just before Tokyo. So what I like to do is, even if I'm marking out Tokyo, if Tokyo's just in the middle of nowhere, like here, for example, I won't mark that out. I'll go to the next best thing. I'll go to the most recent high. Because what I'll end up finding is on the 5-minute, this will have some form of area of interest, like this consolidation zone here. So I'm not too interested in pre-session highs and lows if they are not highs and lows. So we can see here, you know, we got pre-session highs here. They're not highs. That's just when it opened. So I'll go to the next best thing, which is the next available high. And that's what I've done here. So technically this is Sydney high or New York high. And then, you know, it's also matched up with yesterday's London high as well. So we got a double high there, which you never hear often. Everyone says double lows, but you never often hear a double high or equal highs. Anyway, same goes on gold. Marking out yesterday's London. Now, yesterday's London was taken, so we don't actually need to mark it, but I'm going to do it anyway, just for the sake of knowing where it is. And then again, mark out the pre-session lows, pre-session highs. There we go. Cool. There we go. Fantastic. So now that we've done that, I'm going to go back to GU, go up onto the 1 hour time frame, because like I told you, I don't go to the 4 hour when I'm on the sort of Tuesday, Wednesday, Thursday. I just stick to the 1 hour. The 4 hour for me is a Monday time zone, let's call it, or a Monday time frame, just because it gives me like that sort of higher time frame overall bias potentially for the week, or areas of interest, let's call them. Cool. Right, now that we've done that, where do we want to be looking for? You know, we've got this low. This is a current low, so this is exactly where we are. So this could change. We've got these areas of interest just down here. We've got these lows that were broken and closed. We've also got this low just over here, which was swept. Yes, it was. Just about swept as well. So what we're going to be doing here is just trying to find out where price could slow up from. Like, where's price trying to get to? And it seems like it's trying to head down to this sort of area here around the 34,914 area. Maybe come down to that zone there and then start maybe pulling back or moving back up. Now we can see that we've clearly had this big drop off. What I'm going to do actually real quick is I'm going to open up Forex Factory and I'm going to share that with you guys so you can see. There we go. So now you guys can see Forex Factory. Okay, so we had US yen crash in. That was 2 hours ago. We've not had anything out majorly for, other than the fact that, yeah, so the US dollar had a lot of weakness. So we'll check the Dixie in just a minute. Anything else that come out? No. Gold sips, no. It's orange, yellow. US Treasury Secretary, strengthen the Japanese. Okay, yeah, strengthen the Japanese yen. Okay, so we're not too interested in the Japanese yen right now. It's not a asset that I trade. It's not a pair that I trade. Okay. UK senior minister. That's orange folder. German inflation. Yeah. So the biggest thing is the US JPY crash. Okay. Let's go back over to the charts. Let's see what's going on with the Dixie real quick. So yeah, we're getting a bullish Dixie. So when we're getting a bullish Dixie, what we want to see is potentially weakness in pound and euro due to the fact that the dollar is so strong. So now that once we've got this, now we can start understanding why the dollar is so strong and why the pound dollar and euro dollar is so weak. So now that we can start looking at potentially where's it coming to? We've got fundamental weakness. What does this mean for the charts? If we've got fundamental weakness, where are we going to come down, try and sort of test around on the technicals? Can we see a pullback? Honestly, the only area I'd be looking to pull back is all the way up to 135.805. Anything below that isn't within my trading strategy. Maybe if we see, could we pull back to 135.448 before continuing lower? But honestly, I'm not too interested in anything here until we can get down to 134.875. If we can get down to that level there, that's going to be a really nice interest point for me because that's a high level point on the 1 hour. If we can then consolidate around here and start moving higher, even if it's a pullback before moving lower, that's absolutely fine. I can get in on that pullback to actually start longing up into areas of interest, up into high value areas. And the only two areas right now for me are those two areas that I explained earlier. In fact, what I'll actually do is I'll put a proper box on it so it looks a little bit better. So this is a breakout zone or break and close below zone, and then we got this consolidation here. So those are the two areas that I'm interested on the 15-minute. As we drop down to the 5, I'm really not seeing much. Maybe a pullback into this area. It's not necessarily. I mean, it's not a high value area, but it does come into contact almost with my lower area that I just marked out up on the 15, which is this area up here. So potentially, could we pull back into this area and continue lower and move down into the 1 hour interest? If not, I couldn't buy this right now. I've got no reason to buy this right now. We've got no wicking, no rejection, no consolidation. All we're getting is a potential pullback or even profit taking. This may not even be reversal. This may purely be profit taking. So right now, I'm not interested in anything on pound dollar. If I was to be, the only time I could have sold this. Now, if you guys remember my break and close strategy on gold. Oh, my elevator music has stopped. See, this is what I mean. You can tell when the elevator music stops because it'll go quiet in your ear. Anyway, like I was saying, if you guys remember me talking about my gold strategy, which is consolidation, break and close above or below, entry on the close. Now we have got consolidation here. Consolidation clearly following with trend as well. So we've got this identifiable trend, consolidation, break and close below the consolidation, in line and following trend. So if we were, and I haven't tested this on currencies yet, I've only tested it on gold, so I'm not too sure how this would perform. However, if this was gold, potentially we could be looking at a short on the new candle open after this very nice impulsive or volumetric short candle or bearish candle that closed under the consolidation and continuing price pattern. Now, we could either target this low here, which would be a 1 to 1.4-ish, or we can try and head down for a 1 to 2. Now, I like a 1 to 2, although with this area here, I probably would have just taken the 1 to 1.4. So I probably would have looked something around this, or 1 to 1.3.8. So that's what I would have looked at, but depends on your strategy. You could have traded it however. If you want a pullback, then if you're looking for the break and retest, we've not got any significant sort of highs and low breaks, but we have still got the consolidation. Got the consolidation here. We have got the break and close here. And we've got this break and retest, which you would have been missed ever so slightly. So there were a couple of opportunities to be trading around 6:30 a.m. this morning. So if any of you are if any of you are in Europe, because you're an hour ahead of us, so that would have been 7:30. Maybe that's a bit better of a time for you to be trading. Or if you are in the other side of the world, Asia, Australia way, or you're a few hours in front of us, maybe even South Africa is 2 hours ahead of us, then perhaps you could have been looking at taking this. Now, however, like I said, you would have been missed on a break and retest, but you would have been entered in on the break and close of continuation. As we move, in fact, has anyone got any questions about my analysis on gold? Sorry, not on gold, on pound. If so, let me know in the comment section now. If not, I'm going to move straight over to euro dollar. Just seeing a couple of questions. How many trades do you take on average per week? On my personal funded accounts, I'll take 1 or 2-ish. Depends on how the week's been. Last week, I took 2 trades. Week before, I took 0. Week before that, I took 1. I think it was 1. Without looking at my journal, I don't know. Whereas on this account, on my live 100k stream account, I'll usually take about 2 or 3 a week. And the reason for that, I'll trade every day if there's a setup, but I'm a little bit more picky with the 100k live account because obviously I'm clawing back out of drawdown. I managed to get 2% back last week, and that was through 2 trades. That was a 1-to-1 risk reward ratio trades, both hit TP. So that was nice. On my boob account, on my fun account that Rich gave us, I'll trade every day. Four trades a week, and some I'll even trade twice a day. Got to remember to keep hydrated. I didn't have much water in the gym today as well, so I got a bottle of water now, so I need to make sure that I'm going to finish that. I want that gone before the second session this afternoon, because I need to try and keep my water intake going. Raphael, good morning, William and all. What is good, Raphael? How you doing, brother? Good to see you, my man. But why though? Why? What? Why the elevator music? I don't know, man. Like I said, it's just a bit of background noise for me. Otherwise, when I have like 2 seconds of silence, the room feels very empty. Like my whole room now, if I'm really quiet, it is complete silence, and it's like there's just no atmosphere. And like even when you guys are chatting, it's great fun to chat with you guys, but because there's no audio chat, there's no atmosphere. So it's almost like you've got to fabricate the atmosphere and like create the feeling in your head, and it's not easy to do that and do analysis and live trade. So usually a bit of background music creates the atmosphere a little bit easier. I don't know. Maybe I'm being a bit on the spectrum with that. Maybe I don't know. I think a UK Prime Minister is told to resign by council. Now, yes, I know there was a lot going on. I need to do a bit of a read up because I had a really early night last night. I went to bed and just did some reading of my book. However, I know that there was a lot going on with the UK Prime Minister. So I am, as soon as this session is done and I pop off the charts, I'm going to go just read up and see what's going on with the UK Prime Minister and what's going on with the UK government. But that's really interesting. I know, like I said, I know that something is going on. Felix, 102 trades. Oh, 102. Yeah, no, 102, not 100. Not 102. Not 102, my man. That's some HFT trading. You're doing fantastic, Will. Don't panic. Ah, thanks, man. I'm not panicking, dude. I've streamed solo for a long time. It's just no one likes it. No one enjoys streaming solo. It's crap. But it is made a lot better when you guys interact. So yeah, big shout out to you guys. Super grateful for your interaction. Anyway, let's jump straight into the euro dollar. I'm going to go back up onto the 1 hour time frame now because we've already noted out London and Asia highs and lows from yesterday. So what we're going to be looking for now is why is the euro dropping fundamentally? Why is it dropping, and where can it be dropping to? Technically. So what we're going to be looking for, we've got wicks of these lows. Bugger off. We've got wicks of these lows here. We've also got these. Let's call it an area. I'm not going to mark out the low. I'm actually going to call this an area of interest low, and then we've also got these breaks that you can see identifiable on the 15-minute, or it will be identifiable on the 15-minute. So let's drop straight down onto the 15 because the hourly is not really telling us too much other than areas of interest. Does the exact same on the 4 hour, just but for the intraday. So what we're looking for here, we've got this consolidation, break and retest, reaction from it, failure to break the high. This is yesterday's London high, by the way. We had a failure to break that. We matched it. We equaled it. We broke and closed, under the under the New York low. So we broke and closed that. Broke and closed under this low here. Started slowing in momentum a little bit and consolidating, pulled back up and retested this area of interest. We retested that, double wicked off it, and now we're moving back down. We've created a new low. We've broken and closed under this low. On the 1 hour, we're wicking this. And even on the 15-minute, we're struggling to break it. So what I'd like to see in an ideal world is a nice sort of volumetric close underneath. Now, if we can do that, I'd love to see maybe something along the lines of this. I'd love to see something like if we can see a nice break and close below. And what I mean by that, we've got half hour. We got 31. Okay, no, bang on. Okay, now we got 30 minutes until the until the 1 hour candle closes. So we've got a bit of a way to go yet. But however, on the 50-minute, we've just opened up a new candle now. We are technically under this low. If we move down to the 5-minute, the only issue I'm seeing, guys, is that we've got consolidation on the 5-minute. We've just about closed it on the 15, and on the 1 hourly, we're wicking it. So this is slowly becoming an area of interest for a probabilistic pullback continuation higher. Or if we can wick these highs and break and close lower, we can have that continuation lower. So honestly, right now I've got a bear bias, especially on pound. So bear bias on pound, bear bias on euro. I need to see a break and close underneath this low if we're going to pull back continue. So that's what I need to see on the euro. However, the way we seem to be consolidate, although we are wicking nicely, the way we seem to be consolidating, we are really losing conviction in this low. This is a high value area of interest now, and evidently so by the technicals as well. If the only thing that worries me is we have also got this consolidation zone that we've double tapped into and not had much of a reaction from it. So I'm going to mark out the 5-minute structural high, and then I'm also going to mark out the 5-minute structural low. I'm just going to mark it out just down here. There we go. So now that we've marked out the structural high and the structural low, I need to see a break and close above or below. If we see a break and close above, so if we get something like this, it doesn't mean that we're reversing. If we get something like this, then we can look at our entry zone. Then we can start thinking, right, okay, it's failed to move lower. It's broken and shifted structure higher. It's failed that low again, has retested that low of interest, and it's created a higher high. Once we create that higher high, it's almost like that confirmation. We just then need to look for confluence to then potentially get in on a high. Get in on a pullback. Where can we look at targeting then? Potentially, we can go for a one to nearly a 1 to 3 or 1 to 2.8, and then look at taking yesterday's Asia highs and also Tokyo highs. So that's going to be interesting. However, that's all hypothetical. It's all probabilistic because, that's not what's happening right now. That's not what's in front of us. If we, however, get a break and close under, then a pullback into this area would be a beautiful opportunity to be selling into the sort of 117,340 level. And I think that's going to be the more probable idea today. We're clearly bear bias. So we're clearly in this downtrend, obviously. So here, the momentum of the markets, we're consolidating, breaking through, consolidating. If we can break through, we got two opportunities. Like I said, we can have that gold strategy that I use. Never tested it on EU and GU, so don't take my word for it. We can look for the break and close, or we can actually wait until we get a pullback and then refine that R ratio just a little bit more and end up with maybe a 3.5 R trade. So that's what I'd be looking for on the euro. Again, guys, if you have any questions on that, you want me to break it down a bit better, or you want me to break down something a little bit more specific, then let me know. I'll jump in the chat real quick again before then moving over to gold, which seems to be paying me a little bit better at the moment. Kian, stick to the charts, waiting for gold, and something that is about to happen. I'll tell you what, I'll make it a real quick one. Let's sweep straight through. Okay. So there's a few comments I want to bring up. So I'll tell you what, we'll jump straight into gold first. So Kian's thinking that something is about to happen with gold. Kian, let us know in the chat. What do you think is going to happen? Let's move up onto the hourly. Hourly, we are seeing bullish structure. We are seeing overall, we've not got much of a pullback like I wanted to. Guys, I really wanted that pullback yesterday. We didn't get it. And I did say, I said, look, option A is that we pull back. Option B is that we move from this exact point. It just happened to be option B, which wasn't my favorable option, but it was an option nonetheless. We've got to understand that the charts aren't always going to do what we want them to do. And that's why I say trade what you see, not what you want to see. Because if I traded what I wanted to see, I would have sold off into an area that wasn't ever going to sell off into. So always trade what's in front of you, not what you imagine could be in front of you in a couple of minutes or a couple of hours' time. Anyway, we've got a low of interest here. That's a very large low of interest. I meant down here. There we go. Low of interest. We've also, if we put a fib on, we have hit a very nice fib zone. Just there. In fact, let's refine it a little bit better. There we go. So we've just tapped into the golden zone. We've also got imbalance here, or fair value gap, whatever you want to call it. So we are confluence stacking here on this bullish momentum. Now, we are looking really nice as well. As we move down into the 15-minute time frame, we are slowing down in momentum ever so slightly. The only worrying issue is, or not necessarily an issue if you're trading the... Let's just get rid of that. That was a shocking attempt. All right, let's try that again. The only issue is that we have broken structure. Now, we've come up, swept the... I believe this was yesterday's London. Oh, wrong one. Yes, so we've swept yesterday's London. We've put in Tokyo high here, and we've come down, pulled back, broken, and just completely invalidated this low here. So we're just going to delete that. So we've broken and invalidated that low. Oh, in fact, actually, no, let's mark it out as a breaker structure. Let's mark it and identify it. There we go. So we've got this break of structure point here. We're consolidating. Now, two areas. You can either look at this consolidation here on the higher time frame as an opportunity to actually be selling, to be buying from. Or what you can do is actually look at this as an opportunity as a consolidation zone to be actually breaking and closing below and continuing lower to an area of interest. That area of interest could potentially be this zone here around about the 46.77 level. So when you're seeing a bull bias, but then the lower time frame is potentially suggesting and hinting at the idea of sells, you got to be very, very careful because you're going to be counter trend trading. And if you counter trend trading, you're going to risk the probability, or you're going to like lessen your probabilities of hitting your TP. So just be very mindful of counter trend trading. Now we have, like I said, got that beautiful area of interest. And as we move down to the 5 minute, we've also tapped into this zone here. We are stacking confluences to the bull side. So for me to sell this feels a little too risky. So therefore, what I'm more interested in is we've got this consolidation here. Really nice consolidation after tapping in here. Nice little reaction as well. If we can get a break and close above, I think I'm going to be buying this. Especially if we can reject. If we can keep rejecting around here, get the bullish move and break and close, I reckon something like that is going to be very, very nice. Now, if we can get this now as well, this is going to be a really nice opportunity because Trump is still sleeping and therefore he's not going to cause any ruckus at the moment. So hopefully he's dreaming about hitting people's stop loss, not actually implementing it. And then hopefully once he's woken up, I can be in and out of this trade. So that's what I'm seeing, or that's what I'm wanting to see. I'm going to put 2 structural lows here. There we go. Because if we get a break and close under here, it doesn't necessarily invalidate the whole move because it's internal structure. But if we move something like this, then it completely invalidates the entire move, and then we're clearly going to start dribbling on down to a lower point of interest or a lower area. However, if we can break and close above, brilliant, continuation higher. If we break and close below here, muck around a little bit, and still break and close above here, then I still see this as a valid buy zone. So I think I'm bull bearish on gold. Yeah, I'm bull bearish on gold for now. Let's see how this goes. Like I said, I'm not going to rush an entry. Asia highs would be a 5R. We'd be looking at around 3R if I reduced. Depending how this breaks. If this breaks with some nice momentum, I'll put my stop on the low here. If we start struggling, I think I'm going to put my stop at the low here. Because the only issue is, and you've got to ask yourself, why wouldn't your trade play out? And, when you look to the left and you've got areas of consolidation, you've got pullback zones, you've got potential points of, if you've got a bull bias, you've got potential points of reversal above you, then you've got to start asking yourself, is this the right decision? Now, we've got higher time frame being 1 hour, 15 minute structural points stacking up as confluences. However, doesn't mean that lower time frame's it doesn't mean those confluences are all going to stack up. So you got to be very careful when trading the lower time frames, because sometimes counter trend trading is the correct way to trade. Doesn't mean that you've always got to be flowing with the trend. It just decreases your probabilities. That's literally all it is. Let's have a look. So yeah, that's what I'm waiting for. I like that on gold. But yeah, Kian, let me know what you're looking at, because I know that you said that you were interested. Is CPI today? What would the number mean for the trading today? Let's have a look. I believe it's CPI today. Yes, core CPI today. So 1:30, that is. So 1:30 p.m. We've got US dollar red folder. Oh, that's UK time, by the way. So that's GMT plus one. 1:30 US dollar red folder high impact core CPI month on month, and then CPI year on year. So yeah, be very careful. 1:30. We have got some pretty heavy hitting news. Honestly, I'll be out by I want to be completely done by 1 p.m. I don't think I want to be in a trade any later than 1 p.m. because we're going to start. We'll start dropping in volume as we anticipate and wait for the CPI data to come out. No, I was talking about the charts. It's fine. Oh, sorry, mate. Abradolf Linkler, let me know. Let me know what your question was then. I'll be happy to answer it. Morning all. Good morning, Unbiased Trader. How you doing, bro? Good to see you in, mate. Abradolf Linkler, sup G. By the way, I've learned a strategy from this slide. It's called B plus. Henix, by the way, I have learned a new strategy from this live and called it my B plus strategy. Dude, that's sick. That's sick. If you know, if you can create a strategy from what we talk about, good on you, man. And if that's, just be careful taking B plus strategies. On my main accounts, I'll never take B plus strategies due to the fact that they're lower probabilities. But if you can refine a B plus strategy into an A or an A plus, then dude, you're laughing. Go test it. But that's what I say. You know, not everyone sees how we see the market, and you know, for you, my A plus strategy may be an absolute garbage strat, whereas for me, your A plus strategy may be my C strategy or B strategy. So it's interesting how people see the markets. May is historically a weak month for sterling, and 2026 is proven no exception. Plus, the Brent crude oil price rose, which increases the UK and Euro import costs, weakening the pairs. Yeah, it seems to be playing out that way as well. You know, it doesn't seem to be going too well. May last year for me, when I was trading pound dollar as well, I actually had a bit of a crap month. It took me, I think it was June, July, I started making back the money that I lost in May, and then started clawing back that drawdown. So yeah, no, I think it was around about the same time that I actually hit drawdown. However, May for me this year seems to be pretty good. Like I said, I've already hit my monthly average quota for May, and that was in the first week of May as well. So if you can find the right side of it, then happy days. Abradolf Linkler, so you're not only waiting for a chotch, you'll change your character. I've got you. You're not only waiting for a change of character, you're waiting for a BOS. Yeah, absolutely, mate. So what I look for, let's just move up here real quick. If price is doing something like this, clearly in this downtrend here, and then price consolidates. If we've got this clearly identifiable downtrend, I need to wait for some form of structural break above. And waiting for a structural break above, it could just be a pullback into this zone. Now, if we get a pullback and it fails to break lower, and then we get a move above and it breaks a new high, it's almost like that confirmation that it's not a pullback, it's actually a break and continuation above before then looking for your entry zones, whether that's be down here, up here, or down here. So I like to wait for that confirmation. It just reduces the probability of it being a pullback. And I got to be very careful of that as well, because like I said, this could be a pullback. It could be some form of mitigation, manipulation, whatever you want to call it, price rebalance. It could be anything. It could just be profit taken. All this here could be profit taken, and then it drives price up back into an area of interest before institutions start selling off again. So you got to be very careful when trying to find the early point of a reversal, and that's why I wait for that last break of structure before continuing on that reversal. So yeah, I definitely wait for a break of structure after the shift in structure or the change of character. You trade a silver? No, I don't trade. I can look at silver, but I don't trade. I've never traded silver either. Like, not even on a demo account have I touched silver, but I can never even look at it. Abradov, thank you there. Yeah, so guys, I'm not rich. You know, Richard Butler is the stream manager. I'm not. I'm not going to bring your comments up if you're talking about payout delays. If you have an issue, go speak to support. I'm not support. So guys, like, I love you all, but I'm sorry. I'm not technical support. So if you are having it, I'll address it once and once only. If you are having issues with the market, or with payouts, or with accounts, or delay, whatever you're having issues with, go speak to support. I'm not support. I'm not going to bring your comment up. And if you spam, I'll put you in a timeout. So one and done. I'll only address that once. Break above the 4705 and we're off. 404. Yeah, okay, nice. Yeah, I got 4706. Yeah, Kian, love that, man. Which are your top 3 indicators to use, Will? This one is my community one. It's a watermark. It's my Apex Brotherhood community. So that's not an indicator. My top one is Lux Algo. I love Lux Algo sessions indicators. It gives me New York, it gives me London, and it gives me Tokyo. So I like them. I don't like keeping them on my charts though, because I work a lot with areas, so I draw boxes up. I find it distracts me and makes me think that it's a box of interest. I'm like, oh wait, no. So I use Lux Algo for my sessions, and then I use a 200 moving average for my swing trading. Other than that, complete naked. Below 46.90, and we will drop like a stone. 46. Okay, that's interesting. So you want a breaking, or you want to close below the candle open at 46.90. I if we can go below 46.86, which is the wick low, I like to go wick low, wick high. Because it gives me the higher probability, the higher chance, and that little bit stretched price. So if we can break and close below 46.86, then yeah, I think that's where, excuse me, I'd be putting my hard stop loss. That would be my area that I'd be thinking, yeah, this is, we're gonna continue dropping from here. Okie dokie. Do you use fair value gaps? Technically, yes. Technically, no. Like, we had this conversation yesterday with a trader. I use fair value gaps and I call them imbalances. I call them imbalances because it's an imbalance in price. If we have a zone of interest, I don't trade from a fair value gap. Like, I know a lot of ICT traders. I know ICT uses imbalances. Fair value gaps. And I think a lot of people are afraid to use them because they hate ICT. And a lot of people only use them because they love ICT. It's not necessarily the ICT concept itself. It's more the fact that price does respect these zones to a certain degree. Now, for me, I've tested this, probably fair value gaps I've been testing probably easy 4 or 5 years. 4 or 5 years I've been testing imbalances, and in my strategy they work. However, I don't enter off of them. They don't hold enough value. Ironically, that's why I don't call them fair value gaps. I call them imbalances. They don't hold enough value for me to use it as an entry criteria. However, they are interesting as confluence areas because price does respect them to a certain degree. Like I said here, in fact, I'm pretty sure it's on the hourly. We got an hourly imbalance here. So that's a fair value gap, and especially the equilibrium. So the middle line, there we go, the middle section of a fair value gap, if it can align with a fib retracement, which it's bang on doing here. You've got a fib retracement on a pullback. You've got a break and close, and usually for a pullback, you've got to break and close higher, pull back into an imbalance, especially into the equilibrium or the middle section of an imbalance, and with a golden zone on a fib pullback, you start building confidence. And therefore, that is what I use the fair value gap for. That is what I use the imbalance for, is because it helps me build confidence and it helps me determine where we can be looking at going on a certain trend, or how I can look at pulling back, or is there anywhere on this larger imbalance that I can scale down into the 5 minute, the 15 minute, the 1 minute, whatever time frame that you use. Is there areas within this imbalance here that I can be interested in? So if I look at here, we had the equilibrium of the imbalance was here. Now, is there any area of interest here? Not really. There's not much area of interest there. However, there's another imbalance down here. Is that a bit deep? Could be. However, we've also got, the middle section of the golden zone here. So if we were to come down, we slightly wicked into it, but not so much. We've also got an imbalance up here. It's a little high if you ask me, given that we've still got so much price underneath here. However, this little section here it's like that nice middle ground. It's not too sort of deep to the point where we've got these low area, this sort of area low of interest, but it's also not a shallow pullback around here somewhere. So it's like that halfway middle point. And then what you can do then is you can help yourself determine through current price. So I can actually then look at, there we go. I can look at current price here and say, okay, so we've just completely ignored this. We've not quite come this low down. However, we've come down into the equilibrium of the 1 hour imbalance, and we've just tapped into ever so slightly the 6-1 fib, wicked it, and reacted nicely off it. So if we can break and close with momentum above, it's just confluence stacking. And all confluence stacking is building confluence and momentum and helping you decide on where you want to be trading. Now, if I can have 3 confluences stacking on top of each other in the same direction that I'm biased and within an entry point, I can enter according to my A+ strategy with the confidence that I've also got bias on my side from the 1 hour to the 15 minute to the 5. So it's all about building your confidence, because then if I hit stop loss and it absolutely invalidates me and it just rips me apart, I know that I have put in the best possible practices to assure that I'm going to hit TP. Now, if I don't, and I just look at it and I think, you know what, cool, we've got a fair value gap here. This is good. We've got a nice reaction. I'm going to enter, and off we go. Or we've got a bullish engulfing after a fair value gap here, and we're going to go. It's like, yeah, okay, you got one confluence and one entry criteria, but why else? Like, have you looked at what could potentially go wrong? Have you looked at, why else you could be right? What else is pushing you in the direction of making this decision? And the more reasons you can give yourself to go long, and because you've also got to give yourself reasons not to go long, and that's what these are here. These are reasons not to go long, or reasons to potentially get TP'd lower. Now, if you can stack a higher reason or more reasons why you should go long than you should to go short, then therefore you're helping your confidence when it comes to your bias and your strategy. So yeah, I hope that helped. Thanks, Will. Love bouncing ideas off you. Not a problem, my friend. You're very welcome. How much percentage should you risk per trade on a high stakes account? Great question. Honestly, whatever you're comfortable with. And the reason I say this, you should have a max, of course. I wouldn't risk any more than 2%, if I'm being honest. I have risked 3% live on stream as well, and it was a little bit brave. It was a negative risk to reward ratio. And I just thought, I'm going to put the sails up and throw caution to the wind. However, I don't recommend risking much more than 2%. Risk 2% if you've got confidence in your strategy and you've got a high win rate. Then yeah, go for it. If you've got a sort of medium win rate, maybe you're like sort of 60-ish% win rate, you're looking at 1 to 2s. I usually say risk about 1%. It depends on where your account balance is, depends where your confidence is as well, what size account you have. I think a happy medium is 0.5% to 1%, and that's what I risk. I risk 0.5% to 1%, depending on the day as well, depending on the strategy, depending on how the markets are looking and what the volume's looking like. So there's lots of different reasons why you fluctuate your risk. What you don't want to be doing is going from 0.2% risk to 3% risk. That shows zero risk management and risk control. So if you're fluctuating within 0.5% risk every trade, that's not so bad. The guys behind the scenes and the risk management team, they don't mind that too much, and your account will survive that. But if you've got a really low sort of risk to reward, or maybe you've got like a really low win rate, if you've got like a 30% win rate, you don't want to be risking 2%. Because you're going to hammer through into the drawdown and potentially blow the account pretty quickly. What you want to be doing is ask yourself, how do you trade? Ask yourself what your strategy is, and sort of think to yourself, right, okay, how many losses can I take in a row? Like what? And you usually see this in a lot of people that do back testing. You usually find that a lot of you can I don't want to say expose, because I don't like the word expose. It's not a nice word. It's almost like a negative word. But you can tell when someone does more forward testing, like myself. I do back testing to develop data, but I don't back test as much as I used to, because I've already got a strategy that I believe works. It's still profitable, so therefore I forward test, I don't back test. Whereas when I was developing my strategies, I will back test to gather a lot of data over a small period of time. Now, those people who have never back tested, you can usually tell. And especially those people who don't have a lot of experience in the market. So if you've been trading 1 or 2 years and you don't do a lot of back testing, usually you can tell, because they don't know what their sort of lose rate would be like. And we talk about win rate a lot. Whereas if we talk about lose rate, and if we start talking about how many losses you can take consistently in a row before you start thinking, my strategy's cooked, that's when you can start saying, right, okay, now I can start understanding how much I can risk. So if you know that your max losing trades in a row has been 10 trades in a row, then you cannot risk 1% per trade, because you're going to lose 10% quite easily, quite comfortably, and quite quickly as well. If you take in one trade every single day at 1% risk, and you're losing 10, you can lose up to 10 trades in 10 days. You're cooked. 2 trading weeks, and then you've lost your account. However, if you have 0.5%, you're only in 5% drawdown. So then, if you have 10, if you know your max loss is 10 trades in one, like back to back, you've not done any further than that, or you've not done any more losses in a row than that, then it's like, okay, well, so far 10 losses in a row is my max. So therefore, usually I'd start seeing some form of pull back, bounce back, some form of shift in my P&L structure when it comes to when it starts, getting into a bit of drawdown. That once you hit that 5% drawdown, you'll start clawing back up statistically, like data-driven analysis. That is, I'm not saying that's always the case. So yeah, like I said, the overall is 0.5% to 1%. That's what I'd recommend risking. However, best thing that you can do is ask yourself how you trade, ask how many losses that you can take, and sort of understand a little bit more about your strategy. Not only that, some people may not like seeing $1,000 in their account get hit stop loss. So some people it's a psychological reason, not just a technical. But the high stakes account, it's probably one of the easier accounts to trade. I love the high stakes, 5% daily, 10% overall. It's super simple when it comes to the drawdown rules as well. Thank you, sir. The skills I learned from you made me close the day with much profit. I really appreciate you, brother. That's so cool, man. I really appreciate those kind words. Big shout out to you, Dennis. You're absolute legend, my man. I hope that you're enjoying the trading as well. I hope that things are shifting your way as well. That's absolutely awesome. We got Adit Yak saying the screen is not clear view. Guys, can you let me know if my screen's not clear enough? I can always adjust if the screen isn't clear enough for you guys. What is your strategy? World King, great question. I have a couple. I'm running out of time now. I just see the handsome gentleman. Oh, he's just popped in. Hello. Never mind.
How you doing?
Hey. I was going to say, I'm going to speak to LJ now, and he's going to take over. I'm going to leave because my throat feels like I'm swallowing glass now. But, however, I'll be back in about 2 hours' time, World King. So ask me the exact same question in about 2 hours' time, my friend, and I will dive into some of the strategies that I trade live on stream. What's good,
Super
man?
duper. Morning, everyone. How we going?
Good morrow, sir. Oh, LJ's just gone. Oh, okay. I see we've got a gentleman in the background as well. Are you good? Awesome stuff. There we go. So I believe this is my first time meeting Trade with Jem. How you doing, Jem? What's good?
Hey man, how you doing? It's good to see
good,
you.
Man. Yeah, you too. This is my first time meeting you. Is it the first time you've been on stream?
I've been on here a couple of times actually, but
awesome.
I think first time meeting you, yeah.
Oh, sick. Awesome stuff. Tell us a little bit about yourself.
I think Pedro. Yeah. Well, where do I begin? I mean, yeah. So I have a YouTube channel called Trade with Jem. I'm a trader, full-time trader at the moment. Trade mainly like Forex pairs. So yeah, it's been pretty interesting lately. Very interesting.
Oh, awesome stuff. Dude, that's sick. So, how old are you, if you don't mind me asking?
I look very young, but I'm actually quite old. I'm 31.
Oh, no way. Fair. Okay. I was going to say you do look quite young. I thought maybe you were going to say that you're in your 20s or something.
Yeah, it's all the skincare products. You have to use all the right skincare products.
Yeah, dude, you need to send me those skincare. I'm 24. Most people think I'm in my 30s. That's awesome, man. So tell me, how long you been trading? What sort of sessions? What sort of how do you trade?
Yeah, so I lately actually took a trade recently on let me see, it was on Euro GBP. That one was an interesting one. But yeah, usually I trade most major currency pairs and then some indices and like gold and things. But yeah, at the moment it's been a bit strange, the market. Like, so I normally trade trends, and at the moment markets aren't really as trending as I would like them to be.
To be fair, I usually trade the majors, pound dollar, euro dollar, and usually they're like my flagships, and then I'll have gold as like almost like a backup, or almost like how you'll have like your Sunday car, and then you have an everyday car. Gold is usually my Sunday car at the moment.
Yeah.
Gold seems to be my flagship. Like it's just weird current price action lately, and it's trying to trade the majors, especially when Trump comes out. Obviously what's going on with the Strait of Hormuz. It's difficult times. How are you finding like Q1 and so far of Q2? Like how's that going?
Yeah, I think I've actually been struggling a little bit lately. I don't know about anyone else, but like yeah, it's just markets are quite choppy. There's a lot of big gaps over the weekend. Things are just yeah not as clean in terms of price action as I would like it to be. Even gold is very choppy at the moment, very rangy.
Yeah. Yeah, no, it's been a bit odd to be fair. Q1 I struggled a little bit, but I was living in Hong Kong in Q1, so trying to move to a complete different country and then obviously different time zone completely as well. So that was a little bit difficult. So Q1 was a bit of a mess around for me. It was so my P&L was down. I think I lost about 4% over Q1. So I'm clawing that back now ever so slowly. But yeah, Q1's it was a weird one. But Q2's starting off okay. April was a
Yeah.
bit slow. We were just under break even. I think I lost like 0.5% on the start of Q2, and then May's been flying.
Mm, yeah, that's how it is sometimes. Very up
Yeah,
and down sometimes.
yeah, exactly. Seeing some of the guys coming in. Hey, hi Jem, Justin, morning Will, morning Jem, good morning guys. How are we all doing? Pedro, good morning brother. How you doing, my
Morning,
man?
morning, morning. How are you guys doing? Jim, welcome back.
Hey Pedro, how you doing, man?
Good,
Justin,
man.
31 is young. 31 is young. Yeah, 31 is very young.
He's
MGM is
young, man.
ancient. Oh man. And you're younger, William. Cece, what are you on about? Good morning, Cece, by the way. Hello. My partner coming in just trolling me. Anyway, right, what's news, Pedro? Any setups coming?
Not yet. I was trying to see. Yesterday was a little bit of a pity. I was trying to see potential reversals on the dollar, but I wanted this liquidity to be taken at around these levels, and basically the drawing that I have in here. However, price never really done that, and it just skyrocketed to the upside. Then the opposite, the euro dropped, pound dropped, and so on. So I was actually looking to see if on the euro it would be this liquidity. So I wanted to see if these highs in here would be taken. And then potentially move to the downside. So basically, all these marks that I have in here, that's where I would like to see price moving towards to. Didn't happen. Same thing on the pound. Pound still managed to fake out slightly these stops in here, but I was looking even a little bit higher all the way to this top in here. Again, didn't happen. So basically, I was waiting for those liquidities to be taken, or for price to get to those levels. Never did, and it just dropped. Same thing on the Aussie. Aussie, I've been waiting to see if price takes this high on the all the way on the left side. So basically, this high in here all the way from 2022. Price is still respecting it a little bit. So basically, it's this white line that I have marked. So price is still not going there. It may drop from here. Who knows? At least in this case, there is a little bit of a price action, at least some liquidity already from these highs. So that's already something to work with. And maybe price can just arrange in between here. So maybe price can try to go take these lows or get close to these lows before trying to go higher. But my favorite short, it would be after taking that high, then maybe could have a little bit of a deeper move on the Aussie dollar, but nothing yet. So I've been just waiting a little bit. And in addition with this Aussie dollar pair, there's other Aussie pairs like the pound Aussie and the euro Aussie that I think may be getting closer as well to a potential interesting move. So we have been moving to the downside. This is the pound Aussie. Again, there's been something going on with the prime minister. Maybe they want to get rid of him. Not really sure what's going on in there.
No, really?
Uh,
I wonder.
yeah, I think there's maybe some movement trying to from his party, right? I think they're trying to
Yeah.
kind of to replace him. So that we had a little bit more liquidity or volatility. I mean, on the pound pairs, because as you can see, for example, pound Aussie made this spike down Euro Aussie didn't really manage to make that move, and they're quite correlated. But yes, so whenever we do potentially have this move to the downside on the Aussie dollar, at least that's the trade I'm looking for, we may have also a potential move to the upside on the pound Aussie and also Euro Aussie. But in this case, on the pound Aussie, I'm also looking for price to potentially take this low first, and then maybe try to find some buying pressure below that level. Same thing on the Euro Aussie. I think price could eventually get a little bit, or take this low, get a little bit maybe closer to that structure, and then you may have an interesting move. So the Aussie pairs, they are a little bit on my radar, but not yet to take the trades. And then, unfortunately, these Euro pairs, the dollar pairs, they missed my level of interest, and because of that, I'm just waiting and seeing. And then, if you just take into consideration the US indices, which they continue to be at really close to all-time highs, I'm waiting to start seeing some kind of weakness to eventually be able to start trying to short this move. Again, I'm a counter-trend trader, so that's maybe not the wisest thing to do at this point on the US indices, since they're just continuing to move to the upside. Today we have CPI, so maybe that's a little bit of negative news that can come into the market. We'll see. But I'm still being patient on US indices, so I'm not really active on the US indices at the moment until I see a proper move down that eventually can be tradable as a short. That's basically just really quickly what's on my radar for this week.
Awesome. I was looking at gold, but it just seems to be consolidating at the moment, so I'm not interested in too much now. So I'm just going to hop off now. I'm going to hop off, go potentially consider making myself some breakfast and down in some water, and I'll be on in about 2 hours' time, guys. So like I said, there was a lot of questions earlier on with some really good questions as well. I couldn't answer them. I didn't have enough time to answer them right now. However, if you stick around for a couple of hours, I'll be back in at 12 p.m. GMT +1, so 12 p.m. UK time, and then I will answer those questions. So, guys, for now, I'm going to leave you in the very capable hands of Jem and Pedro, and LJ may be back. He's having some. He's just had a power outage, so he may be back. He may not be. But in the meantime, I'm going to love you and leave you, and I shall see you in a bit. Peace.
See you, Will. Have a good one.
Thank you, Will. Perfect. All right. Jem, I don't know if you want to share your monitor so we then can take a look a little bit of what you are looking at the charts as well, because I'm curious. And you have an interesting question in here. So just, first of all, let's just quickly answer this one. At least for me, I don't use any bots. The only expert advisor that I use is the one to execute the trade. So basically that position size or something like that. I don't really use any bots. And then of course,
I don't really
copy trades. Do you use any bots?
Copy traders mainly. I mean, sometimes I have used copy traders before, just to, if I'm like trading on different accounts, because you can't take the same, like it's hard to enter trades on every single account manually. But other than that, I've tried EAs, like algorithmic trading, a while back, like maybe like 3 years ago, I think. I've tried EAs before, but I found that EAs, there are some that are pretty okay, but then majority of them I found not really that helpful. I don't know if you've found that the same, Pedro, but I feel like a lot of EAs, maybe they work for a couple months when the markets are having the right sort of structure or the right conditions, but then when markets change, I just find EAs find it very hard to actually adapt. It's not something that I would normally use. So now I just use like pure price action and technical analysis usually.
Yeah, in my case, AIs, I think maybe nowadays with AI, maybe many more people are trying to explore the AI's route. Maybe it's easier to code or to code complicated stuff. For me, I never really managed to dive too much into it, just because of my strategy and the discretionary part of my strategy. I never managed to put it into a code or kind of just an if then. There is this, I don't know if maybe it's part of my edge or the way I feel comfortable trading, which is discretionary. Either it's going to be the correlation between assets that then it will be difficult to draw it, or kind of the specific levels that I want to see being taken or not, and those confirmations, and that will be bringing way too much again, not certainty into a code, and I never really managed to create any, or to kind of put my strategy into a coding.
Yeah.
To be able to trade it out of AI. Maybe in the future. Maybe or maybe I just need to simplify my own approach. I don't know. But this discretionary side of it, which I feel it's a little bit of my edge as well. It's hard to put it into coding.
Yeah. I think it's really interesting because I know some traders that trade only with EAs only, and I can definitely see like benefits of it because it removes not 100% of the emotions involved, but I feel like it helps you to be a little bit more structured with your entries and things, because you kind of just load it onto the chart and it does its thing, whether you're like sleeping or you're out and about and things. You don't have to keep watching the charts. I guess you'll still have to see your P&L at the end of the day, which would be like you might get emotional about that as well. But I think it does help to remove a lot of the emotions when it comes to trading. And then the automated aspect of it is really nice as well, because if you're really busy with work and other things, you might not be able to be charting all the time or looking at the charts or have that free time. Sometimes when I'm trading, like I'm not there when there's a really good setup that occurs. So I'll be sleeping or I'll be away and out. So I miss a lot of trades sometimes. So I think it can definitely help. But then, it's just the con of creating your own EA, I find, is that, again, with that discretionary side, I just find it very hard to be able to automate that, especially if there's a certain way that you're analyzing the market or you're thinking, being able to put that into like code, it can be quite difficult to like translate that. And there might also be a bit of an edge as well with just your own analysis, like your discretion. Maybe that's part of your edge, that, the way that you see the market is different from how a EA or someone else might see the market. So I think there could be some sort of edge there as well. So I think there's pros and cons with different approaches. I don't think that EA trading or algorithmic trading doesn't work. I know there are traders that trade like that. I know traders that don't trade like that. They trade manually. So I think it's more of just finding what works best for your style and your situation. I think that's probably the best approach. But I think definitely, as you mentioned, Pedro, with AI and Claude and all these other tools now, maybe getting into the whole algorithmic trading space might be a lot easier because people don't have to know how to do like, Python and
it's true.
Yeah.
For anyone that, like, for example, I don't have coding background, so I never really, I wouldn't just spend time coding anything because I would struggle and it would take me a lot of time to be able to do so. But nowadays maybe you can just try to share your thought process and you can, the AI is going to do the coding for you. So maybe it's something that I need to spend some time with it, and maybe now it's even smarter or clever, the AI, and maybe it's going to be able to start understanding my thought process and my reading. That's something that I never really like thought of managing to do it. Again, putting my discretionary into a code. Now maybe now it's possible. But for me, like I'm the opinion that anything can work. Like just we have a comment in here from Ivonita saying, I trade with an AI that I built out of the way I would trade manually. So if you can do that, that's perfect. I wish I could do it. My part is that discretionary side of it, kind of that is looking at the market the way I do or the way I read the market. It's not as black and white. Could be a good thing, could be a bad thing as well. Because sometimes, yes, I may overthink a little bit, or I may end up missing trades just because something there was not something that I wanted to see, and I still does what it does. And I'm on the same page as you as well, where I do miss several trades. Either I'm sleeping, or they are happening during the Asian session, or something like that, or I'm not at the charts. It happens, but I already accepted that part. That part is trading. I accepted it on missing the trades. I don't get upset anymore. In the past I would, and now I don't anymore. But yes, for example, on the other side, something that I'm starting to try to do is to use all these tools, but to help me with my own analysis. either my research, either my thought process. So basically, what I usually try to the way my brain works, I'm trying to use AI a little bit to help me, either with the gathering information to try to see also kind of, okay, based on this and that that's going on, which assets maybe should be moving based on what we could see recently. And if that with that, I start building a thesis, and I'm using AI to help me to build up that thesis. But then I still need to look at the charts and try to find the opportunities myself. But at least in terms of the thesis behind, I'm starting to use a little bit of AI to help me navigate through it. And then I can create scenarios as well of if Trump says this, or if the data, the numbers that come out are this, like what would be the kind of the immediate reaction from specific assets. So I'm starting to do a little bit more of that, just to help me with the thought process. It's basically having a conversation with someone based on the way I look at the market, and the AI can do that.
I think that's the thing. We also had a couple other questions here from Moto.
That was the other one.
Yeah. Appreciate you, Moto. So your question was thoughts on how to trade when the markets aren't showing strong trends. I've been struggling with choppy markets, and I'm forcing trades. Yeah, I think that's a pretty relatable problem with every trader when the markets aren't really doing what they want it to be doing, and it's choppy and things. I found, for me personally, the thing that I found helpful is just to stay out of the market. That's just personally what I like to do. Like if I find that there is a pair that is choppy or it's rangy or it's not really clearly trending or not giving me the right price action, then I'll just skip it and I'll just go to the next pair. So for the way that I trade, I normally look at different Forex pairs and gold and commodities as well. So I'm not just limited to say Euro USD. So if let's say Euro USD is choppy, there might be other pairs that might be trending well and things. So I think having maybe a wider watch list might help. But generally for me personally, I just find to stay clear, because if I found with my trading, if I try to force trades during markets that are choppy or rangy, it just doesn't really do that well. I end up just taking trades that I shouldn't really be taking, and then at the end of the day, my P&L is just not that great. So I found it just to be more profitable to just stay out and avoid it.
Yeah, that's a great. You shared several things, right? Starting from the last one, which is being patient, and if you don't really feel connected with what the market is doing, sitting on your hands is also a way of being profitable, because at least you are not losing money, and then you don't need to recover that money that you lost in order to be back at break even. Another point is what you mentioned, having a watch list, like having more than maybe a couple of assets that usually people trade, which tends to be a tendency sometimes. Many traders actually, especially anyone that does a little bit more of day trading or active day trading, they may just pick 2, maximum 3 assets, maybe just look at gold and Nasdaq or Euro Gold or combination of the 3. And if all of a sudden those markets are a little bit different from what they want, they struggle. And they take a little bit of time to actually realize. First of all, they may take time to actually realize that the market is shifting, or at least is not behaving in a way that is beneficial for the strategy. And then when they realize it, they don't really know what to do, because again, they are just focused on maybe on that asset class that they trade, and of course they want to trade, so it's really hard for them to not be involved, and all of a sudden they start giving that money back. It depends also, of course, on the time frame kind of that the trader is trading. I think if it's more of a swing trader, then I think having a wider portfolio, wider range of watching list of assets, it's easier to navigate across different asset classes. I think if someone is literally just day trading, pure almost scalping, I don't really think he's going to even find any difficulty, depending on if the market is trending or not, because there is always some 10 points, 15 points move here and there that the trader can take advantage. Personally, for example, I do struggle a bit more when price is just trending. For example, and that's the other thing, like the ability to adjust, because if someone likes to look at training markets like gold was last year or something like that. Just looking at US indices in this last month and a half, Nasdaq grew 25%. Okay, since the end of March until now, it was kind of 25%. It's been in a clear bull trend, non-stop. Basically, every day is creating new all-time highs. So being able to adjust straight away and see where these opportunities are, it's really important. On the other side, if you are looking at FX or even gold, yes, we have been in this choppy market, in this range market since we started with this situation in the Middle East without really moving directionally to anywhere. We go up, all of a sudden there's a little bit of a good resolution. Gold, the dollar goes down, everything goes up. Then there is conflict, then dollar goes up, everything goes down. Like we've been in this choppy movement basically every 3 or 4 days. When Trump decides to tweet something, the market adjusts and it keeps on staying on this range. So in reality, this last month and a half, there have been opportunities for both traders, ranging markets and momentum traders. It's just being able to identify where those opportunities are. And that's part of being a trader basically. Yeah. So it depends. It can depend also again on the I think it's experience as well, because the ability to identify those shifts is really important.
Yeah. And sometimes even if the market conditions aren't right for your trading strategy and you end up just taking subpar trades or maybe not those A+ setups, you might end up just wasting your time, because then you've taken like 10 trades and you're just going back and forth, and at the end of the month you're just barely breaking even, or if not like in negative. So sometimes it's better to just stay out of the market and try to be busy somewhere else and not trade. Especially if the markets aren't giving you those A+ sort of setups. Yeah. So yeah, it's not just about making money, but I guess not losing money as well. It's yeah.
Yeah. So he's saying that he trades the 4-hour time frame. But again, now it depends. Like, are you a pure content trader? Sorry, a momentum trader. Which are you waiting for breakout structure to retest and move to the upside? Are you trying more of trying to buy from a support level and then try to sell from a resistance zone? It depends a little bit. Okay, I've not looked outside of FX pairs before, but perhaps time to take some. Yeah, exactly. So FX are the pairs that have been in a range. Like you look at the dollar in this last month and a half, and we have seen that the dollar barely has created any momentum. Like basically, dollar has been trading around here, and this is the beginning. Okay, we had this big move to downside, but since the 7th of April, price hasn't been really moving any direction whatsoever. Okay, yes, there has been some moves every now and then, but not follow throughs. Like basically, look at this one. So this is basically end of January until March. There's a little bit of a bigger momentum, and then price has been just stuck within this level. And you can look then at the rest of the dollar pairs, and it's quite similar. Maybe the only pair that has been maybe a bit more trending in terms of effects, it would have been the yen pairs, which is a unique kind of story, just because of the Bank of Japan and everything else. But if you just look at the majors, yeah, you are stuck. There's not really any direction at this point. But if you do then look at the Nasdaq exactly during the same period, look at that. Like maybe Nasdaq it would have been an asset class that would that your strategy would have been booming during all this period. It's like a 25% increase in 1 month and a half. That's madness in a pair like this. That actually this S&P, but Nasdaq is basically the same thing. So it's the ability to, especially on the 4-hour time frame, so you are trading a higher time frame. I think you can expand a little bit more your watch list because you wouldn't really take much longer to just analyze a few more assets on that time frame.
Yeah. Pedro, do you change your trading strategy as well depending on like the market conditions, or do you just stick to like reversals normally?
Yeah, I just stay with reversals. So I don't really, at this point. I'm not going to change anything. I'm just the ability to stay patient. And again, there are different asset classes, as we could see, like gold. I was not really trading gold last year. S&P and Nasdaq, I was active a little bit on the first quarter of the year. Since we started this rally, there was only one moment where I was interested in selling this pair, and it was 2 weeks ago. It was somewhere around here. and that was it. Since then, I haven't really either paid attention to Nasdaq, and I have the ability literally to kind of almost hide the charts and don't even look at them almost for a month, and then because then I go and pick and choose some other asset classes.
Yeah,
Like for example, dollar CAD. I know sometimes that I also don't really pay attention to it, like for a few weeks or even a couple of months, and all of a sudden, when price gets close to the structures that I'm interested in, I start paying attention. I may set up some alerts, or every now and then I come here, I take a look at them. Okay, from New Zealand, I haven't looked at New Zealand for a long time, but when price was around here or here, I remember that I was interested. But since all these drops, I haven't really paid attention to it, because there are some other things to pay attention. The NPRs, I've been completely addicted to it until there you go. Now I had this move. Now I have zero interest in trading whatsoever. What's going on in here, because this is not part of what I trade at this point. I don't trade this, and yeah, I did end up missing the move, unfortunately, on the euro yen specifically. That was the one that I tried to short. But yeah, now I'm not paying attention. Now I'm just waiting to see if price eventually comes back into the lows. And when it goes back there, then it starts being on my radar. So there's many things to look at, many different assets and asset classes to pay attention, and they are moving differently. Yeah. So yeah, Murdi saying, yeah, great to see the dollar index. I've not actually looked at that before. It really helps to put current market into perspective. Exactly. And sometimes it's just like that, because you start thinking that is your strategy. And that's one of the mistakes as well that some people may do. And I did that in the past. And then you start looking at other strategies. And that's when that cycle sometimes starts to happen. Like, so you start getting frustrated. You see that you have a few losses. The market is not really providing the opportunities that you are looking at. And as human beings, you start going online, you start seeing other people sharing positive trades or take profits and maybe some payouts, whatever. You start looking a little bit of what they are doing. And then consciously you start kind of stop focusing on what you usually do. You start paying attention to what the other guys are doing, and then kind of becomes this cycle that is not beneficial for you. So sometimes it's just about perspective, and when you do, then zoom out a little bit. And if you pay attention, especially that you are trading FX, if you just pay attention to the dollar index, this is one of the most important asset classes in terms of FX. You see, yeah, this is not exactly maybe what you trade. Or maybe there are opportunities in here, but you need to be a bit more specific. Maybe it can also be in terms of your expectation of the trade. Maybe the market is not available for you to trade maybe a 3-to-1. I don't know what type of risk reward you are looking for. Maybe just a 1.5 target that now price is doing or kind of providing to you. And maybe that's the opportunity that you can trade. So yeah, it's that ability to have perspective, to stay focused on what you are doing, and yeah, it's the market. You need to be able to navigate through whatever is in front of you.
Yeah, that's right. Do we have any other questions? Let's have a look.
I think we have this one from Big Beans for Forex. Is there a relationship between Nasdaq and gold? And if yes, is it inversely related? To be honest, I don't know at this point, and I think this is easy to find out. Okay, I think there is some websites that you could easily try to see the correlation, the exact percentage of correlation that the asset classes, two asset classes have. At this point, for example, we have seen the US indices going up. We have seen the gold a little bit going to the downside, but during last year, we saw both of them going up. I think it varies a little bit. I don't think it's kind of a black and white every single time. I think it's going to depend on the market conditions and what actually is maybe affecting the market in the specific moment. However, a good exercise for you to do, and this is even better than either Jem or myself replying to your question, I think, is you can just add both of them into your trading view, for example, add one on top of the other, and can start seeing the type of movements that both of them do at a specific time. And you can try to identify what kind of patterns they create, and maybe try to also identify what is the reason maybe when both of them were moving in the same direction, maybe when both of them are moving in the opposite direction. Maybe there was something going on in the market in a specific time that was creating that narrative. So yeah, but sometimes they're asking good questions, but actually it's even better if you do actually do the work to answer them. And that's an answer, and that's a question that you can easily, with a little bit of work, you can get your own answer.
Yeah. There is a correlation website thing. If you just search up like Forex correlation, usually the first couple results, there's some websites that you can use that actually plots it pretty nicely. I think it's actually, let me have a look. Oh, yeah, it's called mataf.net, mataf.net. And it pretty much just gives you a really nice heat map of all of the correlated pairs and things, so you can play around with that. But I'd also say, yeah, Pedro's 100% correct. I found that usually they are pretty weakly related, so they don't move in lockstep. They kind of do their own thing. But then, yeah, it also changes depending on the market conditions, and also whether you're looking at the daily or what time frame you're looking, because some pairs, they might be correlated on like the 1 hour chart or the 15-minute, and then when you go to the daily, they're not really that correlated as well. So they do sometimes, that happens too. But yeah, check out that like Forex correlation website on Mataf, because that's pretty cool. And it's live as well, so it's updated like on the regular.
Yeah.
Oh, good.
Yeah, he's appreciating the suggestion. Do you want to bring your charts just to maybe try to see a little bit of what your bias is in some asset classes?
Yeah. Apparently, I look like the guy from Marvel's Shang-Chi.
Yeah, he's our
I'm not sure. I'll take that as a compliment. Actually, I'll take that as a compliment.
Yeah, like he does share some comments that are quite funny in here on the live stream, which is good. Yeah, I'm good, man. I'm not holding anyone as a hostage. Okay, so everyone is free. I'm not doing any of that.
He actually is. I'm actually blinking very hard right now. He's trapped me in his basement.
Exactly. But yeah, so if you take a look at the chart, so today we have CPI, so most likely you're going to have some volatility in the market. What else are you looking? You can look at gold. You guys like to look at gold as well. Gold, I think gold is an interesting one. I could still see shorts going on within this top. We had a little bit of a rejection. We did manage to take that high overnight. I'm curious to see how price may react from this level. If anyone is looking for longs, maybe this could be a level to try to push price to the upside. I think if you do end up taking this low, I think there's a high probability that maybe you can try to go all the way to these 4,570s, a little bit more to the downside. So this for me is kind of an important level, either of supported or eventually can become resistance. But if price actually does decide to move a little bit more to the upside, respecting this direction, move higher, I'm still just a little bit curious to see how price may react from around this level. Otherwise, then we are looking into these 5,000s, and who knows, even higher. Okay, but at this point, I think a little bit similar to FX. If you do actually pay attention also on gold, we have been a little bit stuck within a range, quite similar to what we had on the dollar. It's a bit more of a trend up, down, but kind of in a slow motion, quite opposite to what we had in here since March to basically end of March, basically a big sell-off. So yes, maybe we need a little bit of a resolution of the situation in the Middle East to see gold actually breaking through and gaining momentum either to the upside or to the downside. And until we do have that resolution, maybe gold is going to continue to just range within this structure. So that's a little bit of what I'm looking at for today. If there was an opportunity to go long, it would be from here. And if there is an opportunity to go short, I'm not sure if I would look for shorts again from today's or from today's high, or if I would wait for price to go a little bit higher. It depends. Basically, one of two scenarios: either price respects this level and I'm not looking for shorts, or if price breaks below this level and starts retracing, then I think maybe we can look for shorts to squeeze the price to the downside. That would be my approach on gold.
Nice.
Yeah. Do you trade gold, Gemma, or is it?
Yeah. I used to trade gold quite a fair bit when it had that massive like bull run not too long ago. But then I think right now I find that gold's a bit rangy, sort of choppy. So I've stayed clear of it a little bit. Yeah, but hoping to see if it can actually break those levels that you mentioned, then hopefully like a new trend will form up or down.
Just give me a second. I'm going to try to bring your chart in here. I don't know exactly which one is it. Let me just try one thing. I don't know if it is this one. Is it this one? Yes, it is. Okay, perfect. So you can,
Cool.
you can share it.
Yeah. We did have a question. Big D guy. Okay, so GBP JPY, please do the analysis on the 4 hour. Okay, let's have a look. If I can find it. Where is it? Oh, there it is. Yeah.
I'm trying to remove wheel from the screen, but I cannot. It's not working on my side. Whatever.
Okay, all good. Okay, GBP JPY, I found that it's very ranging right now. So did you see this massive move here?
Yeah.
Do you know what that was? I think that was a news release or something. That was crazy.
That must have been must have been the Bank of Japan, most likely.
Yeah.
Kind of intervention.
Jesus. That's like what,
Yeah,
600
they've been
pips
interviewing. They've been active. They've been active recently.
Yeah, 600 pips in like 4 hours or something. Yeah, crazy. So GBP JPY is ranging right now. I'm on the 1 hour, but if you jump to the 4 hour, it's also sort of ranging on the 4 hour. So you have like levels of support down here. You have levels of resistance up here as well. So it's actually moving up and down between these key levels. But I think if you go to the daily, it's also sort of ranging as well. So if I zoom out, you'll notice on the daily, I think it was on a really strong uptrend for a while. So you can see that it was going all the way up on a pretty strong uptrend on the daily for a while. Usually after it trends like this, the market has to either pause for a little bit and breathe for a little bit. So sometimes it likes to range. So that I think that's sort of what you're seeing here. So it's on this massive move up, and then it couldn't continue up, so it needed to just chill out for a bit. And so it's ranging right now between levels of support there and also sort of levels of resistance up here. And so you can see it's kind of going up and down between these levels. Like down up here, then go back up, and then go back down. It's sort of range between these levels, so here, and then probably go back down. And then eventually it'll continue to range before it eventually breaks out, maybe on a news release or something else. And then once it breaks out, sometimes it'll retest, and then it'll go on a new trend down. Or it might break these highs and then start trending up again. So for me personally, I would probably, because I'm usually trade trends, I normally stay away from like ranging markets. But if I were to trade this, I'll probably jump into like the lower time frames and try to scalp a small part of that move. So if I know that it's sort of ranging between these levels, like up and down, then I might want to try to trade one of these moves. So I would jump down to maybe the 1 hour and trade it. But yeah, again, at the moment it's pretty rangy, so I personally would stay out of it. But yeah, if you do like trading ranges, this might be a good market for you to trade. You could take a buy at the level of support, or you could take a sell at the level of resistance. Yeah, it just depends on how you want to enter.
Yeah, that's well spotted. That range that pound yen is stuck at the moment. This for me is actually may start to be a little bit of a reversal pattern somehow, because we kind of managed to break slightly the lows, and now we already broke the highs as well. So there's kind of a collection of liquidity already both sides, and eventually price will move one or the other direction. So that's an interesting one. My question to be always just where is price reacting on the left side? We just took that high, kind of a similar high that I'm waiting on the Aussie dollar, and we got into this potential fair value gap. This is way back. This 2008 that you're looking at. But yes, the approach is definitely one to pay attention. Price opposite to the moves that we are having in here, but is a little bit more clear in terms of the moves to the upside. Anytime price starts to create new highs, it kind of finds resistance. Like it finds selling pressure, start breaking a little bit of this structure, even though prices respected this next level that was in there. Created all these tops. We took those highs. Price then had that big sell-off that you mentioned with intervention. Just filled completely the range. Okay, it was literally filling the range one side to the other, and now price is ranging. Something interesting on the 1 time frame is that anytime price slightly takes a high, you find some selling pressure. So basically, collecting the liquidity above this double top, sell off, collect the liquidity above this top as well, another sell-off, and there was maybe another news or Bank of Japan, something happening here this morning as well. So we'll see. We'll see if we're going to continue to go. I would like to see price coming a little bit closer to these 215s, so a little bit higher before kind of trying to squeeze back down again, either somewhere around here or even squeezing a little bit more into this direction. So either around this line or around this line. That would be my ideal. So I think price could still continue to go a little bit more to the upside, and that may align with eventually yen index getting a little bit closer to this structure as well. So if the yen index comes a little bit closer to this level, that will push this pound yen also a little bit closer to this top. Now, again, this morning or this week looks like there's something going on with in the UK with the Prime Minister. So we'll see what's going on. That's why we have a little bit of more volatility as well in some of these pound pairs today. But yeah, a higher time frame, I would like to see price going a little bit higher before moving to the downside.
Yo.
Yeah.
And Richard's here.
Rich.
How you doing, Richard?
Hello.
Hello. New background? Where are you? Is it a new studio?
No, it's my new office. I was painting. I was painting last week, so it's you can't see it right now, but this wall is gonna have some it's gonna have some paintings or whatnot up. So for the time being, front view.
Okay.
Nice.
I like it. Good work, man. Good job.
I've got some. I've got my Christmas hat up there. I've got some lighting. One or two. That's a. I don't know what you call it in English, but in Afrikaans it's a vetplant. So I'm not entirely sure. And then some. If my hand knows where to go, because that's a little Day of the Dead skull that I painted, and then we had it baked so that solidifies the paint. I've got my little jar of plectrums. I have a Rick and Morty little game there. I have a painting that my wife made, and another thing that my wife made, and some D&D dice. You can't really see it because it's so teeny tiny. And then another, another skull right there. I'm planning on adding a bunch of stuff at the back, so just haven't had the opportunity to get to everything.
That's nice. I like the lighting as well. I think the lighting is really nice.
It's just hanging there. This is not the final thing. There's going to be a bunch of. It's not done. Let's just put it like that. It's not done.
I just like it. I like the cover. I started putting pressure on me to do something with my behind the scenes as well to do something.
Yours is a bit white, mate. Like
Yeah.
get some color in your life. Get some
Exactly.
photos of you playing paddle.
Exactly. Oh, now that you mentioned paddle, there was a question here. Do you guys play chess? That's the question.
Chess, paddle, basically
You'll
the same
see.
sport.
You'll see the correlation. Jem, do you play chess?
No, I don't.
Okay. Rich?
I used to play chess when I was in school. I was a regional champion at chess, but I have not played in 20-something odd years. So does that count as playing chess? If it's past tense? I don't know. Not anymore.
Do you guys feel when you look at trading, do you look at it in the perspective of playing chess or not? Like the way you try to read the market? Is there any kind
Poker.
of information or not?
My combination is poker.
Poker? Okay.
Yeah.
In
And
terms
arm
of what?
wrestling.
In terms of okay.
Poker and arm wrestling. It's like you play a hand of poker and then you do an arm wrestle, and you play a hand of poker and then you arm wrestle. That's how I view the market.
Fair enough. What about you, Jim? That's a nice one.
Chess. I mean, probably not. I don't really know what I would compare it to. I mean, I used to game a lot back in the days. But yeah, and then not anymore though. But I know how to play chess, but I'm not very good.
I mean, isn't that everybody else? Like, oh yeah, I play chess, and then you go and see the Elo rating is like 7. It's like, okay, you're bad.
Yeah, that's right. That's right.
Yeah. 'Cause that's an interesting one. So you mentioned that you look at trading like as a poker game and then hand resting. Okay, fair enough. But sometimes I used to call myself. I mean, I used to say as well that I'm playing a little bit chess with the market because I do like to be kind of 2-3 steps ahead of the market. That's kind of the Quasimodo pattern helps me to do that. So for me, chess is about kind of being ahead of your opponent in terms of predicting their moves. That's why I sometimes used to call it like that. That I was playing a little bit chess with the market, trying to be again those 3 to 5 steps ahead. Okay, do you want to do this? I'm already predicting your next 5 moves, and I'm just waiting for them and try to capitalize as those moves are being made or as price is moving. That's why
It's having an answer. It's having an answer for every possible decision point that your opponent might have. And in this case, the opponent is the market. And you're trying to have multiple steps ahead of what the market can do. And if it does make something, you've already pre-planned this. So it's branching. It's that branching effect of decision making.
That's a little bit. I'm not kind of a grandmaster of having 10 steps ahead, but like I like to think that at least 3, maximum to 5. I like to be on that situation, and that's actually when I feel more comfortable, like to take trades and to be more aggressive as well. But now just pushing a little bit towards paddle. Paddle is exactly the same thing. Paddle is such a strategic game, opposite to tennis. Because tennis is a little bit of a game of strength. If you hit it hard, like the ball just passes through and you get the point. You cannot do that on paddle because the ball is just hitting the glass and comes back. So it's a game of moving the players aside. So it's kind of you don't win. You cannot win on your first shot. You kind of need to move your opponent 2-3 times with 3 different shots, moving right, left, whatever, until you actually then win it. If you try to win it too early, you are going to make the mistake. So that's the correlation strategic wise with chess and paddle, and that's why it's so addictive. It's just too addictive because there is addiction part of trying to learn the shots, and then there is addiction part of trying to beat your opponent because of their qualities, and then find a strategy that actually is going to beat them and through that movement of paddle and the anticipation of the move and where you need to be. And then the hard thing is you're not alone, so you need your partner also to do a little bit. And if the person next to you is not doing it, it just kind of there's a big imbalance and everything falls.
Have you ever played squash?
No, but I think it's maybe a bit similar as well. somehow.
So
Yeah.
squash is you also have doubles or teams, and you have solo, just you and another person. But you also have very particular rules. Hit it against the wall. It's also got a glass pane behind you, which you can use to hit off of. Also quite strategic, because you're also limited in how far forward and backwards you can move. And your reflexes need to be really quick. But it's a stamina game. It's who can outlast the other person. I can have you run around all day on a squash court. You're going to be left, right, forward, back the whole time. And it's just like whomever can have it the most effortless to fake your opponent out. Just looking like you're going to hit the ball very hard, and you just kind of like tap it, and it just bounces against the wall and then starts dropping immediately. Real fucked up shit that you can do with people doing that. Just have them run around all over the place. But yeah, that's the strategy.
I tried pickleball for the first time like a couple weeks ago. Have you guys tried that?
Pickleball is the one with the plastic ball that's got holes in it.
Yeah. It's like a mini version of tennis.
Yeah.
Okay, all right.
How
was
that's
it?
pretty fun. It's pretty fun. Yeah.
Jerry,
pretty
sorry, I
intense.
never asked, how old are you?
Again.
So it's funny because when I jumped on the stream like an hour ago, someone asked us. I know Pedro. No, was it? No, Davis asked the same question.
Okay.
Yeah. I'm 31.
Okay, so
That's not how he answered. He said, "I'm old. I'm 31." That's how he answered.
oh, okay.
It's just,
I'm a Pedro. You and I are grandparents by that. But what I wanted to reference is, if you're 31 years old and you're taking up a new sport, how did your body feel the next day or 2 days afterwards after playing some pickleball? Or was it just like a casual, oh, we're just gonna hit the ball a little bit, or did you like go ham with your hands?
Yeah, my body was feeling it the next day. Definitely.
That's how I felt after the first time playing tennis in ages.
Yeah.
Just realizing, wow, my ankles suck. They're so sore. What's going on here? Why is my back so sore?
Yeah, so for me, it was like the knees. It was giving me, even because I never really played any racket sports and I was playing on the beach. Even my wrist was hurting maybe a bit, kind of the way I'm holding the racket. I thought maybe I'm doing something wrong, even I'm putting way too much strength when I'm hitting it. The reality is that I was not resting my hand in between kind of games or points, whatever it may be correctly. But the knees were a little bit giving me, but like with time it goes. But actually there is a study, I don't know if you guys know, which sport is the one that helps you to have more longevity with your own life. Do you know the answer? Do you know which sport it is?
Swimming.
Jem?
Walking, if that's even a sport.
No. So it's both of them are good, but no, that's not even swimming, neither walking. It's actually tennis, but that was a study. But I think paddle is even more than tennis in this aspect. And the reason for that is because anything that you do individually could be kind of running or swimming. In that case, there is not the benefit of social interaction with other person, which helps also the brain. Okay, so in that case, you are doing something really important, but you are just with your own thoughts, and there is that missing piece of social interaction. While tennis, you also have interaction with another human being that is.
You have an opponent, yeah.
Competing. Yeah, you are competing, and actually, paddle it actually increases a little bit more. And you're talking about tennis is 9 years of longevity. I think swimming is maybe around 4 or something like that, or 3, or jogging is like 3 or 4.
Maybe it's because a lot of people drown while trying to swim.
Yeah, and I think it would be actually those racket sports. It would be kind of tennis. I think it would be badminton or something like that, like squash. I think that would be kind of the highest ones. And then it would be kind of football, also kind of tennis, kind of, swimming, and so on. But I think paddle is one of the like maybe even higher than tennis. And actually, if I start looking at my whoop, which I start playing paddle in November, and I start looking at my whoop, which kind of measures your kind of comparing your age with your kind of physical age, there's a big decline since I started to play paddle. Kind of my age at this point is 30 years old. What whoop is saying, like that's kind of the decline. And it before it was kind of around 33, so I'm now 37 since last month. So I was kind of 2-3 years or around 3 years younger than my actual age. And since I started playing paddle, it just starts decreasing even more. Now I'm kind of 30.
It's activity. I think you would be able to get that from most sports in general. Just physical activity, walking, jogging, having some sort of physical activity outside of just sitting down in front of a screen. Yo, Rich, what's up?
Rich.
Hey guys, how we doing?
Good, and you?
I'm good. I feel like I've just walked into a conversation about sport, and I'm going to get dragged into this, and I'm trying to find the similarities between trading and sport. I'm already lining up the topic
There are many.
today.
Worrying is
Absolutely.
also a sport.
Worrying, I love that.
Yeah.
Please carry on. Don't let me hold you up. I'm learning every day.
Well, it seems as though there's some people in chat that wants to bring religion into it as well.
Yeah.
You talk everything but trading.
And we are talking about trading as well. We do talk about trading every now and then.
Yeah, it's like it's analogies. You talk about something that reflects onto trading and how trading reflects onto it as well.
Yep.
You can't be a person sitting here all day on your backside just looking at the chart and not be physically active. You need physical activity. It's part of the trading journey as well. It's part of the longevity as well. So you have Rich here for the psychological side. You have Pedro here for the physical side. You have Jeremy here.
Yeah. And to be honest with you, now that we were just to bring between Pedro and trading again, it has been a long time since I started something new, and Pedro I started new kind of in November. It kind of reminded me a little bit of when I started about trading. Of course, now with a little bit more of experience, knowing that I will not kind of reach kind of professional level or kind of expertise in just a short period of time, but this obsession of kind of trying to understand everything, how to learn, how to understand there are people that are better than me and how to deal with that situation, how to learn new skills. Am I going to try to learn every single skill at once, or I'm going to focus on learning one skill at a time to then it kind of help me to with my rate of progress and to become better in a shorter period of time. Which you can definitely think about it in trading as well. Anyone that is starting right now, and it's a little bit lost because there's so much information, there's so many strategies, there's so many things to learn, so many different topics. How do you actually approach that situation? Kind of having this beginner mindset again, it was kind of interesting in these last 6 months because it was a complete new sport and that I didn't know basically anything about it. And many people are related to that with trading as well. And kind of what is your path? How can actually kind of navigate through this initial phase without feeling overwhelmed, without feeling that you have so much to do or so much to learn, consuming content, just try to get better. It has been a great experience. And I believe many of you also maybe are new into trading and can relate a little bit with that. And there you go, Richard. There's a little bit of a connection between both, between sports and trading.
You can connect pretty much anything to anything else if you find enough connection points.
Yeah.
So anyway, Pedro and Jeremy, I don't know if the two of you are sticking around or if you guys are going to be hopping out. Speak now or forever hold your peace.
I can go, to be honest, because I have a few things to do, a few things to prepare as well. Many projects that we are working behind the scenes for the 5ers, many things. So yeah, Jem, thank you very much. Rich as well. Richard, enjoy the session, guys. Thank you very much as well. I'll see you on Thursday, I think. Thank you.
Yes. Cheers, Pedro.
Catch you soon, mate.
I think I might leave that as my cue as well to hop off. But yeah, thanks for having me on. It was a blast, and you guys are all in very capable hands, and I will see you guys very soon.
Awesome. Thank you very much, Jeremy. You have yourself a lovely day, mate. We'll see you soon.
Bye-bye.
Catch you soon. Cheers. You know, that was funny because just before I joined the stream, I heard chat say something about Pedro was keeping Jeremy hostage, and I thought, you know what, we're about to dive into some subjects here, and I don't want to be the guy that keeps anyone on stream, so I'm glad you put that pause in there. Okay, I want to challenge ever so quickly. Do you know what, this is rude of me, respectfully. Richard, how are you, mate?
Do you want the short form or the long form answer?
I want the version that chat requests. So the first person in chat that says long or short, this is the answer that we're going to go for.
Okay.
And let chat dictate this, because I genuinely want to let this session be a little bit more chat involved and chat led. Because one of the key benefits of a performance coach is to help traders get unstuck. Most of the time, traders get stuck pretty much in their habits. So really, we can use this time, this session, as an opportunity to have a chat with chat and see what kind of things that we're looping on at the moment, see what kind of answers we can come up with. In the Discord session, I had a chance to hop in, I think it was late last week, and had an opportunity to chat with Akram and LJ. And we dived into some pretty thought-provoking stuff. Maybe we can bring some of that to this stream throughout this session. But I can see the chat is like long form, long. So, Richard, give us the long version. How are you, mate?
I am good. However, I'm a bit frustrated. The frustration has got nothing to do with trading. It's got everything to do with my physical comfort right now. I'm in the process of ordering a new chair. So I'm kind of stuck sitting on one of these like hard, I don't know, kitchen chair or whatever you want to call it, like just a wooden flat chair. So I have a pillow and it's a little bit annoying. So that's where my frustration is. Psychologically, I'm doing well. Physically, I'm doing well. Mentally, I'm doing well, just slightly frustrated. Trading, I'm a bit bored right now because the market is not really doing anything for me at this point in time. But other than that, I'm well. That's the long answer. How are you, Rich? How are you? We haven't spoken in a minute, mate. Oof.
It's been a minute. Hey, LJ.
Yo, LJ.
I'm back. Powering out. So sorry, guys.
Nah, you're good. You've hopped in just as Richard has given us the long version, which wasn't as long as I thought it was, with how he's doing. He said he's frustrated, not the kind of frustrated I thought he was going to go with, but he said he's a little bit of back pain sitting on a chair that's a bit rigid. And you've joined just at the moment when he said, how am I doing? So I'm going to take that frustration to the next level. So as a trader, I am incredibly frustrated at the moment. Markets are being difficult to interpret the price action, but my frustration doesn't come from that. Market can do what it wants. I don't care about how the market moves. What I care about is the clarity and conviction I have around my execution. And so for a little while, I've sized down my trading to a level where there's not really much upside. It's more just been to, like, imagine you're building in the gym and then you get to a point where you say, now I'm just going to sustain. My trading got to that kind of point where it's just sustaining, but I did it for long enough that sustaining became my new normal. And I really missed the opportunity to grow. I really missed the opportunity to hit that next level. And so a lot of my frustration in trading has now come from revisiting a lot of my best processes when I was pushing new highs. And I don't just mean new equity highs, but when I was sizing up and reaching new levels of risk. So this morning I spent a little bit of time setting up my trade copier, setting up the right kind of percentages in the background. But I'm getting very, very close to having my edge dialed in. So very short version of this is I've traded the same methodology in the market for about 6 years. I've taken a narrative, I've built an idea around how price will behave around this narrative. If you've ever studied any of what Victor shares to do with quasis, it's very, very similar stuff, but I would say I read it a little bit different, but that's what I've been trading for about 6 years. And it works, but typically what it leaves me doing is front-running levels. Now, front-running levels is where you put a limit order in the market and the market is running down to your level or pushing up to your level, and you're anticipating that price is going to hold and give you a setup around a price point. We know these to be zones, they could be head and shoulders, they could be order blocks, breaker blocks, quasis. There's lots of different names that we can give them. Now, I've traded this technique for 6 years, and in those 6 years, I've had these kind of dry periods that were just a bit longer than I was willing to accept as a trader. But I've also had some really good runs. So I decided several months ago to take on a brand new way of reading price action, completely and utterly different to me. Now, I've been studying this for about 3, maybe 4 months, and I was explaining to a friend of mine a little bit earlier on today that I've spent about 100 hours effectively learning how to revise a framework. And what I've come to the conclusion of is the framework in its current form isn't something that I can implement with a level of conviction. So I've spent effectively 100 hours practicing, but not executing. And so I find myself now, after a 3-month period of edge revision, not able to execute. Now, can you imagine what this feels like? You've just spent 100 hours over a period of several months, backtesting, recording data, trying to execute live, but realizing that there's just something about this edge that just doesn't quite connect with how you want to participate in the market. Now, this left me into a point of saying, okay, well, these 100 hours aren't wasted, because this is the journey of a trader. You can spend thousands of hours refining your craft, and you could still find yourself after 5 years that the market patches your edge, and you've effectively got to take your knowledge and go back and build another edge. So this morning I figured it out. I finally actually figured out exactly what it would take for me to build out a simple rules-based system to be able to execute on this edge. And sadly, it's several more hours of studying, refining and testing until I can actually start forward testing that into the market. So frustrated that the time windows I have are typically like 10 o'clock at night to about midnight, or from about 5 o'clock in the morning till 7 a.m. And it just leaves such small windows to be able to get the answers that I need. So every night I'm going to bed and I'm going, yeah, I should stay up a bit longer. I should get these answers. Once I've got these answers, I'll be able to execute on this edge. But the beauty of being a trader for 8 years is I realized that balance has to play a massive part in trading. And there was a comment earlier that you guys talk about a lot of stuff, but just not trading. But what I've learned in my own experience of trading is how connected everything else is to my own experience of being a trader. And in the first couple of years, all I did was trade. And I did a terrible job of it. Now, if you said, Rich, I want you to be the best trader you can, I look back to 3 years ago when I was at my peak, and what helped me be the best trader I could was actually balance. It was actually not overcomplicating everything. It was just focusing on one simple price movement in the market and just being organized and ready to frame it. And that gave me the funding accounts, the payouts, the consistency, the feedback loops, the spreadsheets. It was all super, super dialed in and easy as well. And I couldn't have had that if I sat down for 10 to 12 hours a day and just stared at the chart. And I also couldn't have had it if all I thought about was trading. So I've started to recognize these patterns a little bit later on in my trading journey, and realizing that if all I focus on is trading, the next loss is going to hurt. The next win is going to make me feel excited. And it's going to magnify my trading experience. Now, one of the things that makes me an incredibly good trader is to be able to trade my plan without the feeling of sadness when I lose, frustration when I lose, guilt when I miss a trade, or elation when I hit a winning trade. And I think this is a common trait that, and this would be a really good starting point. My belief is it's a common trait that if your emotional temperature is at a 7, 8, or 9 in terms of volume, you're typically going to react because it's easier to revenge trade than it is to calm yourself down, do a breathing exercise, do a bit of meditation. And so this is what I've experienced in my trading, is that the better I get at recognizing when my emotions are starting to spike, the easier it is for me to follow my plan. The more I follow my plan, typically the better result I get on a quarter by quarter basis. And finally, if I don't follow my plan, I'm then going to put myself into a position of feeling too much frustration and feeling too much FOMO. And if my emotions are at a 4 or 5 or a 6 each day, I can control that. That's easy. I can work with my emotions. But the moment they spike, I've got no chance. I've got the same chance as pretty much every trader who hasn't got the awareness of their next action. And the quickest way to lose your trading account is revenge trade with no stop loss. And sadly, this is what a lot of traders will do. They get caught up in that moment. We hear stories all the time of traders saying, I took 3 months to get funded, lost my funding account in 2 days. And unfortunately, this isn't a one-off. We will see traders that do take time to get funded. They work hard for it. They follow a process. And then when they get funded, the emotional temperature goes higher. Nothing's changed about the account. The execution's the same, spreads are the same, slippage are the same, commissions are the same, swaps are the same. Market typically moves in line with their edge, but the trader can't stomach a loss. and then they have to try and get back at the market. And I think one of the best traders I've seen is someone that can keep themselves emotionally neutral regardless of how well things are going in their lives or how well things are going within their strategy or within their charts. So keeping objectivity through drawdown is also a very physical skill, because traders think everything exists in your mind, and it is so much more than that. Your body enters a state of fight or flight, and it's so much easier to just start revenge trading and over trading and pushing the buy and sell button, because it's everything that we want to do when we're in that state. Like you try telling the dude who's just been cut off in traffic and has got out of his car and wants to massively road rage, you try telling that dude, just calm down, mate. That dude, everything in his body wants to interact with the situation. Like we've all been there where we've just absolutely lost our rag. And the whole point of it is, in that moment, you want to choose violence, you want to choose red, and we get stuck in this behavioral loop that just doesn't help us as traders. So becoming aware of that was something that massively shifted my trading, because the red days I had, and I'm talking about red days as a behavioral pattern, they weren't massive red days where I woke up and chose violence on my trading account. They were just normal days where a trade went to stop loss, and maybe my entry was just a tiny bit late, and it didn't add that much variance into the result I should have got. And so that's one of the main things that I'd recognized about traders. They never created feedback loops that showed them realistically how their edge was performing. And so what they did is turned up every day and they tried their hardest, but their hardest wasn't good enough because they had no structure to what it was they were trying to implement. And the moment we built that structure, which is all in the performance course that we created for the 5ers, but the moment that we build that structure into your trading, you can literally call out your worst trading habits and you can see the patterns on where they turn up. And then our job as traders is just to lean into that data and figure out what it is that we can do better. I saw that comment, you can't park there, mate. What was that in? Oh, okay, the road rage.
Yeah. Classic, dude.
I was trying to figure out
Classic.
where we were going with that. So, okay, would it surprise you, chat, if I said that 75% of retail traders do not wrap processes around their trading? So everything they're trying to do is completely and utterly mental. It exists solely in their minds. Now, we're also talking about at least 75% of those traders that cannot emotionally keep a tabs on things when things start snowballing. They'll take a loss, no problem. It's just part of, my strategy. They'll take 2 losses, they'll get emotional. They'll take 3 losses, the trading plan goes out the window, the trader's trying to find another edge, or they're revenge trading, trying to get their balance back. And so when we shift our attention from our P&L into how well we follow our plan, everything from our trading experience completely shifts, because what we're doing is we're taking something that's totally out of our control and we're putting it into our control. And it took years and years for me to learn that. But once I learned that, I understood what trading was. I understood the rules of the game. And the rules are so rarely taught, especially when you start looking at social media. The rules are so rarely taught in a way for a trader to understand the rules of the game. And this is something that I sat down with a trader of, I think, 16 or 17 years, and the trader said, I just wish someone explained to me what trading was. Like, it's not just clicking buy and sell on a chart. There are 5 key skills that we have to learn as traders, and I wish someone told them to me so that I could then start developing and working on those skills. Now, not only do you discover those skills later on in your trading career, but when you wrap a process around it that helps you conceptualize and record every aspect. People say, well, you can't record your psychology. You totally can. And you don't even have to do it through journal entries. People say, but how do you score your emotions? You can build systems around all of these things. We had a chat in the Discord more recently about it, and we were speaking about who marks their trades red or green based on P&L, or red and green based on behavioural. And what you notice is a lot of traders are still looking at the P&L for feedback that they're doing everything right. Literally, LJ could do everything right for the next 10 trades and just take 10 losses in a row. This is the crazy feedback about trading. If you're looking at your P&L for confluence that you're doing something correct, it only tells you a very, small piece of the story. When you pair the P&L with the behavioural, then you end up with just a more detailed picture of actually what are you doing over a bigger sample that's working. Like you literally could have a trader turn up, full port their account, get funded, get a payout. They've never traded before in their life, and they're now more successful than the majority of traders. But how do we have any evidence that what they've done is sustainable or repeatable, or they could build a career off it? So if you're parking your emotions in that track record of a sample size of 1, then it leaves a lot of guesswork. And what we want to do as traders is build evidence. We spoke about this more recently, building a track record that you as an investor would be willing to back yourself as a trader. And then go down the whole blueprint of take the profits from prop, do whatever you want with them, invest them, put them in your personal account, stuff like that. One sec, I see, I'll come into that in a sec. See, we've got a comment here. Richard's such a calming voice to listen. I could listen to him every time on the
He's got on a little like playback, like just headphones in. It's just Rich speaking.
So I did think about doing this. We had a little bit of feedback around this, and I have an emotional playbook, and I've shared it in the Discord. I talk about it in the course as well. Now, an emotional playbook is like your normal playbook, where instead of having your technical setups, now you have that voice of reason. When do you need that voice, and what do you need that voice to tell you? And I appreciate the comment, Anna. It was something that I first had to write down in my little document called Emotional Playbook, and I identified the top, I think it was like 6 things that I really sucked at as a trader. And I don't like using negative self-talk, but I want to build a bigger connection with this. When I say I sucked at it, I really sucked at it. It was ruining my trading experience and ruining my trading results. One of the big ones would be closing trades early. Another one would be I'd overtrade. I would use my experience and say I can find a trade pretty much anywhere. So what I would do is I would write down, okay, when I feel like overtrading, what is the voice I need to hear in that moment that's going to stop me from overtrading? Because so many times we just trade in our own thoughts. In that moment, we have to make a decision under pressure. And I needed to build a process around making a decision that would keep me in line with my plan. And I've shared this with chat before in the Discord, what one of my emotional playbooks were. I didn't share the whole thing because I feel it's important for traders to write their own playbooks. But I did think about doing like audio recordings, and I was like, no, because it's an emotional playbook is a personal thing. Like what LJ needs to hear in that moment to stop him from revenge trading is going to be very, very different to what I hear in that moment. I remember speaking to Will about this, and he really responds well to that drill sergeant shouting at him and telling him, you know, like, get back on your trading processes, you maggot, and you need to do this, and you're not good enough. Like, he really responds well to that. For me, that just triggers me. That literally just flares up my emotions, and I'm like, this dude's having a bad day. Like, my brain shuts down, and I don't take any information in when it comes to listening to other people. Like, when they start getting aggressive and agitated, that's my default. I remember speaking to a trader and a friend of mine ages ago, and he said my default when someone presses me, he said I will push towards that and I will kind of press back. For me, I sidestep. I don't want to get involved in anything like that.
You switch off.
Yeah, that's just I don't even choose to. My brain just goes, I'm not even going to communicate with this. What about yourself when you're looking for sort of like motivation? If you had a voice of reason in your ear, would it be calm and quiet and very thought-provoking, or would it be someone that's literally just shouting at you, telling you how to behave?
Yeah, it'd be more calm, I guess, in general. But I would say on a net basis, I would respond more to similar to Will, but not quite in that same way. Just more, at least personally, yeah, it'd just be full of cuss words, just absolutely ripping myself to shreds, right? You know. But I would say typically, like, as far as myself when I do it, you know, like I've got that old acronym, right, that we've talked about before, NERD, right? So simple as that, very clean, very simple. It expresses everything it needs to and nothing more. and I just got to focus on that. So it's just very streamlined, not getting all too like complicated or overthinking or trying to overanalyze or go, oh, what if this or what if that, or maybe if just whatever, or I'm not doing whatever, or maybe I'm doing too much of this, or yada yada. It's just very simple. Next exact right decision, and then that sort of makes you forcibly focus on that small slither, and just everything else melt away, right? And then you just go. So yeah, very very plain simple. So I guess you'd call that, calm, I suppose, but it's like thoughtful, I guess. Yeah.
Yeah, in the course, we talk about creating a pause. So a trader has a big emotional flare-up, and they feel the emotions. So this is the first step of a trader who wants to try and work with their emotions. First of all, you've got to recognize them. And it's a very physical feeling. When you get angry, you can feel it in your body. When you're sad, you can feel it in your body. When you're anxious as well, when that trade moves towards your stop loss, you can feel that in your body. So we teach the trader to just practice recognizing these emotions and talk it out loud. Now, when you get good at recognizing it, which doesn't take you a day, it takes quite a while for a trader to actually start to recognize the signs. And then we teach a trader to say, hey, I'm tilting right now. I can feel it in my body. My legs tapping up and down. My breathing's shallow. My palms are getting sweaty. I've got pressure or tension in the back of my head or my jaw. Now, once a trader recognizes this, we teach the trader to pause. Now, when the trader pauses just for 5 seconds, they have chance for their logical mind to catch up to the emotion. So we've got to understand that our chimp brain, our emotional side of our mind, is going to always turn up to the party first. And trading is always going to invite the chimp brain to turn up first. So if we understand the rules of the game, that when you take a trade, typically our emotions, they're going to turn up before our logical mind. So we teach traders to have a pause. And in that pause, invite your logical mind into the conversation. Now, the LJ has this built into his process because he feels the emotion. He knows when he needs to ask the question. And then he just asks a very simple question, and it invites his logical mind to turn up and remind him of the action that's going to help him achieve his result over a bigger time. And his is NERD, N-E-R-D. What is the next exact right decision? And that pause gives him a chance to ask his logical brain a question. Now, the logical brain is the one that manages risk. The logical brain is the one that creates a trading plan, spots your analysis, executes on your analysis. Now, the logical brain is the side of us that we want to make trading decisions from. So LJ simplified this whole process into a 4-letter word, next exact right decision. And it literally causes his brain to wake up and go, right, what do I need to do right now? And not act emotionally. So I love just how simplified the system is. That system works incredibly well for you, and I implement that myself, but it wouldn't work for everyone. So the trader's still got to learn what emotions are they feeling, and then how would they like to build a process that helps them deal with them emotions in a way that is beneficial to their long-term success. And unfortunately, I think a lot of us overlook the importance of developing that skill, and it is a skill, and you can wrap it up and call it emotional intelligence. But it is a skill. And as traders, we can learn it. And when you do, it massively helps your ability to revenge trade or pause before acting outside of your plan. And this is kind of the blueprint that if you want to build trading into a sustainable career and you're going to manually execute, then you've got to understand that emotions are going to be paired up with market movement. Like, most of us are going to feel something when a trade pushes down towards TP. Most of us are going to feel something when we get a late entry. Most of us are going to feel something when the trade wicks us out and then runs to target. And it's about recognizing what are you going to choose to do next when the market does that. But it's not just like when you backtest, the market just does it to you in 1 second. But in real time, you're sitting in this stress position for sometimes hours. And it's that constant feedback loop of emotions. Maybe I should close this trade. You know what? I'm in profit. I think I'm just going to close this trade. Or I'm close to my stop loss. Let me extend my stop loss. Or let me add another position to this losing trade. And these are all the behaviors of traders which are going to keep, these are all the behaviors of traders which give a random feedback of what works, because it moves your P&L outside of your plan. So when a trader ever comes to me and says, hey, Rich, can you help me with my trading journey? 90% of it is behavioral, because the trader is never able to evidence this is the result I should have got if I stuck to my plan. And the trader thinks it's a strategy problem, but it's either how they feel about their strategy or their inability to recognize their emotions and choose to do the right thing in line with their plan. And so when we realize that 90% of trading problems are behavioral, we can then start putting our attention there. But it's like that, what was it, like 75 or 70% of drivers feel they're above average.
Above
And
average, yeah.
It's the same with traders, that so many traders I speak to feel that the problem in their strategy is not behavioral. They feel it's strategy based. And that means that a trader is always going to be working on something that's actually not the problem. So LJ, you got a wonderful BMW. Imagine you think your problem is your tire pressures aren't right, but your engine's seized up. Like, imagine there's no oil in your engine, but you're like telling yourself every day, no, it's my tire pressures. I need to pump up my tire pressures. And every day you come out, you keep working on your tire pressures, and one day they're 32, the next day they're 31.5, and you're trying to find the perfect tire pressure, but you're taking your car down the road and it's still knocking its arse off. And it's simply because, and this is one of the wonderful things I spoke to a trader about in this interview, the blind spots. Often traders don't know what they need to fix within their trading. And once you get a really good visibility on the different skills you need to develop as a trader and in what order you need to develop them, you actually give yourself a proper chance of playing in this game long term, because you understand the rules. You understand the emotions that are going to come up. You understand what it's like to have to choose the hardest path, which is the moment the market wicks you out and then goes in your direction. And you have to physically step away and say, you know what, it's not part of my plan. And one of the best ways that I've found to help me with this is surround the behavior by data. So for an example, I went and looked at over 100 of my losses within my trading strategy a few years ago. And I went and remarked every single one on a chart. And I said, of every trade that wicked me out and then started to move in my direction, what if I found another way to get in? And I was able to prove over a big sample size that behavior still didn't make money. And so I was able to fill in this gap of, what if I just jump back in, knowing that there was no edge there. And so over time, I wanted to prove and wrap my behavior around data, and everything that I do in the market is backed by, I know by making this decision, it gives me a higher edge than choosing against it. And so my job as a trader, once I understood that, was simply just to execute where I knew there was edge, and then measure how well I executed on that edge. And if there was any gap, it's always going to be psychology or time management. Those are typically the two ones that would catch me out. I'd hold a review process and I would mitigate the areas where I was underperforming as a trader. Sounds like a lot of work? It is. It's thousands of hours work. But when you understand the right process, you can streamline this. And there's two aspects of trading. Typically, the physical work, which is developing your edge, and then the emotional work, developing and understanding your emotions. Now, the emotional side, I would say, takes longer than the physical side. But the cool thing is, you can't do either of them 24 hours a day. So if you woke up every day and just put in like an hour of quality work on your technicals and an hour of quality work on the right emotional feedback loops and drills and patterns, you'd be making massive leaps as a trader just in a matter of weeks. But a lot of traders, they're not doing that work because they don't understand what the right process is. So this is why we built the 5ers performance coaching course, just to give you an idea of processes. And then your job, like LJ, is to make your own versions of stuff that just fits you. And LJ had all this stuff long before I even knew him. But that's the importance of it. And this is what underpins his ability to execute on his plan And his ability to execute on his plan is why he makes his P&L. It's not because he's lucky. It's not because he places random trades. He has a process. He has an analysis. He follows it. And he has put in place things that make it difficult for him to act outside of it. Because LJ is not invincible to acting outside of his plan. And he knows when he does, typically his expectancy is either going to be lower than what it would be or it will just go negative. So LJ hasn't got a superpower that allows him to do something that the rest of us doesn't. He's just very well practiced and he's learnt the rules of the game. And then he become incredibly good at playing the game within the right rules that helps him cross the finish line. I'm off on a bit of a rant, but I feel passionate about informing traders about the right kind of work that actually helps them move the needle and moves forward. I'm going to catch up with chat. LJ, what's your thoughts on it?
I definitely agree. So it's just like the nerd thing. I think as well with that, like it fits me very clearly, right? Because typically when I have something go on, I always want to go immediately to that logical, like problem solving thing. So it frustrates me if someone's trying to be consoling, that kind of stuff. I'm like, get out of here. I don't care. I just want to solve it, right? Let's get to work. So I think the nerd thing definitely keeps that in, and then it goes, okay, I need to lock down, focus on that stuff and just run it through, right? So in terms of everything else you're saying, that's also why I like it, that it does sort of force you to go into that mode of stripping everything apart and really finding what the component is that's not working or missing, or you might have overlooked something, or maybe you need to flip the whole script and start again from scratch. So similar to, like you're saying, like if you're trying to work on one part of the car, but it's the engine that's got a leak, or, it's got a misfire or something, but you're focusing over here, it forces you to go, okay, what are all the components of the car? What do they do? What are their function? And then systematically kind of bang through each one, find out where the problem is, fix it, and then keep going. So that's where it definitely aligns with myself. So I agree. I think people finding sort of what aligns with you, how you best go through that state. Now, a lot of people often aren't very good at that. Hence, a lot of people get upset, angry. They respond to things. They're in traffic or something and they blow up, or they're getting fast food and it takes like 2.5 minutes longer, and they start getting mad. It's like, I always say to people when I'm with friends, like, and they start getting angry about stuff like that, or you're waiting in line a little bit longer, I'm like, you got somewhere to be? Like, what are you talking about? It's going to take a little longer. Then you're going to walk over there, and then you're going to eat and stand there for some arbitrary amount of time. It literally makes no sense, but you've just gotten all flared up about this thing for no reason. And I always say to them as well, like, use it as a moment to actually practice patience, because you see everyone else in line and stuff getting all mad and rustled, and you can actually sit there cool as a cucumber and just ride through it. Back in the day, there's a really busy Hungry Jack's. It's kind of like Burger King in the city. And it's right in the center. It gets flooded with people, and hence they often have a bunch of lines. And I used to go there frequently after the gym just to get a little like ice cream or something as a bit of carbs after to refuel, and then walk home. And it'd always be busy, and I'd sit there just totally chill, and things reward you for that, because after a while going there, the staff would always notice that everyone's complaining and making all this racket. I'd just always be there smiling, be like, oh, hi, whatever. And then they end up giving me the staff discount just permanently. So every time I'd rock up, and then they'd throw in other stuff. I'm like, oh, cool. So I think practicing that patience and nailing that stuff down, definitely not just in trading, but for your whole life. Like, don't just practice it in trading, practice it in other places, and then it will naturally flow into trading as well. And you'll see it permeate through your whole life, whether it's with friends, family, partners, any kind of other conversations or other work that you do in the workplace. If you can be cool like that, everything will flow better, be more lubricated. Then hence that always reflects back to your trading, just like you were saying. Your emotions, your physical sort of feeling, if that's out of sync, out of line, your trading's going to suffer. And that always comes from other stuff, not just trading as well in people's day.
Yeah, and that ties into what you practice becomes your permanence, right?
Yeah.
So if you think, well, I'm going to sit down, I'm going to be disciplined. If you're not disciplined in any other area of your life, you're trying to achieve a unnatural behavior for yourself whilst you've got the pressure and the tension from charts as well. So it's something that once you understand the rules, you can then choose, am I happy with my results? And for me, I lost money for 2 years as a trader. I don't mind saying it. And the reason I say it, and I've had people make fun and go, I can't believe you lost money for 2 years. Well, I went break even for a third year, still supported myself externally. So effectively, I lost money for 3 years. And the reason I say this, and it's not as a brag, I say it to inform traders and be like, look, I didn't understand the rules for 3 years. It was only in the third year I started to understand what trading was actually about. Hey, MGen, I see people should join the Discord sessions with Rich more often. They're absolutely gold. I appreciate the feedback, but more to the point, if you join the Discord session, you also get to realise that my voice is not AI generated, big D guy 666. I saw that comment a little bit earlier on. But yeah, there's been some interesting exchanges in chat. So I see quickly, can we explain the 0.5% rule?
Yeah.
Okay, think of this.
Yeah.
Do you want to have a bash at it?
Yeah, either or. Yeah, so the 0.5% rule, if we're talking about the high stakes, basically what that is to meet the minimum days requirement, you have to make at least 0.5% profit. Closed trades, not floating equity, that kind of thing, has to be closed balance and no drawdown in equity at time of rollover. So at least 0.5% profit, closed out trades, no drawdown in equity below that 0.5% measure at time of rollover. Now, the 0.5% is 0.5% of whatever the starting balance of the account was, right? So say if it's 10K, then you'll have $50, right? $50. And it will be $50 each time. So even if you've gone up and made another 5%, right, and you're at 10,500, it'll still be $50, even though 5% of your 10,500 would be slightly different. So that's basically what it is. And you just got to do that 3 times to meet the minimum requirements before you hit any kind of scale up or next level of the evaluation. There you go.
Typically, that would be encouraged so that traders aren't focused on this. If I turn up and risk 5% and hit a 1 to 2 trade, I can pass phase 1 and get funded in a day. We got to start thinking longevity as a trader, and longevity as a trader is where we have more information to understand what's the skill set of said trader. How does said trader manage risk? If we only ever saw one trade and it was a profitable trade, that tells you nothing about how that trader conducts themselves when they're in drawdown. So this is something that we've got to be mindful of as a trader, and everything that I've done as a trader has always been focused on the long-term growth. As what if I follow my trading plan for 100 trades? Do I make money? And if I didn't, then I got to understand it was just an edge problem as opposed to a psychology problem. I can see that in chat it says that rule is bad. So give us a little bit of feedback on it then. What would be, why is that rule bad? Is it because you can't pass in a single day? Because if traders pass accounts in a single day, what do you think happens when they get live? Think about it long term. What happens to a trader who gets live funded in a day, and then what? Is the trader just going to send their account and bust it? I mean, there's going to be a lot of unsustainable behaviors for traders that just turn up and pass in a day. And we always encourage traders to start thinking about longer term. Now, traders will say, how long does it take you to pass a challenge account? One of my accounts, I think, took me 6 months. Another one took me 4 months. I think the fastest I've probably ever passed a challenge account was, I want to say, between 4 and 6 weeks. So the idea of passing in a day, it still shows no consistency for the trader. It still shows that the trader can't manage risk. And most traders are not going to pass in a single day, not with sustainable risk management. And I would actually argue that anyone who can pass within a day, that's going to be a outlier if you're using good risk management. So for an example, LJ, if you traded 1% risk, you might have a really good day. And you say, wow, I've done 8R today and I've passed my account. But only you know if 1% risk can sustain a 10R drawdown. And we've got to think about when you take a payout, you have a 10R drawdown. So it's not trailing drawdown, but you have this fixed 10%. Every time you pass a challenge, you have 10% to work with. Every time you take a payout, you have 10% to work with. Now, a trader using 1% risk is going to struggle not to get on the wrong side of their maximum account loss, because most traders are below 50% win rate because they go for high risk to reward, which is typically how a trader is going to pass in a single day. They're probably going to have a 30% win rate. They're going to hit a 1 to 10 trade. But a 30% win rate at 1% risk, that trader doesn't have any business being on that account long term. The maths, like we're now just talking about math. And so when you say, hey, I want to pass in a day, that to me sounds like a trader that says, hey, I just want to literally just send my prop firm account, get funded and take payouts.
I think there's like a misunderstanding. So it's not 5%, it's 0.5, right? So half a percent, right? You don't need to make 5% on a single trade at all. Typically that would be seen as that would probably get flagged to a degree, unless you've had a really good trade. But if you're trying to make 5% on every trade or something, that's probably going to be, you'd have to be risking massively, right? Unless maybe you're swing trading and you've held it over multiple days or something like that. But yeah, no, it is not 5, it is 0.5. 0.5. If you go and read on the dashboard or go through the rules, terms and conditions for the high stakes account, you'll see it's 0.5. So hence, like I was saying, if you got a 10K account, that would be $50, right? 50, not 500, 50. So 0.5.
Yeah, or 5% of the drawdown, depends how you're calculating it. But it is as listed.
Oh, yeah, okay. If it's 5% of the total risk capital available, yeah.
Yeah, and I get why you say it would be a bad rule, because if it was 5% of your account balance, there I can tell you now, there would be no way of me ever getting funded without doing something that I knew was unsustainable, because I would have to risk so much. I would have to be risking 2.5%, and even on a good day where I made 2R, I would still only hit the minimum criteria. So it's definitely 0.5%, and it's based on many positions. So if you start the day and your balance ends the day closed out at 0.5% or more in profit, that counts as one profitable day. So you could make that over 5 trades, you could make it over a single trade, but it just means that the account balance has to move up 0.5% in profit for that day. And if you can do that, then you put yourself on the right side of that rule. And that's typically just to see that the traders can act within a process and they can follow their plan, and they give at least 3 days of runners against it. I see we've got a comment here.
Minus,
says, guys, oh, sorry.
Minus commission as well, right? So you could do it in 5 trades of $10 each, but then minus commission. So whatever lot sizes you're trading, you got to minus the commission for that. So you got to make up for that difference.
Yeah. So net 0.5%. I see we get a comment from AM Markets that says, guys, my biggest hurdle is letting winners run and cutting losses short. So one process I built for this that fixed this overnight was I created a spreadsheet that recorded all the trades I took. So I had the time, the entry price, the asset, the direction, my stop loss size. And then what I did is I put the strategy result and my result. So I would wait for an analysis to set up, and I would say, okay, this is a trade that's in line with my plan. Typically, I was trading with limit orders, so I knew where I needed to enter. I knew where my stop loss needed to be, and I had the same problem. I would close my trades early. And it got to a point where it felt like if I just could allow my trades to go to TP, I would make so much more money. But I didn't trust my system. So what I needed to do is build evidence and prove that my system actually produced the profit I thought it did. Because it felt like it did, but I'd never know because I kept closing early. So if I looked at my P&L statement, it was like plus $50, plus $20, plus $15, minus $100. And so the wins were only just paying for the losses, and then there was a tiny bit of profit left over. But what it should have been is plus $100, plus $100, minus $100. So I should have been able to hold my trades, but I just found that I was getting too nervous. So I created a spreadsheet, and in one column it said strategies results, and I would record the mechanical result of if I held that trade to TP. On the right of it, I created my actual results. And what that done is gave me a perfect feedback loop of how many trades would have gone to target, but how many trades I closed early. Then in the column on the right of that, if there was a disconnect in the P&L, I marked it as red. So if I took a trade that's valid and it went to stop loss, and I had no problems holding trades to stop loss, my problem was holding trades to winners. So I created this simple process, and every trade that there was a disconnect between the profit and my profit, I would mark as red, and then I'd write the reason for it. That would be where I did my weekly review. Now, after doing this for no more than 3 weeks, I was very clearly able to see my strategy actually made money. And not made money, I could see how much. So we're going to talk in our multiples now. So let's say I risk $100 to make $100. This would be 1-to-1. Now, if my strategy made $500 in a week, it made 5 multiples of what I'm going to risk. So I'm risking $100, it made $500 because at 1-to-1, I just had more winning trades than losing trades. Now we call this a 5R week, meaning I made 5 multiples of what I wanted to risk. So I would get to the end of this 3-week period, and my strategy had made 11R, 11 multiples of what I risked. So if I risked 1% a trade, I would be up 11%. Then I looked at the column next to me, and it was sickening. I had made 2.1%. So I had followed my strategy and got in every time I was meant to get in. I was holding every trade to my full stop loss, but I was cutting my trades early, my winning trades early. And this allowed me to see if I just mechanically went for 1-to-1 risk reward, wow, I would have made 11% in 3 weeks. And that day I was able to see just how much I was hurting my strategy. And we call these things a process, but when you create a feedback loop and a process that shows you that you are the weak link within your strategy, you know how to fix it. And so I would look at my comments on every raid trade and it would say, closed early because of fear. Closed early because I wanted a profitable day. Like I had to be honest about these comments. And at the end of the week, I would look at these comments and say, cool, I got 6 red trades this week. Okay, what do they have in common? Most of them were closed because of fear. And then the real work cuts in. Rich, what are you really afraid of? Are you afraid of the money? Like if you risk $100 and it goes to stop loss, are you afraid that the money's too big? And very quickly I was like, no. I was like, okay, let's do some shadow work. Why do you feel it's okay to sabotage your journey? And immediately I was flaring up. No, it's not okay. And I was like, okay, so why do you do it? I was like, you do it because you're afraid. But what are you afraid of? And I really sort of gently walked myself through this thought process until I actually found out what I was afraid of. And consciously, I had no idea of this, but I was closing my trades early because I had fear that every time I took a loss, I would move further away from my goal of being a funded trader and getting payouts. And so every time the trade would go into profit, that fear would come up because it was a byproduct of the trigger that sat within me, a bad belief system. Every loss makes me further away from being a profitable trader. I'm never going to be a profitable trader in this industry if I can't reframe that trigger. So I reworked the belief system. And I said, right, every good loss in line with your plan takes you closer to being a funded trader because it gives you evidence whether your edge works or whether it doesn't. And what I found is when I reworked that belief system, took a lot of inner work to do it, as the trades would move into profit, my fear volume used to be a 8, 9 or 10, and I would close trades because I wanted to feel comfortable. But what happened is because I done the deep work of addressing it at its root, the volume, the fear used to be 2 or 3. And I found it very easy to stick to my trading plan because I wanted the trade to go to my stop loss or my TP. I prided myself on these 2 columns I put in my spreadsheet. I'm going to get exactly the same result in both columns. I'm going to see a week of green, 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 green. Seeing that my strategy made 11% in 3 weeks and I made 2%, it showed me very clearly what I needed to fix. So I was understanding the rules of the game. When you trade the markets and the movements go against you or for you, it creates emotions. If you can work with those emotions and understand them, you put yourself in the strongest position to allow yourself to receive the same result as your strategy. And if your strategy sucks for 6 months, you just have a strategy problem. You don't have a you problem. And this is where I would say that 80 to 90% of retail traders never break out that mold where they can clearly say, I have a strategy problem or I have a me problem. And if you build this process, which is in the course, you will be able to clearly see whether your edge works or whether there's some psychology updates, which I call them psychology updates, but basically some mental frameworks that you got to build to help yourself become the trader you want to be. That's typically the blind spots that hold most traders back. Are you having a look at the NAS?
Yeah, I was just going to say, so a couple of questions to run through, but I guess first of all, this one to round out what you're saying. Where can you find this information?
Okay, if you go on the 5ers website and you go under Learn to Trade, you'll see there's a section that says Performance Coach Course. Now, you'll get access to Module 1 of that course, which is the intro video plus 3 other videos. A little bit over 30 minutes of content. That's going to walk you through strategy, risk management, and trading plans. So it gives you the base outline to start to figure out, okay, if I had to create a simple, repeatable process, how would I do it? How would I measure it? Now, if you register as a 5ers trader, which all you need to do is sign up with your email address, it doesn't cost you anything, you then get access to your trading hub. Now, inside that hub, you click on Academy, you click on Performance Coaching, and there you will see the full course. So all you have to do is register as a 5ers trader, and you will see Modules 1, Modules 2, Modules 3. So Module 1, we already spoke about. Modules 2 is all about that psychology work, understanding your emotions. How do you work with them? And then Module 3 is actually about how to build those processes that we spoke about just now. So how to create feedback from your data, how to backtest and refine your edge, how to avoid curve fitting, how to get accountability, how to create processes that keep you identifying very clearly what you need to do as a trader that actually moves you forward to your next level. So all in all, it's about 2.5 hours worth of content. If you were to work through it, because every video has a call to action and a homework assignment, if you were to do the work through it, you could be on that for 6 months. Like genuinely to do the work and to go through it and use it as your studying platform. It's because, as we said earlier, to do the physical work is much, much quicker than doing the mental work. And as LJ said, you can sit there and practice in a restaurant until they give you free chicken. You can practice this psychology work wherever you are that helps you refine and develop these skill sets. So it's all just about noticing the emotion. What are you feeling? Why are you feeling it? And then choosing to respond in a way that's actually going to help the version of you tomorrow, which is really all we're practicing in trading. But it works everywhere in life, or so much more outside of life. But yeah, that should round up that.
Indeed. And also, as far as how to trade, like sort of styles, that kind of stuff, obviously just tap into the stream right here every single day, as well as in the Discord. We do a bunch of workshops. We've got a bunch of different traders, all with slightly different styles, different approaches, trading from various times from 15, 16 years up to just sort of newer traders, 3-ish, 5, all the way in between, right? So huge range of styles, approaches, experience. We look at different pockets of the market and that kind of thing. So you guys can definitely pull bits and pieces and see what aligns with you, what sort of makes sense, and hopefully configure your own little construction there. So some of the other,
just touch on this?
Sorry. Yeah, go for it. Yeah.
Can I quickly just touch on this just before you build into that next point? So we've got a comment here from Anna that says, my biggest issue is to close my trades too early. But on the other hand, it is difficult not to have those trust issues nowadays when one tweet can ruin perfect analysis. You ever played
Very
you ever
true.
played Monopoly? And you've been playing Monopoly and you're playing your game and everything feels calm, collected. You've done everything that you should. You're upgrading the houses at the right time. You know, you're passing go, you're collecting your $200. And then all of a sudden, someone just comes along and just swipes the entire board and knocks all the pieces off. That's what it feels like sometimes in these markets where we get these kind of tweets that just come out and ruin like the analysis. And I get it. I get it. It is the only peace of mind I have when this happens, and trust me, it happens to me, is that I played the best game I could right until that moment where someone come along and just wipe the board. And sometimes the market will wick up, it'll wick down, it'll just clear all the pieces. But the only peace of mind I can have is that I'm sure these tweets won't last longer than my ability to just try and play the perfect game. So maybe I can only play 6 good games out of 10, where 6 good analyses out of 10 have chance to play through. And then the 4 out of 10 that don't, what I'm hoping is on 2 of them I get lucky and the other 2 I get unlucky. So what I'm hoping is if I can consistently do the same thing day in, day out, when luck meets skill over a big sample, and this is sadly why I can't risk too much per trade because I need a big sample and I need to sustain it. But when luck meets skill, and I'm pretty sure you'll connect to that one, that you'll still be in the game many, many years later. But yeah, short-term turbulence, 100%. I just want to use the Monopoly analogy. Anyway, LJ, sorry, you were building into something.
No, that's right. Yeah, I was just going to run through a couple of the other questions I saw come up. So first of all, as far as NASDAQ, this is basically what I'm looking at. We've kind of broken down from this high little mountain range that we had up here. We've been very heady on the NAS for quite some time. We've got a bunch of the speeches and stuff coming up Thursday, Friday. Trump meeting Xi. We've got the handover with Jerome Powell as well. Bits and pieces of US data coming out. We've got CPI tonight. CPI tonight probably won't be that impactful. It's going to be pretty by the by. No surprise to everyone. CPI is going to be higher because of the fuel costs and everything. Everyone's filled up their car recently and can see that. So we've now got a bit of a transition into the war, potentially calming down or at least the Strait opening to some degree, and then have a back discussion of the other particulars. So the CPI data today probably won't be a big deal. I'd probably be looking more towards retail sales later in the week. So for now, it seems as though we've been pretty fully priced. We're generally wandering off on NASDAQ and S&P. Yeah, that was that. That's basically what I'm looking at for NAS. The other questions. So rules around trading news. So basically 2 minutes before news on the high stakes, 2 minutes after. You can't go in and open trades, open orders, adjust, move things around in that 2 minute window, right? Now, if you've got an existing trade from prior and it gets hit from news and you hit TP or you hit stop loss, but you opened it before that 2 minute window, right? Then you're completely fine. But adding anything within there, no good. You can, however, close out a trade within that 2 minute window, either before or after, if you're doing it manually, right? But no new orders, no new entries during that period. So as far as this one, can you please help me with my phase 2 account login details? Kapoonzi, I would say go to the Discord. You'll find the support in there and just go through support. Ask them to sort it out if you don't have your login for some reason or it hasn't updated or something like that. We can't do that from our end on the stream, sorry. But yeah, if you hit up support, they'll sort it out pretty quick for you. Is there anything else? Okay, Doreen, have not understood the 0.5% rule, please. I want to buy a challenge. Okay, so to finalize, you are then saying down here, this 0.5, is it made in one position or several? So like we were saying before, it can be several. You don't have to do it in one trade. You could have 5 trades, right? All it means is your P&L, your profit, has to be 0.5% above where you started the day. It doesn't matter how many trades you make to do it. You could lose a number of trades, then make the profit back up. So long as the P&L at the end of the day at rollover is 0.5% higher, no matter how many number of trades or whatever you take, that will count as a profitable day.
To be fair,
Hopefully
I used to think it was one, like per one trade. I used to think, oh my god, I got it right. I got to make 0.5% now in this trade.
Yeah.
Yeah.
Did I say 2 minutes or 10? 2 minutes. So say the news is on like half past the hour at the 30-minute mark. It's 2 minutes before and 2 minutes after. So that'll mean at the 28-minute and the 32-minute mark in that 4-minute window. So 2 minutes either side. Therefore,
Just
4
play out the
minutes.
markets for like 5-10 minutes there,
Yeah.
like around it. You know, it's probably the safest thing to do.
It's basically just to stop people trying to enter some kind of entry right before news and just punch the account to all the way to profit, or it goes all the way to death, right? So it's to stop gambling off of news candles. So
yeah, it was like back in the days of the NFP. Do you remember? Like you'd slam full margin on the NFP and just see what happens.
Yeah. LJ, do you have actual position in real account in that long or short mark you have in the chat? Yes. So I'm short euro dollar right now. I did have this Aussie dollar trade earlier. And then we had the budget for Australia about an hour and a half ago. So hence we've risen a bit higher on the back of that. That's why Aussie's performing slightly off center to the euro and the pound. And then I do also have this dollar yen swing trade from up here. Set in at about, 157.55 that we were talking about with Dirk yesterday on stream. So we've now come up to that area that we mapped out, and so entered that in today. So that one I'll be holding for a while. It's a swing trade, targeting all the way down towards 154.25 to see if we get intervention falling back in. Is the rule applied after passing the challenge? Yes. So you will still have the rule after passing the challenge for once you're funded, in order to scale up to the next tier, right? So it stays consistent the whole way through the high stakes challenge once you're funded.
Yeah, but that's not to make profits. So if a trader makes 0.1% a day, and that's what they make for a series of days, the trader can still withdraw their profits. But if you want the account to scale up after you've hit the 10% target, so they are two different things. It won't stop you from taking your profits when you're live, but you need 3 profitable days of above 0.5% to actually scale. And then you can make it from one position. So if you see the position that LJ's got, if he traded 0.1% risk, that's probably a 5-hour trade that he's got listed on the screen. That would be enough to hit one of the 0.5% profitable days. So yeah, just only affects if you want to scale up. And I would say most traders who are trading, say, a level of sustainable risk, maybe 0.25, to have a 2-hour day where you made multiples of that shouldn't be too. It's on the cards for most traders anyway. I'm going to have to fly, but before I do, I want to acknowledge Will. How you doing, mate? I haven't seen or spoke to you for absolutely
I nearly sent you. I know. I nearly sent you a message the other day. I just ended up being so busy, but I'll send you a voice note tonight.
Yeah, love it. All right, mate. Appreciate it. Quickly, I'm going to fly off. LJ, cheers for keeping us company on this one. Will, I reckon this is an absolute banger for you to touch on. What do you reckon to that? How long does it take to create a strategy that is profitable? I've been trying to create one for 2 months with 0 success. Chat, you are in the best possible hands for this. Will has an abundance of market experience. Needless to say, LJ does as well. So I'll leave you guys with that to kick off, and I'll catch you soon. Cheers, guys.
Beautiful.
See you later, Rich.
Cheers, Rich. Do you want to bring up your screen, Will? Because I got to go to a meeting in like 5 minutes, so I got to.
Yeah, sweet. Yeah, no problem. Yeah, of course. Yeah, no worries, man.
Yeah.
Let's get a screen shit up and down. Ouch.
Welcome, Griff, as well. You can jump on whenever, man.
Griff, indeed. And
How we doing?
Hello,
Listen,
good to see you. Good to see you guys. Well, you're funny saying dim problem.
yeah, fair. Like I said, I speak really basic Wenglish, like really, 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 really basic Wenglish. I just try and keep what I do know alive, you know. But I've forgotten everything, you know. My grandparents were fluent, my dad was semi-fluent, and then
I
it's
got to
just
jump
like,
out. Sorry, Will.
yeah, no,
Peace,
that's
guys.
fine.
See you. Sorry.
No worries, LJ. Yeah, see you later, bro. You know, it's just my language has died out of me, you know, and it's just that's all I speak is English now, and I probably know more Cantonese than I do Welsh now, and it's embarrassing, man. It's
That's
not
good. It's funny. I go to my dad. I'm like out with my dad, and we're in like, I don't know, we're in like Cornwall or like Scotland or something, and he says like "Diolch yn fawr, dim problem," and I'm like, Dad, they obviously
can't
have
be
no
saying that,
idea
yeah.
what that means. They just think you're a crazy person.
Yeah, no, to be fair. And, I'm speaking to the missus, you know, and like I'll say to her, like, oh, Beth, I'm still now. And she's like, what? And I was like, all right, what's time? Because like my dad will speak, like my dad will say, my dad will ask me the time in Welsh or something. And like I said, you know, he speaks a bit of Welsh. And so like we speak super, super, super basic Wenglish to each other because my brother has no interest in the Welsh language. My mum has no interest in Welsh language. I try, but I have no one to speak to. And my dad tries not to forget, sort of thing. So, like, out of habit, I'll say it to my partner. And, like, Cantonese is almost impossible to learn. It's so difficult. And she'll go to me, what a stupid language. And I was like, really? Are we going to go there? Are we going to go there? Like, I've heard, like, you speak Cantonese, and it is, like, at least Welsh sounds like words, whereas Cantonese just sounds like you're saying sounds. So yeah, it's good fun, man. It is good fun.
Yeah, it's great. I like that you do that.
Yeah, you gotta wind it up because she'll test me every now and then in Cantonese, or she'll shout at me in Cantonese or something. So I'll just return the favor in my native tongue. It's just a shame I'm not fluent. I find it's always been a regret of mine. You know, I probably should spend more time and effort trying to learn it.
No, it's fair enough. It's not easy. But yeah, what do you think about DK, EK, EM, SM, SMS, and NSN's question?
Absolutely, what an awesome question to start off our segment as well. You know, let's have a read through again. So, how long does it take to create a strategy that is profitable? So, you know, keyword profitable strategy. I've been trying to create one for 2 months with no success. This is a really interesting one, Griff. I'm looking forward to getting your opinion on this as well, because me and you have very different styles of trading. Now, for me, let's assume you're completely basic. Let's assume DK, you know absolutely nothing about trading, and you know you've just started learning, and you've learned about strategies and what to do. You're trying to create something from nothing, and what that is basic trial and error. And this part sucks, especially if you've not heard of backtesting. So DK, word of the day for you, my friend, backtesting. If you heard of it, let me know. If not, you know, like I said, I don't know where you are in your journey. Trying to trial and error with a strategy is difficult. Very, very difficult because it can take a long time. Now, it took me probably about a year, give or take, to develop a strategy worthy of backtesting. And like that probably triggers a lot of people, because most people will probably think, oh, you should backtest the strategy straight away. For me, I didn't want to do that. I don't like backtesting. I love forward testing and testing it in the live markets, seeing how I emotionally handle this particular strategy. So it took me probably about 8 to 12 months just trying to understand the basic mechanics of what I was putting into this strategy, whether it's fair value gaps, order flow, candlestick characteristics, moving averages. Doesn't matter what you're at, fair value gaps, order blocks, Quasimodos. Doesn't matter what you're putting in. You need to know the basic mechanics of that. What does that truly mean, and how can you actually look for it? Because if you don't know what you're looking for, then how are you supposed to look for it? You know, if I said, go out into the garden and look for something you've never heard of, how are you supposed to find it? You know, if I say go get me a Phillips screwdriver, and then you go ask someone called Philip for a screwdriver, you know, you don't know what a Phillips screw. Ooh, drop my ring light. You don't know what a Phillips screwdriver. Oh my God, stay up. You don't know what a Phillips screwdriver is. So how can you go into the market knowing that you need a 3-wick rejection to the downside before buying, or you need an engulfing candle when you don't actually know what an engulfing candle is? You know what a candle is, so therefore you know what you're looking for, but you don't know what the pattern looks like. So therefore, before you develop a strategy, understand what it is actually in your strategy, and then just start trial and erroring. Start trial and erroring on the chart. See have a look at what you're seeing. Try and find what works for you, because what a lot of people do, I find, is they force something that maybe they don't agree or don't align with. I'm not going to say don't agree with. Try and find something that aligns with you, and this is why I'm glad that Griff is in this session with me, because this is perfect example of two people trading completely different. I can probably trade like Griff, and Griff can almost definitely trade like me. However, he doesn't align with it. It's not how he works. Griff is busy during the day, so Griff likes his swing trading or likes his sort of, intraday 1 hour time frame trading. I like to be in, out, shake it all about, off I go. I like to go out and have lunch with my family and with my partner a lot. So I want to be in and out as quick as possible. And if I'm not in and out as quick as possible, I want to make sure that I'm building as much confidence on the sort of intraday and on the higher time frame as possible. So, that aligns with me. I can scalp the markets, whereas Griff potentially, he probably could scalp it, but the whole idea behind scalping probably just doesn't feel right internally. So when it comes to like developing a strategy, make sure it feels right internally. What's your day look like? Are you super busy? Do you have meetings during a certain time? Are you busy within certain hours? Have you got an addictive personality? If you've got an addictive personality, stay away from the 5 minute, the 1 minute time frame. Are you the sort of person that thinks I'm comfortable being in drawdown for a while, or I'm comfortable holding for a while? I don't feel FOMO, so therefore maybe I want to have a longer term, or maybe I can only get to the computer or the markets once every other day. So therefore maybe you start looking at the 1 hour, 4 hour time frame. You got to understand what aligns with you first. Once you've done that, then you can start thinking, right, okay, well, I know that I can test this concept, or I know that I can add these sorts of patterns and these sorts of indicators into my sort of into my charts. Then you can start back testing. Then you can be like, right, okay, I know that I spend 3 hours a day on the charts, and that is 9 a.m. till 12 noon. So now that you've got your 3 hour period, you can start back testing and seeing what the patterns of the charts look like during that 3 hour period. And if you're seeing that the markets are trending, or if you're seeing that you're getting breakouts, or let's say, for example, because the gold's right in front of me right now. So let's say, for example, your 3 hour window is here and here. Yeah, so you don't mind not being at the markets while in the trade, but you want to be, you don't want to be pending. You don't want to, you don't want to look at the markets and set pendings. You want to be in, out manually, or you want to be in manually rather. So you start looking, okay, there's trend, and then there's consolidation. What happens after the consolidation? That's where the back testing comes in. You don't have to wait then. You can see, okay, breakout, consolidation, breakout. Now you can start seeing that there's patterns forming. So you're like, okay, well, do I know of anything that can help me identify patterns? Well, okay, I know about consolidation ranges. Okay, what's a consolidation range? A consolidation range is where the price just stands still for a bit. What's a breakout? Okay, a breakout is when it breaks and closes in a certain direction out of a consolidation range. Perfect. Is there a way that I can use a breakout strategy? And then you start testing breakout strategies. But then what you've done, you've built a portfolio strategy. You've built up a strategy. Maybe you've got a 50-50 win rate at a 1 to 2. You're still profitable. Still, that's some good statistics. However, you want to see if you can refine it. You've just heard of break and retest. Now you've heard of a moving average. So now you've got a moving average. You're below the moving average. You've got a consolidation. You've got the breakout, and you've got a retest. Now, instead of having, 10 trades a week, you've now got 4 trades a week, except those trades are hitting a 1 to 3 with a 60% win rate. And that's how you start developing and start refining your strategy. Now, over the course of 2 months, my friend, that is not enough. Even if 2 months' time you're able to backtest 10 years, that's some holy sort of backtesting. That's some quick backtesting. But let's say you can do some supersonic flash backtesting, and you can get 2 years worth of data of 2 months. That's still not enough. Okay, yeah, you've got enough backtesting now. Now you need to start forward testing it. Now you need to start understanding how your psychology works when you're in the live markets. Once you've done that with forward testing, open up a small demo account. Get the demo account going. That's when you start putting in real orders. They may not mean anything, but they are real orders. You're actually making an effort and a conscious effort to open a trade. Once you've done that, open up a small account. You're building the small account because now you've got skin in the game. Now your psychology is starting to talk to you. Now you're starting to think, oh, okay, I got $100 in this. I don't want to lose this $100. You start doubting yourself. That's when you start building confidence and you start being able to reassure yourself that all those years of back testing data and maybe 12 months of forward testing data, you're profitable, you've got a 60% win rate with a 1 to 3. So boom, there's your confidence. You start live trading it. Then you go into a prop account, and before you know it, that's where you've got your confidence, and that's where your strategy comes from. So I hope that wasn't too long-winded, and I hope that didn't put you off, because you got to think about it this way. You're trying to create a career here. You're not trying to get quick money. And I think that's what a lot of people fail in the trading industry, is understanding that if I told you you could work for 3 hours a day and earn 10K a month, which is hypothetically, because it's possible. If I could tell you 10K a month for 3 hours work a day, you would say, I would do anything for that. Okay. Would you backtest for 2 years? Would you forward test for a year? Would you live trade for 6 months on a small account, then on a prop account, before then actually going into an account worth doing something with? Before you know it, there's 3 years, 3 years of wasted time. I bunny-eared at the wrong time. 3 years of what most people would call a waste of time, when in all fairness, after that waste of time, after those 3 years have passed, before you know it, you're on 10K a month and working 3 hours a day. So it's all about understanding why you're doing it. If you're doing it to get a Lamborghini tomorrow, I don't know what to say to you. Yeah, but if you're doing it to be more like, myself, like Griff, and like everyone else in the 5ers who do this for a career and do this for a living and support their family on doing stuff like this and have all their bills relying on the success of your trading, then, it's not necessarily the speed that you need to be worrying about. It's the consistency. So when you start, and that's why we talk about process over profit. Once you start talking about the process, the profit follows. And like I say this all the time, it's probably boring. Perhaps I should actually learn it in German. Maybe I'll have a word with Dirk. There's a German saying that if you chase a butterfly, it'll run away, or if you try and catch a butterfly, it'll fly away. But if you build a garden, then the butterflies will come. And I probably butchered that saying, but it's a beautiful saying, and it means a lot. And it is literally the case of you focus on process over profit, and the profit will come. You chase the profit, and the profit will run. So I hope that helped. How long does it take to build a successful strategy? My definitive answer, it's difficult because it can vary. However, for me, I'd say 12 months to 2 years back testing, that can be done within 6 months period, I suppose. Maybe a little bit less if you're efficient with it. I hate back testing, so I take my time. 12 months of forward testing on the just placing it up on the markets. 6 months on a small personal account and 6 months on a small prop account. And then you can, once you've got that, that's going to give you 4 years worth of data in both live markets, psychological markets. It's just going to give you all sorts of variety of data. That's going to give you enough to have the confidence in your strategy. And if you can prove to be profitable in all that with all that data, you're not going to have a problem in the markets.
That's great advice, Will. Loads of great tips. I hope people will clip that, or go back to that portion of the video, because those 5 minutes will be really helpful for anybody getting started.
Yeah,
And
and guys, I do apologize if that sounded like I was draining on a bit, but
no, I think every single thing you said was needed to be said, because I'm basically going to be reiterating what you're saying now. I think
because I was gonna say I'd love to see what you say, because that's coming from someone that's very intraday, and sometimes I can even almost call myself a scalper. Not quite, but I'm very intraday.
yeah.
Whereas you're very much, very, very, very patient trader. I'd love to see what you think when it comes to building a strategy.
Yeah, building a strategy from scratch is difficult, because I didn't build my own strategy. I found a strategy that I liked and I built on top of that. And I think that's a good way of doing it if you're unsure. I think you definitely need to spend a lot of time in the early days kind of seeing what's out there, seeing what's available, rather than kind of starting from scratch. Because the worst thing you could do is, because it's such a long process, like you described, to reach that level of really high consistency, you don't want to be having to change strategies every 6 months when it stops working, or you decide that you don't like it anymore. So I would really say allocate a good amount of time, like weeks or maybe a few months, to exploring a lot of different strategies, back testing them, seeing which you like the most, and then you really just need to choose one and stick with it no matter what, which is a position that I'm in. I did that exact thing, and then I found one strategy I liked, and I've stuck with it for like 5 years now, just trading the one strategy. But obviously, since I first found it, it's changed a lot since then, because over the 5 years I've made it my own and I've developed it. I found refinements just through backtesting and live testing. So yeah, that's the first thing I would say to do. Don't create your own strategy from scratch. Find another strategy. I feel like every strategy has been created. So find a strategy you like and then build on that. Don't reinvent the wheel type thing, because most strategies work. It's just the trader that stops them from working, and that's where the issues actually come from a lot of the time. And then I'd say backtest, like Will described. Do a first run, make a basic trade plan. Do a second run, make a more refined, finalized trade plan. Read psychology books throughout this process. Just when you're not backtesting, read psychology books, and then jump into demo trading. See how you handle psychology there. Go with a small live account, go with a small prop account, go with a bigger prop account, and then hopefully you'll be in a position where you're able to trade that strategy confidently, and over that, throughout that duration, you've hopefully been able to make it evolve into something that resonates with you. So we're on the same page in many ways, and I can see DK has asked a couple more questions. He's been exploring, instead of manually trading, he says every time I touch it manually I blow my account. That's why I'm trying to turn it automatic, but it still sucks. So okay. I'd say when it comes to trading with EAs and trading automatically, I did the opposite approach. I started off with EAs, funnily enough, and then I was like, screw this, and I then moved into manually trading, because I found that EAs will work maybe 60% of the time, and then the other 40% of the time, when we have completely different market conditions, it just stops working. So it's really it's all over the place, and I decided, rather than having this EA which executes mechanically the same way every time, no matter what the market condition is, which means you have periods of winning and periods of losing, I decided I'm going to learn how to trade manually so that I can determine what the market condition is, and that I kind of introduced a bit more discretion with my entries, because that way I could be like, oh, the market condition's favorable, I'll enter, or it's unfavorable, I won't enter. And when you build that skill of being able to kind of identify what market phase you're in, or what the market conditions are, then you're able to trade consistently through all types of market conditions, any year, any month, Whereas in EA, you can't just turn it on and leave it, because it tends to have bad periods. I personally would say, until AI gets a bit better, I think manually trading is still the way to go. make the decisions yourself. And then DK also said, before I pass over back to Will to get his opinion, he said, how do you guys backtest and forward test properly? Which tools do you use? Personally, I just use TradingView, bar replay, the cheapest subscription. I'm just going bar replay, bar by bar. And then I'm journaling the trades in Notion, where I can track all of this, put all the pictures in, like screenshots of the trades, the stats of the trades, and I can compare them all, filter them out. Yeah, so those are the only tools I use for backtesting. And then forward testing, just MetaTrader and a broker like 5ers. You can get a demo account with 5ers, I think, or a small prop firm account to test with. But yeah, I forward test with a demo account in MetaTrader, backtest, TradingView, and Notion for journaling. So yeah, those are my thoughts. Well, what do you think on those last two points you said about manual automatic?
I'll bring up the only using 3 accounts manual trading. Every time I touch manually, I blow the account. That's why I'm trying to turn it into an automatic, but still sucks. What part of the strategy sucks? Because if you're trying to automate a strategy that isn't, if you're trying to manually trade a strategy that isn't profitable, why are you trying to automate it? If you're trying to automate it, but you still think it sucks, what part of it sucks? And my brother has an amazing thing called why. And it's one of the most triggering things on planet Earth, because whenever I come up with an idea, he looks at me and goes, why? And then I'll explain it. And he'll go, but why? And then I'll explain it deeper and he'll go, why? And before I know it, I'm actually saying to myself, this is pointless. And he's like, why? And he'll still, like, I've actually then said, yeah, you're totally right. This idea is actually garbage. I probably shouldn't do it. And even then he'll say, why? You can find out so much just by asking why. And it's infuriating when someone else asks it to you. However, if you look at your own sort of performance and you can ask yourself, why are you trying to make it? Why are you trying to automate it? Because you're blowing accounts. Why are you blowing accounts? Because you keep losing. Okay, why do you keep losing? Do you see what I mean? You start actually opening up that opportunity to look in on yourself. And that's why people hate the question why, is because you can give so many surface level answers before, I reckon, 3 to 4 questions later, or into the conversation, you are forced to look in on yourself, and you will end up. So let's put this into practice now. You got 3 accounts that you're manually trading. Perfect. Okay. Every time I touch it, I blow an account. Why? Already, you're not even looking at automating it. But let's go with the automation first. You're automating it. Why? Because you keep blowing it. Why? Because you keep losing. Why? Because I'm placing trades when I shouldn't. Why? Then it starts opening up to emotional trading, lack of confidence, over risking, not enough testing, not enough data. You start picking out potentially exactly why you may not be profitable in this strategy. So before trying to automate it, ask yourself why. And credit goes to you and Davis. Thank you very much for that. One of the most infuriating people of my life, but nonetheless, probably one of the only reasons that I'm profitable. Because the bastard keeps asking me why. And probably one of the only reasons I haven't come up with some stupid ideas. So yeah, it's a fantastic way to do that. I do believe in automations. I'll be honest. I love EAs. I think they are the way forward and they're the future. I just don't think right now. I'm with
Why?
Griff on... Shut up. I'll tell you why. You want the truth? You're not ready for the truth. Anyway, because why? Why is it not ready right now? Because I don't think we're in a position where AI is smart enough to analyze the markets when it comes under different conditions. Because sometimes the markets are so volatile and they change that often. We program the markets to do exactly as it's told. Like, everyone thinks that AI is super duper intelligent. Yes, it is, but AI is only as intelligent as the person programming it. AI does as it's told. It executes as it is told. If it's not told to take into consideration something, it's not going to take into consideration something. And sometimes I don't quite think we're there yet when it comes to algorithmic trading, to a point where they can identify it self-sufficiently and able to not have human interaction. So if you're going to use EAs, which I truly do believe in, and I think if you have the right EA and you're willing to do the right work, then I still think even now they're profitable, but you've still got to manage it. Like those who think that they can show up, plug in an EA, press play, walk away and come back next year and expect them to be millionaires, it's not going to happen. EAs need to be managed. They need to be watched. They need to be turned off and on. You need to manage them. So don't think that EAs are the way forward if you're just going to have it as complete passive income. That doesn't exist. So I do believe in what you're doing, DK, but I think you've got to look closer in on yourself and ask yourself, why are you blowing these accounts? Why are you too afraid to manually trade it? Like what's going on within you to actually blow these accounts? Because potentially it could be something super simple. You may be a super profitable trader. You've just got to tweak your psychology a little bit, or you've got to tweak a certain time frame a little bit. You may find the difference between profitable trading and unprofitable trading can be so simple and mundane that that some people never get it. Some people never become profitable because they're not willing to ask in on themselves. And the strategy that I trade live on stream is a strategy that I've been trading since I was probably 19 years old. Now, that is true, but it's not true at the same time. What I mean by that's true is I haven't changed the strategy. I did exactly what Griff did. I looked at a pile of people's strategy and thought, I'm going to test all these strategies and see if I can merge them all and make a super Will Davis strategy, baby. Turns out I couldn't. I was so wrong. What I ended up doing was asking myself what I could see out of all these strategies. And turns out what I was doing was picking little bits out. And then I started thinking, okay, I like this guy's strategy. How can I make this work for me? And then what I ended up doing, instead of making a super strategy baby, I made a super Will able to trade a strategy. I was able to look at a strategy and go, right, okay, how can I work around this? The markets are moving in a certain way. How can I morph my way and absorb myself around the market? And that's what I did. And that was where the back test and the tweaking, that's when the long process all kicked in, is when I was able to do that. Hello, Rick.
Hello. I heard a little bit about what you guys were talking about, but I don't know how deep into it you went. I want to ask DK, because I saw the comment that he was talking about wanting to automate when he's trading something, it fails. Do you journal, DK? Do you journal your trades, and what kind of information, if you do journal, do you put down? I think that should be a good starting point, trying to figure out why you are either struggling with certain concepts, or if you are, not really following a structured plan. It's kind of looking at it from that point of, if I'm going to do something, I need to know the ins and outs of it. Now, if you're losing accounts and you're losing trades and stuff like that, you don't always look at it holistically. You kind of look at it from the point of view of saying, trade went to profit, trade went to stop loss, and that's about the information. So if you journal, or if you don't journal, I would suggest you go ahead and start journaling. No, I don't journal. I look at charts, try to find patterns, and tell AI to write the strategy and code. Okay, so it's like trying to run before you can crawl, kind of like thing. Before you go ahead and trying to automate something, try and write down why you enter on a trade. Be as specific as you feel you need to be, and write down as much information as you can. So when you enter, why you enter, what you saw, and when you do back testing and stuff like that, try and replicate that same idea. Why are you entering? And kind of have your reasonings be the same consistently, so that you can see if it's the strategy that's the problem, Is it you not following the strategy that's the problem? Or if it's just the strategy that you've chosen during the time frame that you're using it, that is the problem. So you can go and see, does it work on the 1 hour, but it doesn't work on the 5 minute, yet you're doing it on the 5 minute. So journal, that's the first and foremost thing that I would say. Journal as much as you can, write down as much information as you can, and be as concise as you can. When you decide to do an entry, sorry, you can't see my fingers. When you decide to do an entry, ensure that you are consistent with your entries. Don't one day try and enter on a break and retest, and then next time try and do a mean reversion. Choose one strategy and conform to that one strategy with every trade that you take. Have it be as close to that strategy as you can. Because if you keep changing a bunch of stuff, if you change several things at one time and it starts working, what was it that you changed that worked? So you need to adjust one thing at a time. And before you can do that is you need to understand what portion of your strategy is not working. And that's where the journaling comes in. So that's what I would suggest. Start with journaling and work your way from there.
Yeah, 100%. Yeah, journaling, I think, is probably one of the most important parts of trading.
Yes and no. It's a tool. Journaling is a tool. And you use tools to reach certain things. So if you're trying to build a house, it's like saying, oh, the hammer is the most important tool building a house.
No, it's one of. So there's a million different concepts to your trading journey and your trading career. Journaling is one of the most important, in my opinion.
Yeah. So as a starting block, as a starting point, I would suggest, DK, you start journaling and then get 2 months, maybe 3 months worth of data. You don't have to trade every day. You can start at a demo account. The thing about finding a strategy is starting with an idea or a theory. When you look at the markets and you see a certain thing or you recognize certain patterns, you're like, I wonder if this pattern has any validity to using it on a certain time frame. Because I see it on the 1 hour, but I can't be bothered to be in front of the chart every hour to kind of check this information. If you start noticing these certain things, you're like, okay, I'm seeing it on the 15-minute chart often, and it seems like it's very minimal drawdown when it does this little pattern. Go and see if you can recognize that pattern and how often you can recognize it. And every time you recognize that pattern, note it down. And then after a while, you see, okay, I have, 20 different trades across a month. And 50% of the time it wins. How would you know it wins? Because then you're going to be going, okay, I'm going to have a stop loss of this length. I'm going to have a take profit of this length. This is going to be my risk to reward. Then you start playing around with that and you see what works. It's taking small things at a time and breaking them apart and adding and removing them from the strategy to see what works.
Yeah, no, 100%. I was seeing a comment as well. Where is it? Any free journals for Windows? My best advice to you would be have a word with ChatGPT and open up an Excel sheet. The best thing you can do. It's free, it's simple, it's easy, and ChatGPT is smart enough to help you with it.
I prefer Notion personally, but Excel sheets you can get a lot more out of it. With Notion, I think you have to pay to be able to get like charts and graphs and things, whereas Excel you can obviously do all that for free. And it's quite convenient being able to see your equity curve, your monthly P&L. I'm sure in Excel you could probably even make like a month P&L calendar, which I know people really love, especially when you're intraday trading. So yeah, Excel probably is the way forward to get started.
I had the overall P&L, the overall percentage, the percentage P&L. I had all that, but I hadn't thought a monthly P&L. I just sort of went like, okay, 1, 2, 3, 4, 5, 6, 7. or I'd have like monthly journals, because on an Excel spreadsheet you get pages at the bottom. I'd have January to December, and then every single new month I would put in a new page. So then I just have to go to the January page, see my total P&L for January. That would be automatically calculated, and I just go that way. But to be fair, Notion does sound a lot cleaner. It depends, I suppose.
I think, once again, it's that idea of wanting to run before you learn how to crawl kind of like thing.
Yeah, fair.
Don't get ahead of yourself trying to implement all of these fancy things when the baseline, the fundamental portion of trading, you're still struggling with. Go back to basics. Start from a basic level and build your foundation properly. If you are going to be reliant on a large language model to dictate everything that you do with trading, you will always be reliant on that because you're not really going to learn from the get-go. So before you get to all of that, write down on a piece of paper if you have to. That's where I started journaling. I literally wrote down everything on a piece of paper.
I've got like 8 of these.
Yeah. And it's getting into the habit of having that foundation be built early on before you start glorifying or glamoring it up, adding sparkling stuff, lights and all that kind of like stuff. So start from the very basic. You can go into Excel. You can even use Google Sheets, which is an Excel variant. It's free to use. You can set up as many bars of information as you want. With a bit of tech savvy, with a little bit of Excel wizardry, you can have links from one page to another that changes the information for you, but you can have it as rudimentary as you need it to be before fancying it up.
Yeah, 100%. Yeah.
The simplest thing is to start somewhere. If you haven't, then start. That's the quickest way you can go from not doing something to doing something, is just to start it. And then get into a habit of journaling right after that trade is done. Before you move on to your next trade, start journaling so that the idea is still fresh in your mind, the emotion is still fresh, the feeling is still fresh, and you can write it down immediately. Brain to paper, done. It's going to prevent you from going into another trade because you're writing stuff down, you're busy with something else. So bring all of your focus onto that.
Yeah, 100%. Yeah, it doesn't have to be... Go on.
Sorry, Will. Sorry, there was a good question. We can get to that one once you've...
I was literally just going to say, it doesn't have to be sexy. People see Amazon and are like, oh my God, I want a warehouse like Amazon one day. You see pictures of Amazon when it was created in a garage. It doesn't need to be sexy. It's like the idea of being born and then knowing that one day you may end up like Usain Bolt. It's like, bro, crawl and walk first. And in time, you'll learn to run. And in time, you'll learn to sprint. And in time, then you become an ace runner like Usain Bolt, maybe. I don't know. But, you got to give yourself time. Time is some of the best sort of processes you can go through. And, patience proves that. Patience pays people.
Yeah. There's a question here from Wesley saying, what is your biggest tip for increasing your lot size? I've been on 5Ks and 10K accounts, risking 0.5%, and finally got a 100K account. And now I'm not sure why I'm nervous doing 0.5% on a 100% or 100K account. Any tips? I have a good one, but I would think that one of you guys can start for it. Maybe Griff.
I've got 2. Yeah. The first one is connecting it to a trade copier, putting it as a slave account, and then just trading your master, which is hopefully, maybe a demo account or a small $1,000 account. And then you only see the P&L for that master account. And it helps you disconnect yourself from the large P&L on the slave account, the big 100K account. That's more of an avoidance strategy. So it's not great for long term. The best approach, which is my second one, is to try and learn to think in percentages rather than in dollar amounts. And you can practice that by, again, getting a very, very large demo account, taking a random trade and just watching the P&L and kind of just meditating on that. Like just looking at the trade on your phone, maybe you're like 10,000 down or 10,000 up, and then just really imagining if it was real and how it would make you feel. And, these are good techniques. But yeah, try to learn to think in percentages. But I think avoiding is a good starting place, but you do want to kind of digest that eventually with the second approach, which is like meditating on the big losses. And that's the best approach in my opinion.
Nice. Will, yourself?
Yeah, no,
What's it to be like?
100. So when Griff mentioned about the avoidance strategy, let's call it, 100%. I've recommended that to so many people, and I do that now sometimes. I'll open up a demo account of 100k. Let's say for example I had like, I don't know, 200k's worth of funding, and I'm only used to 50k. I'd open up a demo account with 50k in it because that's what I'm used to. And then I'd hook the 200k account up to the background, just as an example. So you've got to learn to be comfortable eventually with it. But that is definitely a fantastic place to start, is by hooking up to a trade copier and trading the account that you're used to. Second of all, again, Griff, 100%, learn to work in percentage value. The last one, however, I love, because I think I'm a bit like Griff this way. I can envisage that, and I can manifest that and meditate that through. A lot of people are going to struggle with that, and so for a general knowledge, or for a general piece of advice, I wouldn't recommend that unless you know that your brain has the capability of doing that, because only a select few type of people, like my brother, couldn't have done that because he's not imaginative that way. He can't just get used to that in that sort of way and meditate through that. So yeah, the best way is try and get used to the percentage value. Don't look at the P&L. You can hide the P&L on MT as well. So feel free to hide the P&L. But yeah, the biggest and the best one is the avoidance strategy. 100%.
I would agree to both of that. The avoidance more as a band-aid rather than a straight up cure for it. Yes, it's a in the meanwhile, while I'm working on all of the other stuff, let me do this as well. I would say grand scheme, Wesley, the problem is you're associating the dollar value as being way more important on 100K. You're looking at a 100K account and you're thinking, this is $100,000. If I lose 0.5%, it's $500 that I'm losing on this account. Holy crap, this is a shit ton of money. Okay, disassociate the importance of money. I know it's very difficult, but this is like an advanced concept in the long run. Don't put the account on a pedestal. A 100K account, if you consider the drawdown that you have available to you is only 10K. So it is technically only a 10K account. So look at the percent of drawdown that you have available and then reduce that account to just the sum of your drawdown that you have available. So it's a 10K account. So it's not a 100K, it's a 10K account, mentally. Okay. Then second thing that you do is, every time you take a trade, like Griff said, only look at it in percentages. Because 1% of a 10K account is exactly the same 1% on a 100K account, on a $1 million account, on a 5K account. 1% is always 1%. We, as humans, start going crazy when we see the physical dollar value. And then we associate that amount of money with stuff that we can do in real life with this, or if we were to lose it, how is it going to impact us? Consider this as well. It's unrealized. That amount that you see there floating around up and down while your trade is running, that is unrealized. It doesn't exist. Completely disassociate with the importance of that money that you're potentially getting there. In the long run, what will eventually happen is that you'll become Disassociated. Desensitized.
Okay.
You're desensitized to the money going up and down. You seeing your P&L change. You can do the same thing as well. Change it from in MetaTrader from profits to points. So instead of seeing your P&L going up and down with each trade that you have, you just see points value. So if I bring my screen up, I can show this to you quickly. I'm going for the sake of interest, I'm going to take a trade here on NASDAQ. Okay, trade is in. Notice how here at the bottom it says profit and it's 122 and then it has the dollar value below. you can literally right-click and you can say profit, money, or in points. So visually looking only at the points makes a bit of a difference as well. And then what you can literally just do is just bring this down a little bit so that basically, come on, a little bit more, so that your profit is hidden. And then you're just seeing the points. It's that disassociation. This is more remedial than it is actually helping. But in the long run, you need to disassociate the importance of that money and think in percentages. That's my 2 cents. Great information from both of you guys.
I think the disassociation with my that numbness comes with time. You know how I was saying that time's a great healer. It's also a great solver of problems. And I know that sounds so stupid and almost like a cop-out answer, but it is. Providing you can fix it soon with a providing you can slap a band-aid on, like you just mentioned, Rich. Providing you can slap a band-aid on and do something that can meantime fix that psychological issue, you'll eventually get bored of the account. And I don't mean you'll get bored and stop messing about with it and blowing it and doing stupid things. I mean you'll get bored, the excitement, the that scared the shit out of me.
Griff, like what the actual hell happened in your background there?
I think your what do you call it? Your
noise gate just disappeared, and then we heard everything. We heard the whole world end. Are you showing offline nearby, mate?
Oh, maybe it was. Maybe Griff was just going through Wi-Fi issues. Maybe that was the.
Do you think it was the Wi-Fi that just decided
that may
to?
Be Wi-Fi. I think that may have actually just been issues. That may not have been like background noise. That may have just been like Griff
died. Question mark.
Man, that gave me heart palpitations. That scared me. That did.
Oh.
Anyways, I'll finish my point off real quick.
That was rough.
Like I was saying, he's back. There we go.
I have no idea what happened. I saw you guys like freak out, and then I saw my camera frozen.
That was weird. That was really weird.
I'll have to watch the replay. Sorry, I don't know.
That was quite dude. Watch the replay. That was quite funny.
Okay, I'll watch the replay.
You were talking about you had people like doing some woodwork or something on your house or something.
There's people working on the roof.
Scared me. Oh my god.
What the hell? Okay.
Bill is working in his military or milling company. Yeah, true. That sounded like a construction site.
Yeah, literally.
It sounded like you were holding the mic right up next to it, though.
Yeah, it literally sounded like you
literally
slamming your mic.
That's hilarious. I just saw
Wi-Fi sounds.
That was crazy.
You guys don't know. I just tuned you into your brain.
Oh no!
That's
Sleeper
the sound
agents.
of the blood flowing. Sorry about that. I don't know what happened there. That's pretty funny because I was frozen, and then it's like static.
Whoa!
Apologies.
Hey, I just left the room. Oh man, yeah,
that's fun. I'll have to figure out how I can do that again because that's a party trick. Say if Will says something that I disagree with.
I am pretty sure that there's a war veteran sitting there watching us play that just
taken in the corner somewhere now.
just PTSD just skyrocketed, mate.
No, not the planes.
Oh,
Jimmy!
Oh, dear.
Anyway,
that's really funny.
Sorry, Will. Before you were so rudely interrupted by Griff's inner monologue there.
Dude, I can't even remember what were we even talking about.
We were helping Wesley with his trading demons, and since then we all got scared pantsless because of that noise.
That
LJ, you're
was
back,
the
mate.
trading
Oh
demons.
yeah, that's right. That's LJ was come on. Yeah, that's what I was saying. Was basically, you'll get bored of the account. That's basically what I was coming to. It's like that honeymoon period. Have you heard of the honeymoon stage? When it comes to a relationship, at the first like 3 months of the relationship, everything seems perfect. It's all floating on clouds and crap like that. Well, it's the same with your account. You have that butterfly feeling, you have that nerve-wracking feeling of, I'm now on a 100k account. This is exciting. This is fun. This is big P&L. This is big boy trades, big boy movements. You'll eventually get bored of that. And that feeling will wear off, once you get a couple of payouts, once you hit a couple of stop losses, once you get into a bit of drawdown, once you claw out a drawdown, once you get into a bit of profit again. Once you start just going through the motions of trading a larger account, providing you can slap that Band-Aid on for the meantime and just psychologically sweep it under the rug, it'll get to the point where you trip over it enough times that you'll just think, screw this, you get it out from over the rug and chuck it in the bin. You will get bored of that feeling.
Sorry, I'm just looking at all the comments while I disconnected. That's so funny. Bro is streaming while driving a garbage truck.
What the F? Did a car just enter his
that's so
crib?
funny. Someone said, "Hey!" with like this fish emote. That's so funny. I'm sorry about that.
Oh man,
that's great. Well, I've got to shoot off now anyway. Should I make a similar exit?
No, please don't.
I'll see you guys next Tuesday.
Oh, shot Griff.
Awesome.
Have a great week, mate.
Oh
Thanks,
man,
fellas.
yeah,
See
good.
you
See you later,
soon.
brother.
Bye.
Have a good one, man. Take care.
cheers, Griff.
Bye.
I'm in this trade, so not so okay. The funny thing is for explanation for Wesley, I ended up taking a similar trade on the play account, but I am actually in this trade on my live accounts right now. I've already taken TP1. It's come back for a break even. I hope that this bounce that we've had conforms to these lows of London and that we continue pushing lower. Wanted to go to TP2 would be great, so that I can have it go to have my stop loss go to break even and have a risk-free trade. So as of right now, that's where I'm sitting.
Yeah, nice. I'm just waiting on gold. I don't think there's much going on. In fact, if I bring my chart up real quick, I know we're not really seeing much. I'm not sharing my chart. That would be good if I shared it, wouldn't it? Let me
I was
Please
wondering
join.
if you were going to be in that rich.
Yeah.
Are you in it, LJ?
Yes.
Are you?
Nice.
Great minds think
Nice.
alike.
And fools, they never differ.
Yes. So
Yeah, so,
we
got this
together.
like I was saying with gold. We
Yes.
got the consolidation. We didn't get the break and close above. We pulled back down. We got the wick below. Continued higher. We haven't broken and closed above. So I'm still waiting on this now. I can't see myself entering on this trade now. We have wicked above, so potentially this could now play out. Option B. Let's call this option B. Option B could play out, but I'd rather option A. But I will see. So that's all I got to share. I'll go back to you guys in your trades.
I'll show you mine. Hang on.
Oh, look at B. That's perfect.
I
So
found
just
out.
a touch higher than you.
Oh,
Yeah,
okay.
Rich.
Oh,
Oh,
dude.
That's good.
Yeah, that's really nice.
So we're actually whilst Rich was on, Richard Wells, someone was asking about NASDAQ. I was doing this in the background, mapped out. I was like, yeah, this actually looks really good.
Yeah,
Gonna
this
take
this
that,
this
so-
looks good. Let's take it.
Yeah.
So I found out something that I did not know about the trade EA, the position sizer EA.
All right.
I don't have to manage my trade at all anymore. So usually what would happen is the trade I would have 4 TPs, 1, 2, 3, and 4. When it reaches TP2, I would manually go and draw the last 2, TP3 and TP4's stop losses to break even. I can literally just type into the break even one here, 8,000, which is TP2's take profit
No
points,
way.
8,000.
Oh, dude, that's sick.
And all it does is literally the moment TP2 gets taken, I just see my 2 stop losses just disappear. And I'm like, where's my stop loss? And I look down at the stop loss section here, and it's just moved to break even.
Okay.
Mate, that's sick.
So all I have to do is enter the trade,
Everything.
make sure that my TP 1, 2, 3, and 4 are set as they're supposed to. Make sure, obviously, before I take the trade that the break even is set to 8,000. Done. I can move away.
Easy.
I don't have to come back and have a look at it.
Mate, that's proper cool. That is genuinely awesome.
That's good.
How simple is that? This position sizer has made me feel like I've missed out on trading.
That's fair.
Before
I
I
bet
was
it's also
using
made
this.
you feel like revolutionary, though.
It blew my mind
Yeah,
because
I bet.
I had a trade last night that did that,
Yeah.
and I was like, "Where's my stop loss?"
You're like worried at first. You're like, oh.
You're like,
Initially-
I haven't set a stop.
Initially, I was like, "Where's my stop loss?" But none of the information here at the bottom, like if I click on the history,
As I said, like it's moved down. Maybe you should see if you can
the
find a
stop
way
loss
to-
was still there. It wasn't an empty box like you would have no stop loss.
Yeah.
It's just
Do
like
you think
what
that you
the-
just extended, like you put a stop loss way too large?
initially because I didn't see the line. I was like,
Dude, that's that's
"Where's my stop loss?" And then I look at the numbering. And I'm like, "Oh, it's break even." So happy accident. How nice is that?
Literally. What a fantastic mistake.
That's good.
What a coinkydink.
Hell yeah.
So, I mean,
Future
in the past, I used to struggle with watching the trade. So if I sit here and I'm constantly viewing it and I see stuff like this, where if I just minimize so that you can see it clearly, when it starts doing stuff like this, where it slows down heavily, I'm like, ooh, you know, that doubt starts creeping in. It's like, is this a rejection? What is happening here? When now I don't have to look at it. I can literally just minimize this and look at something completely different. Or I can go over to a different chart and just be like, oh, okay, cool, we're busy here, and not be concerned by it. Dude, it feels like I've unlocked something, and I don't know why.
Yeah. I can imagine it because it's
Good.
something that you knew was there, but you weren't using prior. And like now that you've found this, it's like unlocking a character in a game, for example. You knew the character was there, but you weren't able to use it. Now you're able to use it. It's like that, almost that sense of achievement.
Yeah, but now the question is, how long is this going to work before I somehow make a cock up with it and it bites me in the backside?
Yeah. Well, at least now
I
you know that
forget
you
one
must
day.
concentrate.
I forget one day, like, I don't know, maybe there's an update or something and it rolls back and it's just like, so I still need to check everything. So I still need to ensure that I've done my part, that it's not fully automated. I'm still doing my analysis. I'm still checking that all of my take profits and stop loss points are where they're supposed to be. And then I go from there.
Yeah, what you got to make sure now is that it doesn't make you lazy. Like you said, you've still got to really pay attention on your entry zones. If anything, now you need to be more alert and aware on your entry, stop loss, TP criterias. Because before, like, you could be like, oh, I'm just going to chuck it there real quick, and I'll come back in a minute, or I'll come back later, and you're managing it, so you know that you can adjust as and when. Whereas now that you literally have the possibility of setting and forgetting and having it all manually do some pretty cool shit. You can actually, you now must be specific, because if you, like you said, if you accidentally cock up, it's like
Don't get complacent. That's
Exactly.
kind of like the thing that I'm trying to avoid. I've simplified my strategy to the point where I can trade this blindly.
Yeah, you can't simplify
Which
this
is
anymore.
which is the set and forget stuff, but I should not become complacent while doing that. I should still ensure that I'm still actively trading instead of passively trading.
Yeah, 100%. Dude, that's a really nice trader. Just looking at that, that's actually really nice. Dude, if I If I traded the NAS, I'd definitely be trading that.
To be dead honest with you, I would have loved to have gotten in earlier.
Oh, really? Oh, okay. No, I couldn't have seen an earlier entry, I don't think. I think that would have been...
We've been pretty
from last
bearish.
night.
Yeah,
Were
we
you?
were pretty
Didn't
bearish.
want,
the whole
didn't want to
time.
hold it overnight though. Like this was when we were at
okay,
the
fair.
highs. Yeah.
Oh yeah. No,
And then
thank you for
obviously-
holding it overnight.
Yeah, I got to go to sleep at some point, right? And
Really?
in this
LJ
current,
sleep?
yeah. So
What is the sleep thing you keep talking about, LJ?
I still think it's a rumor. I
got to plug in to recharge, right? When I
Yeah.
plug myself into the power port, I have to power down like that.
Like, yeah. You're like C3PO. There's a switch on the back of your head, and his
Yeah.
eyes go dark, and he goes all grey.
Vampires don't sleep. Yep, that's true.
Facts.
Here's a question for you: are you going to hold the trade or exit before CPI?
Well, we've got 19 minutes as well, guys.
I will say,
mean-
as far as my end, I'm going to hold it. I don't think CPI
Yeah.
will matter too much. You know, it's all plagued with the Middle East data, right? The inflation effects there. It's not going to surprise anyone. Exactly what the number is, people are going to be like, yeah, it's higher. Like, kind of who cares? And obviously, since then, we've got some kind of gradual progress towards resolution, opening of the strait. There'll be other conditions that'll be worked out probably a bit later. That's still the base assumption. So people say, whatever the CPI is now, it's going to come off anyway. So I don't think it'll be too much of a big deal. We've got the transition with Kevin Walsh to Jerome Powell. Sorry, Jerome Powell to Kevin Walsh as well. So how he's going to run the Fed will be
That's
a little bit
supposed to be
different.
Today, no?
It was supposed to be
no, it's-
yesterday.
Yeah, for the confirmation. Yeah.
Yeah.
And then Powell's last day is like Friday or something.
Friday.
Oh,
Yeah.
okay. Fair.
Yeah.
Yeah, fair.
Yeah. So it was supposed to be yesterday. At least when I requested the thumbnails for the live stream, I had gone through. I was like, okay, Monday, cool, get all the information. Woke up yesterday, you know, everything was already scheduled. Live was going to go ahead. Look at the news, and I was like, did I screw up or something? I was like, no, I wrote it down. I definitely wrote it down. Yeah, and it just moved. So yeah, that. So tentative, for those of you who don't know, tentative means that there is no scheduled time yet.
It could be any time.
However, generally when it's tentative, you can look at the time just before that to kind of like gauge when it's supposed to start. So
it'll be somewhere in the...
It'll be somewhere just after, in this case, 4:30 GMT plus 2, which is 2, so 14:30 GMT time. Just after that, somewhere after that, it should be starting, and probably before 5 p.m. GMT as well. So no restrictions on the high stakes accounts for trading tentative red folder news. However, red folder news that has a stipulated starting time, like this CPI today, has restrictions on the high stakes for new entries, just for everybody who is trading the high stakes accounts.
But yeah, so the nomination won't do anything to markets. Like Kevin, yes, he's the new chairman, you know, so it's not going to shift anything. So you don't have to worry too much.
This 15-minute candle, though, is worrying me a little bit. That is quite a rejection. That's
round number 2,900. Sorry.
Yeah.
Yeah, it's a nasty little candle, that.
Yes, it is. That is a worrying sign. A very, very bullish 5-minute candle. It makes you want to feel like this is probably going to end up going to a stop loss from here.
Well, like I said, you know, that allows my option A to play out. You know, on gold. You know, the gold seems to be bullish at the moment.
I think this is just front running CPI.
Yeah.
I don't think
Well, I
that
mean,
this
we
is
got
doing much.
16 minutes until CPI anyway.
What's AUD doing? Same.
It's just natural retracement because that's some of the pivot levels from today. Round number, same deal. You know, there's going to be options levels there and that kind of thing as well.
I mean, this 15-minute candle closes a very
Yeah.
like rejecting candle, but I would now love for it to come back down and just sweep this. Maybe,
If we can
Yeah, it's
completely
where
break and close
somewhere
below that,
here.
yeah, that'd be nice.
I'd stay focused on like the 30-minute to the hour, with their candle structures. Yeah. So unless you get a close on the hourly above where we opened,
Yeah,
then I'd be concerned. But without that, still in play.
very much so. Yeah, I generally go down to the 15 just to see this and gauge where it went, because I mean it swept the most recent low and did not come and sweep the most recent high, which is this little swing that we had here. So I'm hopeful that it's going to continue pushing lower, because so far, if I just remove all of these drawings, the high of London and the low of London has been bearish, apart from the little bit that we were stuck here, but the whole day so far has been bearish. So no reason yet to believe that we're going to push bullishly from here.
Yeah,
Yeah, fair.
it looks as though we're a little bit exhausted, and coming up to some of the meetings and stuff in the back end of the week. I think it's a natural TP point. It was the same with S&P. What we reached, was it 74.30 last night, thereabouts?
Yeah.
Yeah. So, and we did actually have some mixed as far as tech last night. So Nvidia pulled us up, but there was like Microsoft, Meta, that kind of thing, all getting sold off. So there was a mixed bag. So yeah, I think it's pretty safe to look for a bit of a retracement through here.
Quick question from Justin about news trading. If we had a limit order placed well before the news, but it's triggered during the news event, does that count as news trading? Indeed, it does. It is whenever the trade itself gets activated. So you can place it as long beforehand as you want. If that trade triggers during a news event, it's considered news trading, because it looks like for the new trade. However, if you had a stop loss or a take profit or something that was within that, but you had the trade long before actively running, as in your P&L is going up and down on your account, the trade is active and it hits stop loss or take profit during a news event, that's not a problem.
Yeah. So old trades, no problem. Any new trades, that means ordering yourself at market, or if you have a stop order or a limit order, that's not good. Yes. At least for 2 minutes. So if you've got the order, you're looking at that level, maybe the market's come to that, you'll have to just either delete the order or drag it somewhere else for the meantime, wait that 2 minutes, and then either replace it or then decide to enter at market if it is at your kind of area after the 2 minutes. Yeah.
Well, that's for the high stakes account, guys. So for pro growth, for the hyper growth, for the boot camps, news trading is not a problem whatsoever. Holy cortisol.
I think that's regarding the pullback on NAS.
Yeah, but I think what you mentioned is something that I think some people forget is that you still do get pullbacks, and there's nothing about the trade so far that is indicating that it is changing its direction. It might be slowing down, it's getting a little bit more resistance than it previously did, but it's still very much a viable directional trade.
Yeah,
and
market
pullbacks are normal.
Yeah, stochastic. So that means you go point to point to point to point to point. The main thing we're concerned about is where you started, where you entered the trade, and where it's going to end up. So in between there, you can travel all over the place, but as long as that travel, is still directionally correct, then yeah.
Yes, indeed.
Right, so, guys. You can see with that candle, like we didn't jump up above that ridge, sort of where Rich has entered, right? We've now.
Yeah, if we came up, I mean, if we wicked up there, it wouldn't have been so bad. But if we closed anywhere close to that, it would have been. Yeah, I that was where I would have been like, yeah, I'm screw this, I'm out. Anyway, guys, I'm gonna have to pop out because I got a meeting in 10 minutes. And I gotta go prep. So, guys, I am gonna love you and leave you. Guys, please make sure that you smash that like button on the video as well. Seeing there's nearly 250 of you watching right now is awesome. Please make sure you like the video and subscribe to the channel if you haven't already. I'm gonna leave you in the very capable hands of these two absolute legends here. But in the meantime, peace.
Cheers, William. Yeah, and then everybody, if you would be so kind, just hit that notification bell as well. We've noticed that a lot of people are not seeing our live go live. And I don't know if it is because of the sheer amount of shorts content on YouTube, but hitting that notification bell is going to at least notify everyone long in advance before we go live. So you don't have to go and search for us. So yeah, that would be a nice little nod to us, and we would appreciate all of you if you did that.
Indeed, indeed.
DK, this is a question that I think is going to be dependent on the trader. How many candles for confirmation on a retest, or does it depend on the time frame? So this is subjective, I think. So LJ is going to have a different definition of a retest to myself, to Will, to Pedro. Myself, generally, I look at the candle and the body of the candles, the wick of the candle and the body of the candle's relationship to each other in reference to what the candles did prior to it. So to give you an example, if I used the 15-minute as an example, this would be generally a rejection candle to me, where the body itself of the candle, the open and close, is very close to each other, but you have a massive wick on either side. And that generally to me talks about, or indicates to me at least, that even though we started out within this time frame in this area here at the top, we've tried to push it lower, and the bulls stepped in, pushing it back to where we were. Now, it doesn't necessarily mean that this is confirmation of a reversal. However, it could mean that there's more interest in this area than we previously had. So as price was coming down, you can see clearly that there was some sort of rejection down here, but when we came back down to it, we did react off of it, but we did not take new highs. So it doesn't always work like that. This, to me, is the strongest indication of a reversal of sorts, is when you have a bearish structure with a semi-bullish closing candle with a long wick above. For, let's say, reversals on bearish to bullish. Because here you had a lot of interest to try and push price up, but the bears, while in a downtrend, tried to push price back down again, and it followed up by a very bullish candle. This being just a healthy retracement in of itself as well. But generally this. So if we had this one here, but in a bullish structure, I would say that that would be a little bit closer to a bullish rejection trying to push price lower. So this is a bearish rejection, this candle over here, followed up by a bullish candle. This one is a bearish rejection trying to push price lower.
Yeah, I'd say it depends. It's not the number of candles, it's the nature of the candles. So just like yeah, what Rich is saying, where you basically got the two candles, the bullish candle, bearish candle, they got little wicks on them, and then we started coming off. Then we had that pullback up. It didn't close positively, it just closed flat. Then the next candle continued negative, right?
Yeah.
It's also something where you then want to go and check higher time frames as well to see that you're seeing the same kind of thing. Oh, sorry, not sharing. Here we go.
Whoopsie.
My bad. There we are. Because obviously, depending on what time frame you're looking at, if you go down to a lower time frame, there's going to be more candles within that section just because you're on a lower time frame. But ultimately, then the 15 started rolling off. This is also something where I have like the 10 moving average. So anytime we push down, we come back up. As long as we're still sitting under this 10, it tends to ride price the way down. And then see here, we get this slight little tap through, but we couldn't close above. So as long as there's no close above, you keep going lower. if there is a close above, it depends to what degree. That now doesn't mean it's done. That means it's just into question. And you can see here, if we go to the 15-minute, had this guy riding down through here. We did come back above, but we've got, this is where you look for another point of confluence. So you can see when we had that dip through there, this wick, we basically come up around that wick and this larger drop candle through here, right? So that's hit resistance. You also got the 100 moving average through there on the 15-minute. And then similar deal down here, we picked back up above the 10, banged into the 200 moving average on the 15, and we're still just near this cluster here where we've been basically oscillating sort of back and forth. Plus you've got this general bottom, wick bottoms from this higher range that we basically broke down into. So it's kind of just testing the underside of this sort of wick area that we have. And then hence we continued lower. So normally if I do see that, I will then go to the next higher time frame, hence the 30-minute in this case. Look where that is. And then keep checking through things as I need to, right?
Yeah.
As long as that's confirmed, you're good.
Yeah, so it's a balance. It's a balance between the candle characteristics and some, let's say, indicators or some sort of EMA or MA or whatever that confluences together. But generally, my viewpoint and LJ's might be a little bit different. And it's going to be the same for most people, I think. There's a few other questions here as well. I just wanted to get to them as well. Mishak saying, quality content right here, guys. Thank you so much. I recently got a high stakes account and everything has been good, but the swaps are doing a little of some work on my account, but great firm. In general, swaps, we have very little control over the amounts of swaps. The only thing that the 5ers can control is when the swaps happen. So we used to have Monday, Tuesday, Thursday, Friday as being the 1x swaps, and then Wednesdays being a triple. We've changed it from Wednesday being a triple to Fridays being a triple. So you have triple swaps over the weekend. But how much it is, it's not really within the control of the 5ers. Question.
Unfortunately, they're
from
a little bit unfavorable. Best thing I would say, if you're going to hold it overnight, try and calculate it into your trade setup, right? Your P&L prior to taking the trade. I know sometimes you didn't intend to hold it overnight, but it's still running well, and you just have to cop that. It is a bit unfortunate. I take most swing trades on personal, to be fair, but it's just the way it is.
Yeah. John Kennedy saying, what if I set a order limit before the big news and then during the news price hit my order right there immediately? The news event caused you to enter the trade. So, and then maybe it hit my TP or stop loss. Is there a problem with that? Yes. That would be considered news trading. So the confusion comes in. People think that it's just the TP or the stop loss that counts when news trading, or when referring to news trading. It is when the order is executed. And it can be a market order, limit order, stop order. It doesn't matter. It's the execution of the trade that matters. So if news happens, red folder news, 2 minutes before, 2 minutes after, and you have a set order here, and the news candle triggers it, then it's flagged. Then they say, okay, what happens? Is it take profit or stop loss? If it's a stop loss, it counts. It counts as a stop loss, and you get a little tick that says that you have prohibited trading, which is red folder news, if you're trading high stakes accounts. However, if it goes down and hits take profit, your take profit will not count because it's considered a trade that's not supposed to be taken on that account. It's a prohibited trade. So the profits will not count in that trade, but the stop loss will count. So you'll get the loss on your account and you'll get a warning to say, listen, you're trading during news. This is not allowed for this account. Please go and have a look at your trading. Don't let it happen again. So that's definitely going to make it trigger.
So any new trades, no good. Whether it's a market order, you clicked buy or sell yourself, or if it's a pending order of either stop entry or a limit entry, no good. After the 2 minutes, no problem. And existing trades prior to the 2 minutes, no problem.
Okay,
But no new
so
one.
we've got the news that is happening now.
Let me bring up my thing. What do we get? Oh, surprise, surprise.
Point
Yeah, it's
four.
high.
0.4 year on year was 3.8, and the month on month is as expected. So
Yeah.
very, very little in terms of change. There's a bit of volatility right now, but in general, it doesn't look like, I'm hoping, doesn't look like it wants to run up.
No.
That would be,
If anything, it would be
bad.
negative for the stocks. You know, because it means rates potentially stay higher for longer, etc. And higher input prices for companies. So
yeah. Well, I see the spread has opened up quite a bit.
it has. By the way, I'm still getting that issue with my account. By the way,
I did send the technical team your query. So they should be working on it right now. Wow, it went from 150 to 760. So that's
the
just
spread,
grateful.
spread.
Yeah, the spread itself. So 76. The spread is 76. Well, $7.60 instead of $1.50 on the NAS pricing. So it should be going like this for quite a while until let's say the volatility dies down, and then you'll see the spread return back to where it's supposed to be.
Staying
For
wide
those of
for
you
a
wondering.
while. Yeah. Surprising.
Jonathan is no longer not trading. I mean, like streaming with the 5ers. For those of you maybe who remembered, he was doing his CMT stuff. So he wanted to go into that field a little bit more, and he ended up deciding to go and do that. So Jonathan is no longer with the 5ers. Doing the stream management took up too much of his time, and he then decided to step away. So that's why I am now the stream manager, because he needed a replacement. So yeah. Like I think I said it yesterday, there were a few people that were like, is it because of the payouts? And I was like, no.
No, he decided to go ages. Like this was January when thinking about it, because he was trying to wait up the timing, that kind of thing. So in order to unlock more time for him to do other projects,
yes,
had to make that decision. So
there is a hair in me eye.
Sorry, I'm just trying to read through data stuff.
Okay, the spreads have returned back to normal. And now we're getting a little bit of bullish movement.
We're getting the flip back, yeah.
Just a little bit. Let's have
I think
a
we'll
look at the 1 minute.
on there.
You think it's going to start dropping now?
Yeah, through here. This is sort of the shuffle and dance kind of thing. I want to see if euro dollar also comes off. I've been eyeing about 117.20.
Oh, it's close though. It's 117. Ooh, it's got a bit of a bump now. I mean, it's not much. It's this is on the 1 minute. I don't know what I'm doing. I'm looking at the 1 minute.
You're on the 1 minute, yeah.
Yeah.
But it's the same with this trade. I'm wondering whether I just take it now. We're not quite getting down. We've got 31 as initial target on euro dollar, and then potentially down towards 20 or so. But we're just not quite getting there at the minute.
We're back at break even on that account, on that trade. So I do feel like if it's going to start moving from here, it's most probably going to hit my stop loss. So this is going to end up being a 0.5% loss, unless it can start pushing lower and not really break above that area of slight consolidation as well as low end of the London section. But it does look like it wants to continue pushing up though. Tis unfortunate.
Got that one for you, Rich.
Which one? Hi, Richard. I have an inquiry. How can I apply the same view as portrayed in your chart area of the different sessions? Is it an indicator that you can access in TradingView? Yes, it is. So, this sessions, market sessions by Leviathan. So what you do is you can have it for Tokyo session and you can set it up however you want to. It basically just colors the background for you during a time A and time B. So the start of the session, end of the session. And you can also set it to your time zone as well, so that it references exactly the time that you want to see. So you can see this information. It doesn't have to be Sydney. I can make it EU. And then I can set the time, whatever I want to set it. Let's say it's 1400 to, 2100. And then I activate that. Then it's going to start. There it is. So that purple one then locks up there. So what you can search for is you can literally just search for market sessions. And then it will give you a bunch. The Leviathan one is great. There's another one from, I can't remember if it's Lux Algo. There's a fair few. But yeah, you can go with whichever one you want to. I do like the by Leviathan one. I think it's pretty good. All right, we are definitely going to start pushing into stop loss territory here. It does feel like it is going to hit me stop loss, this one. Missed TP2.
Maybe.
It is unfortunate, but it is what it is. You win some, you lose some. It is what it is. This is an interesting question. I'm in 2% drawdown. What risk I should take for my next trade? Depending on the account, if you are on a bootcamp account, then you have 6% or 5%, sorry, available to you in terms of drawdown. So you have another 3%. So you're about 40% of the way there. Whereas with the high stakes account and the pro growth and not the pro growth, the hyper growth, it's 10%. Which means that you have only reached about 20% of your drawdown. In that case, I probably would not change much. 2% drawdown is very normal. But I would say that if you do not feel comfortable risking, 1%, cut your trade, cut the percentage, 0.5%, 0.25%, find something that is comfortable for you. But generally, I would say have a look at your backtesting and see how often and how deep into drawdown your strategy normally goes into. So what is like the average drawdown that you go through? What's the mean drawdown? What's the deepest drawdown you've been in? Consecutive losses, average losses, and kind of build your way around that. Rich Wells used to do this. He would say, okay, my maximum trades or lost trades, consecutive losses was 3 trades. And on average, I have 2 trades in a row that I'm going to lose. That would mean that if he goes on a losing streak, he would generally be at most 3. So he would add 2 trades to that to make it 5 and say, okay, cool. I have 5 trades that I need to at least be better than. So I need to have more than 5 trades every now and then. 1 in 5 needs to at least go to a winner. And then he would say, okay, how often does this happen? How deep into drawdown do I go? That kind of like stuff. And then he would base his lot sizing and his risk parameters around the amount of expected losses he's going to receive. So if it was 20 or 10 trades, he would double that, make it 20, and he gives himself 20 trades. He'll take his drawdown, divide it by 20. He gives him his risk percentage, and then he trades each trade with that expectancy. So if that ends up being, this was a loss. If that ends up being 0.2% per trade, then that is what he will trade then. So that's a one way to look at it, I would say.
Yeah, another way is like looking at your available risk capital. So I always call that like ARC, just ARC, right? And then so if you've got, say, 10%, you're now down 2, you got 20% less. So therefore, you reduce your risk by 20%, right? So if you're risking, hypothetically, 1%, each incremental portion you go down, you reduce it by whatever drawdown you're now missing, right? So now you'd be trading 0.8%. And that gives you a consistent number the whole way down. So essentially, it's the same relative risk as you go down in drawdown. And you can also use that on the upside as well. So as you're slightly in profit, you're up, marginally, you go to 1.1% risk, so on and so forth. Yeah.
Hello, Victor.
Well, hello. You guys couldn't know if I was talking already or muted. But hello. How's everyone doing today? It is a beautiful day, Richard. I was just you were just about to say something and I froze the moment there. I saw it on your facial expression. LJ, how are you doing? Samir, who is in the background as well. Hi, you guys. Of course, I hope you're having a wonderful day. LJ has it's not a competition, but that answer from LJ was spot on. Hey, uh, you know, ask us anything and we will help you as much as you can. I like your background, Richard.
This one.
Well,
She
you
is
only
new.
have one right now.
Well, I have that one and the one on screen. Yeah, thank you. This I painted this a little while ago. I just need to put on some paneling, and then I'm going to start putting up more of my wife's paintings and whatnot. I do have one of them up here, one painting, but the rest of the wall is a bit bare.
See, she is such a creative person.
Yes, you should see the stuff that she creates just by doodling. I showed it to LJ a while ago. She was drawing on a shirt, a T-shirt. She was just having fun. 3 hours later, she rocks up and she's like, "Look what I've drawn." I was like, "Holy crap! Like, this is just you doodling. What is this?" I might send it. I might send it in the group to you, Victor. It blows my mind how someone can be so creative and take something from nothing and just put it on a piece of paper or put it on like a piece of cloth or whatever. It's ridiculous.
It's really good, yeah.
I'm so envious.
Yeah, so good. There were just a couple questions. Just I'm sure these guys have been waiting for, just to hammer them out. So first of all, this one: if you have news and you're trading a pair that is not related to the news, then no problem. So if it was US news, you're trading AUD yen, no problem, right? Now, obviously, be aware of cross-asset correlation that could affect whatever you're trading. But as far as the news rule, no problem. Now, if you're trading AUD yen and there's Aussie dollar news, red folder for the Aussie, then it will matter, right? Because obviously that's related to the pair. Two versions of hypergrowth, kind of. It's not two versions of hypergrowth, but we do have a new pro-growth, it's called, which is a mix between the high stakes and the hypergrowth, kind of matched together. So yeah, if you're looking on the checkout there, you'll see there's a little tab that you just click, depending if you want hypergrowth or the pro-growth accounts. So
I like my face.
As do we.
what was that, Victor?
We like your face as well.
I like my face.
Where did that come from?
I mean this. Look at me. I like my face.
Oh, right. Oh, I see. Dude, I completely missed that. I didn't realize. Yeah, I get it. Now. I get it.
There was for the person who asked us in the chat, I think it was YU Leonardi or you Leonardi. I sent a message, a link there for you to think to a YouTube video we made some time ago for you to check out, that answers the same question you had in some more detail. And actually, LJ, did you watch that video?
Which one is it? Let me double check.
I've watched the
Because-
video. It is Victor's absolute masterclass in risk management.
Because I thought you well, anyway, it doesn't really matter. I mean, it was a. Anyways, I'll skip it.
Oh yeah, no, yeah, I remember this. Yes, yes, yes,
Yeah.
yes.
But anyways, to answer the question, and anyone else as well, if you're wondering, if you want to get another idea, not everyone needs to do exactly this, because it might, everyone is different. But if you're wondering how to position yourself throughout the lifetime of an account, whether that be a challenge, a funded account, or your live account on your broker, this is, in my humble opinion, the way to do it. But to check it out and see what you can get out of it in terms of tips and tricks and insights as to how to manage your risk by modifying your position sizing.
Idiota.
I have no idea what's the reference there, but I like that. That's
That's
good
funny.
humor.
Idiot stop loss hit. Yep.
Yeah, but especially starting with this
Idiot.
starting idiot. Everyone thinks, huh? What is he talking about? Who is he calling an idiot? It's the stop loss being hit.
Yeah, I can't remember what it was, a movie or a show, but a guy goes crazy after something happening. He goes, idiots! I'm surrounded by idiots! I just can't remember what it was. I remember the thing so clearly, but I just can't remember where it's from.
So, how are you guys doing today, trading wise?
I mean, case in point.
From The Boys, or at least that is one scene in The Boys. Sorry, I just remembered, Rich, where Homelander has everyone in the kind of boardroom.
Yeah.
Yeah, that's what it. Yeah, that's probably.
I'm gonna
All
go
right.
see if I can find it.
There's also
I trade yesterday.
there's a huge number of questions in there for you guys as well. Some of the ones we didn't quite get to. I got to jump out because I got to do some other work just now, so I'll have to say bye. But I'll see you guys again tomorrow. Leave you guys in these guys' hands, and yeah, adios, ciao, good luck, everyone. See you guys.
LJ,
Take
have
care, my
a great
friend.
day.
Yes, Amir, go ahead.
Oh yes, I was referring to the USD CAD trade that I took yesterday, and yes, Rich was there and a lovely audience. At first, I thought maybe Remy can put on my screen. Oh, I'm not sharing any. Just hold on a minute, okay? All right, now it should be fine.
Samir, before you jump into that, I'm also going to have to hop out. But it was from the Lion King.
Lion
Yeah.
King.
Scar
Yeah,
from the Lion
I'm seeing a lot of new people today. Welcome, guys, first of all, and I'm reading your comments. So, yeah.
All right, cool. I'm going to love and leave you guys. I will see you guys tomorrow as well. For everybody that has joined us, thank you very much for joining us. It's not over yet. You still have these two lovely gentlemen down here that's going to lead you through to the rest of the stream. I will see everybody tomorrow. Cheers.
Take
care,
care,
Richard.
Rich.
Awesome having you here with us, as always, guiding everything. Thank you very, very much. And say hello to your creative wife. All right. So,
All right. So, guys,
go ahead.
I realized yesterday my microphone volume was low. Hopefully now it is not too loud. Let me know, please, Victor. Is it Is it okay?
It's fine by me. It's a little louder than everyone else, but I don't think it's too loud. Or is it? Maybe the
Okay,
chat
I'll
can help
just.
us. Uh,
Yeah, I think
can
I
help us.
realized the volume was a little bit less, but today I think it should be fine, chat. So let's come to this trade that I took live yesterday. I think price was trading somewhere around here as my time is 6 o'clock, which is right here. Price was trading somewhere here, and you guys saw me taking the live trade here. I was telling you guys I'm in this trade, and when price went here, I'm not gonna lie, I went for a drive. I was like, uh, it is what it is, it's gonna hit a stop loss, it's okay, I will see the charts today, next day basically. So it started to go in my favor, so I was like, okay, and then when I think I woke up somewhere around here, and then I hit the take profit on one of the account. It was take profit was triggered. On the other account, I was monitoring the charts, and I was seeing price was way too close to my TP, and price is doing this. So I closed somewhere around here. So it was a very amazing day. Woke up with a amazing trade. TP was triggered. At first, I thought I was gonna hit a stop loss, and I was doing some self-talk while being in the trade. What am I going to do? What will be my reaction if I trigger the stop loss? Am I gonna take the another trade? Am I gonna look for any other setup? These are all the self-talking I'm doing with myself, and I came to the conclusion: if it is a stop loss, it's okay. I will come to the charts next day and I will see what I can do. So, but eventually turned out to be in my favor. So amazing trade, and I give me just 1 minute. I will analyze this for you guys. Yesterday I did, but as this trade is played out now, I will do it again once again. So if you go to the weekly time frame, you just observe this is a fair value gap which was unfilled, and we was having 1 2 3 wicks here which failed to tap this area. Actually, not considering this wick, but these 2 wicks which failed to tap this area. Confirmation number one, maybe price can gravitate towards this area. So I was building a story this way. So this is story number one, part number one of the story. So part number two of the story, I was like, this can act as a liquidity area, and we are seeing some bullish price action also, and we are at the support area also. I don't want to be selling at the support area. I have done this mistake couple of years back. When I was seeing the Fibonacci setup, I was shorting here, but then I realized it is not good. So I should not sell at the support area. So lesson learned, I was looking for buys. Fair value gap is untapped. Going to the 1 hour time frame, I just saw this amazing impulsive leg, and you guys already know my foundation has built in this way, where I see price in either impulsive leg or corrective leg. I don't want to execute in the impulsive leg. I want to wait for the corrective leg, and I will execute some corrective leg. So I drew my Fibonacci. I waited for the 70% retracement area. Price got to it, and on the 1 minute time frame, I was seeing if price is slowing down there or it is impulsing down way too much. And I spotted price is slowing down, so I was like, yes, I can take a trade at the 70% area, but my stop loss placement should be based on the 1 hour area. So my stop loss was here below the low, and my TP was here. So this was very simple analysis for today, and basically for this trade. And you might be wondering, what am I looking at today? So I have couple of I have one setup on gold. I'm looking for sells here. Why I'm looking for sells? If we go to the weekly time frame, let me delete everything first. So weekly time frame, I am spotting we have taken out this high. If price was impulsive, it should have continued with the momentum. So I am building the story this way. It should have tapped at least this area. If price was impulsive, it broke the high, it should have continued, right? This is the way I'm building the story. So now if we go to the daily time frame, I am spotting we have liquidity this area. Now we are trying to come back. Going to the 4 hour time frame, this was a very decent area which price failed to break, which is indicating maybe this can be a liquidity move. And let me draw the Fibonacci right from here also. And even if I take some cells around here, so I can expect price to at least come till this area. So this is, some kind of the way I'm seeing the chart. So now what can be the setup for me today on gold? As I mentioned, weekly is taken out, daily we have swept this liquidity. Now going to the 15-minute or 30-minute, we are seeing this price close below the structure, which was some kind of higher low here. This was a higher high. Now it becomes a lower low. So I was like, oh, can we retrace to the 70%? And can on the 1 minute time frame, I can spot some pattern slowing down on momentum here. If I get that, I will take the trade here. Stop loss will go above. TP will be here. And we do have targeting range, as I mentioned. The 70% retracement area was somewhere around here. So I am looking at the charts based off of some liquidity areas, some impulsive legs. I am expecting corrective leg and I will execute in that corrective leg. And I planned US 30 trade also yesterday, and I didn't took that trade. Why? This is I didn't took that. This is not the part of the strategy. But anyways, so I think the trade was somewhere around here. Yes, I was planning for buys here, as you guys remember. If you was here yesterday, you know that I am planning for a buy here, and you already know the reason of buy here. If you go to the 1 minute time frame, what I was looking for a corrective pattern, which I didn't got. Of course, I got the pattern here, but it was way too late. I don't execute after 2 hours. Basically after 2 hours of the market open, the setup should happen at least 1 hour or the last 1.5 hour. So in 1.5 hour, I spotted this pattern was not convincing. This trend line was way too aggressive. This is not too convincing. So I didn't took this trade. But the analysis was, I was planning a trade to the upside, and I didn't manage to get the trade. Of course, if I would have taken this big consolidation, I would have entered a stop loss here. 1 to 1 was triggered, but it is way too late and it is not the part of my plan. So didn't took the trade on US 30, but I managed to catch the USD CAD. And we are 33 minutes away from the NYSE Open. So I will share my plan with you for the US 30. But before that, I will let Victor take over the charts because I will not consume too much of the time. And I will also like to know the point of view on Euro USD and GBP USD, what Victor is looking at in terms of these pairs, because yes, and then I might can share my thoughts also. So over to you, Victor. You can share your thoughts on your main pairs.
Yes. Yes. Thank you for that, Samir. Thank you very, very much. I like you, Samir. If I haven't
Yeah,
said it before, I like
same
you.
here.
Uh,
Yesterday I was talking to Rich about that actually. He was streaming with Dave. So I was saying I like streaming with Victor. Dave is also a good guy. So I haven't spent too much time with other people, but I like you, and yes, I like streaming with Dave also.
all right. This is getting too smooshy mushy. Let's move on with the topic.
Yeah.
Let's do a manly over, transition
Let's do
to
some chart
a
work.
graph.
Yes.
This is someone in the chat. John confirmed that your mic is fine. This was
Thank you,
right
John.
after you mentioned. So don't change anything according to John. There was a question as well. I don't know how your Portuguese is, Samir, but mine isn't exactly
I have
enough
zero
for
clue about it.
to answer this. I think it means. All right. I'll move on. Maybe someone else can translate it, or we'll decide to
You, you
read it.
can you can type in English, please, if that works for you.
Maybe Pedro. Maybe one day Pedro will come in and translate it for us. All right.
Yes.
There is one another person saying random viral added since there has been 8 days since the payout approval, but no sign of it. What's wrong, guys? Random viral. I have no like update right now how the reason why in your specific case or in general. since I'm not support, right? But please get to the support channel. Contact us with help at the5ers.com, the live agent on the website, on the Discord community. There is a specific channel for support, and they will be gladly able to help you. I do know that we did have some issues with
Mm-hmm.
some paying processors services, and I'm not too sure where how the status is on that delay, if that's still affecting some. I have no idea. I do know that that was something that was happening, that our CEO publicly talked about it, at least I think twice about it. But keep in contact our support, and they will be glad to help you navigate or help you out, to get your payout as fast as possible. Okay. Someone else asking if you're from India. My
Yeah,
trades
we
and
have
setup.
questions here. Yes,
um,
my trades and setup. I am from India, and we have, I think, a very good question by UNK Trader. So I would like to cover that also. But my trades and setup, I am from India, and yes, I have been
Peter,
with Fivers for a
go ahead.
Peter. Yes, I have been with
Go
Fivers
ahead.
for a decent amount of time. My setup, I don't know your name, so I will call you my setup. So yes.
Peter, how did you know that I showing my screen already? Because you seem to know, I'm showing EU, but you're talking about GU, and of course I am long GU. Maybe I showed it and I don't realize that. But very keen of you if I didn't show it. You know very intimately by now how I trade. So let me know in the chat how you knew if I showed it or not. Yes, there is I am long GU while Samir was answering some question. There was a signal. I know this looks
Yeah,
not
it
too great
was.
with all these
Mhm.
fib numbers. I need to fix that. But okay. Anyways, I can break it down and tell you why I took that long, and also give you some indication as to what I think about from top-down analysis, what I think about GU and where we are, and why I'm targeting what I'm targeting. And maybe I should just start doing that. Let me check here. Do we have more questions that I mark? I think that was it
I
for
wanted to
now.
cover one question actually before you start.
Okay, go
There was
ahead.
UNK Trader. He's asking, did I become profitable on Profom or real capital? Really good question, UNK Trader. For if you see my journey, so I was making like $200 a month. So for me, investing into real capital was really tough. So the Profom was the only way I was seeing light in trading. So, after 2, 3 years of trading, struggling, depositing $50 in broker, every month or basically for, after a couple of weeks. So when I came to prop firms, so again, as I mentioned, my light was prop firms only. So I have developed my personality or my foundation in a way where I become used to these rules, Profirm rules. So in short, I will say I became profitable with the Profirm model because I was not focusing on developing rules for myself and following those rules. The Profirm really solved that problem because they are giving you rules. You just have to play under those rules and slowly I think everything works in your favor only. With time, it happens, and with me also, it happened with time. In short, I will say I became profitable with prof firms only because of the parameters we are having with prof firms. And at the same time, you should not, I want to cover one point also. There was a firm I was using, there was very, very tricky rules, very hidden rules. So try to choose the good prof firm and you already know we have the proven history, so which platform is the best one. So try to pick the good firm, so that you can follow your rules, trade your strategy in a proper way. because I was seeing a firm. I think I didn't place the TP or anything like that. I forgot. Like 2-3 years back, this was there was what do we call that? There was a case. It was my case actually, and I made 12% on that account. Imagine, because of that small thing, they rejected my payout. So that was my first biggest payout. Now the point came, that's why I'm discussing about that. So as a trader, it is important for you to choose the best firm, and you already know which one is the best firm. It is The 5ers, guys. We don't have any hidden rules, any tricky rules. You can read the FAQ and just test the platform, and then you will know yourself. And yeah,
Yes, indeed.
that's
There's another
it.
question: how to modify the Fibonacci like yours, Samir? Someone wants to know your settings,
Okay.
I guess, on the Fib tool in TradingView. If you'd be
Okay,
so nice to, go ahead.
let me show it. First of all, let me save here. Okay, so this will be the Fibonacci, and if I apply default, this is the way you will get your Fibonacci. What I do, you don't need 30%, you don't need this, you don't need this. You just need 4 columns. Can be any columns. So I need 0.71 area, and for upwards leg where I can expect the impulsive leg, I need minus 0.27. So this is the numbers that I need in Fibonacci. Now it comes to the colors. I know you want to know about colors. I don't use the background one. I don't use the trend line one. I make it thinner to make it little bit cleaner. Then I change my color to, let's say, gray. Then I highlight the main point in the Fibonacci, which for me it is 0.71, and I might can make it some kind of yellow. Then I decrease this opacity. You can also choose the color. So that's how I made my Fibonacci in a very minimal way, if I call it. And I don't use that also. I don't use prices. I use levels only. So this is how I have structured my Fibonacci. I have also saved my Fibonacci. You can also save the template. If I click to this one, it will give me my saved template. So that's it from the Fibonacci part. And yes, can you look at NAS? I will take a look at that. But before that, I will not interrupt you, Victor. You can continue with the top-notch pairs.
All right.
EUGU.
Someone asked, Trade Monastery ask if algorithmic trading is allowed at the 5ers. Yes, you can trade algorithmically on all programs with no. Well, you have to read the terms and conditions. There are certain ways that that are not prohibited overall in the industry, but in general, genuine algorithmic trading, yes, you can. No question at all. You don't have to ask for approval. You can use them freely. Okay, let me check. We will be looking at NAS in a couple of minutes. UNK Trader is saying you made $2,000 from 500 in 3 weeks and then blew it on a Friday and a Monday. That is
Yeah.
Samir will respond to that in a little bit. Maybe you can give some advice as to how to go about it mentally or psychologically and so on. And Peter answered yes. He he did know without me showing anything. That trade. Uh, Thank you. Those are nice words, Peter. Well, good for you. I actually yesterday, I received a message, Peter, and actually everyone listening. I received a message on Discord from a very active member in our community saying they started in March 2025, and they have been following the sessions that I do on Discord, which are similar to what I do on YouTube here with you guys. And he's been applying and learning and studying and making notes and applying the same concepts, quasis and order blocks, and he got payout for the first time ever. And he was very grateful for being able to learn and so on. So it's amazing it makes my heart warm, and it gives me a lot of satisfaction knowing that we do our best with the best intention. But not only that, we we can contribute in the success of others as well. So it's great to see these feedbacks from the audience. Okay, so let's go to the charts. On EU, I'm going to go from, as usual, from the higher time frame, so we can get all the way from the monthly how things are faring here for this pair. I mean, the king of all Forex pairs, the EU, because of its volume, because of its importance, Europe, the US, right, the big economies of the world. Well, China as well, but I mean, you know what I mean. In the Forex terms, these are the biggest currencies. Okay, so there isn't actually anything here to see. Above us, we had a supply area, and we came back, broke a outside bar. Just so you understand where we are, broken outside bar, which is a bearish sign. But as you know, the market is, flips from bearish and bullish, fluctuates or oscillates from bearish to bullish constantly, right? And you need not to think every indication means it's going to go one direction. Sometimes it on off until you see some kind of pattern of confluence, multiple things saying on or off, and then you can understand, okay, this is the direction we're going to be going. What I mean by that is that we had a reaction of the higher supply zone. That was so strong that we broke a bearish structure, which was this outside bar order block based on the outside bar. However, it seems to us that as the market is the current candle needs to close before, but it seems that we are positioning ourselves, at least we're trying to position ourselves to break out of this um, uh, range. And if we do, then we switch back to bullish, right? So that's what I mean. It goes off, switches on off until one side becomes clear what it wants to do. That's the only thing I can tell you about the monthly time frame right now. Other than that, we have on a supply zone, which is this area quite wide, but I mean, it is what it is. Also, you can see that we've already started interacting with that order block, and we actually had a very surgical precision of our interaction last week, and we are on the back of that not reversal but reaction on this time frame, right? Meaning the order block, the market created it, went back to retest, and moved away from it. Question is, how deep will this go, or will this just be a stepping stone for price to push further into the weekly order block to then perhaps have some kind of reaction or even a reversal? We'll have to see. There's not enough evidence yet. This is the main impulse on the weekly time frame, and so far all of this is just consolidation for presumably looking at market structure, not looking from the monthly, the structure that I indicated, but looking from the weekly, presumably for price to be, make an attempt to make a secondary or a follow up, or follow through movement on a second impulsive lag. That hasn't happened yet, but that's something you want to be expecting. Whenever there's an impulse, let me move it right here, right? So whenever there's an impulse, not I'm not referring to any structure here. Whenever just the impulse, and you see price, either going a little bit back or just going sideways, you should automatically, naturally expect to see if there are indication or not of the price containing with another impulse, because that's very often how price moves: impulse, consolidation, and then another impulse. Not seldom in the same direction, right? So that's one thing happening on the weekly. On the daily, what do we see on the daily? The daily is the following. We do have a reversal pattern on the daily, which is this left shoulder neckline, the head, the break of the neckline, or the activation of the quasi, price going back to one of these three areas. And that's where you want to be watching and waiting and analyzing if the market is going to reverse or not, because this is the reversal pattern, not necessarily from here. That this is how the market very, very often moves, right? You have an established uptrend, it breaks that trend or the structure BOS, and then comes back for the retrace, but fails in the process. That becomes then the right shoulder, and then you see price going back to at least this level, and a lot of the times the continuation of that reversal pattern. So you want to be looking to see if there's anything that the market is giving away in terms of indication if that's happening or not. I do understand that each time frame is telling a story, and often these stories, they are not aligned, they're not in the same direction. The monthly was telling us to be looking for possibly more downside direction or movement. The weekly was telling us to look for the next leg up. And the daily, what I'm basically telling you right here is that, the quasi, you should be looking for possibility of the market going low, right? It is what it is. Sometimes, the market isn't going to be always aligned on all time frame. And actually, majority of the time, that isn't the case. It is, you have to be patient and watchful, and only trade, or select your moments to trade when you have more alignment than not. So that's something on the daily. That's what we see, and we are reacting currently on the daily order block, which is part of the quasi. This quasi has 3 entry order blocks to go short, or for the market to use as jumping pads, or in this case, falling pads, because the market would be falling down from these levels, from these areas, right? So, and the market is reacting on certainly from this one. You can see here how we had the engulfing and then the outside bar, and we came back, had a surgical reaction right here. I mean, this is not coincidence. And then we had another push a couple of days later, which was also kind of a surgical reaction to the order block, which is not the entry order block on the quasi. But you can see how the market reacts to these structures, both of them in these cases, because of they're real, they're being watched by the market constantly, and you want to know about them because that's how the market moves. Okay, so that's EU on the daily time frame. If you go to currently, so on the if you zoom out, you would expect, let me check if there's a on the check, it's an equal. Okay, so that's fine. On the, let's go to the so we have if you zoom out, there is an expectation for price to push much lower because of the quasi we have to the left. But if you go deeper, you'll see that we are currently in a fresh bullish structure, meaning we have the creation and perhaps the continuation of this move, which would be the continuation of the previous bullish structures we had before for the move up. Okay, so both of them are on different zoom levels, but both of them are valid setup. So we need to search and get enough confirmation to understand which one is more likely to happen. If you go to the H4, there isn't anything within the daily. This is the daily. There isn't anything in the daily currently that would make me want to look for a long or a short, for that matter. This is the order block that I was looking to go long, but the market price action did not confirm. Not only that, it was doing the opposite by reacting bearishly again after it had already done so. So that made this a bit tricky, but eventually it did not trigger. On the long side, there isn't anything for me to take a long from, so I'm just on EU, just waiting for price to give us more information as to where it wants to go. On GU, this is the one Peter was talking about. This is a trade that I'm currently in. Doesn't look to be going to hit my going to go to target, but it is a beautiful trade nonetheless. We have on the higher time frames. We are currently in a supply area, and it's still at play. It's not. It's still within the first attempt or first retest. This is where this candle is the first candle, the first attempt happened, and everything here is still considered to be part of that retest, even though it doesn't look like it's successfully retesting currently. That's on the monthly. There isn't anything else to watch in the time frame currently. On the let me take this away. Yes, on the quasi on the weekly, there is also a reversal pattern. You can see it here, like so. And there are a couple of things that you see here. Actually, I need to expand this and indicate it as it is. These are the reversal pattern on the weekly. And the market will have to wait for the market to finish today and create the price action or the candlestick combination to confirm that the market in this time frame on the weekly has the sellers have taken control. Whenever that happens, then the new structure is the area you want to be going short from. Here is you want to be going short if and when we do finish as a candlestick combination that indicates that the sellers have won the battle basically of the last few sessions or the weekly candles. Okay, so that's so there's a reason, the same thing as with EU, for price to go lower because of the reversal pattern, because of the monthly structure we have at the back, because of the price action in the last couple of weekly candles. We still have to wait for the Friday to finish before we can use this as a weekly signal. And in terms of the daily, you have a beautiful, do you guys see that? You have a beautiful reaction on the entry order block on the same pattern, right? This is the quasi. And that's the left shoulder, neckline, neck. Price breaks it here, activates the quasi, price goes back, has some reaction on the first entry order block, but eventually that order block is invalidated, goes to the next, and you can see how with little wicks, it interacts 3 times before going the opposite direction. This is suggestive of price going lower in the coming sessions, right? It can still change and go deeper, but the reaction, it fits the reversal, the possible reversal for price to go lower. And if that does have continuation, you would be targeting that low from here, or perhaps that order block riches I'm indicating right there. So something like that would be a nice target to have based on this quasi. Now go to the lower time frames. Besides, or despite I have that bearish idea for price or expectation for price to go on, maybe on a, not maybe, on a swing trade, on the lower time frames, what we have is a fresh order block, bullish. Okay, so this expectation for price going lower is something that is standing there, but it can take a couple of days or maybe even a week before that materializes. In the meantime, you have some price action that are much more acute, or in the sense more recent, giving you reason to act or to expect some kind of a reaction from this. So you have a bullish order block, which is on the second retest, so it's not a daily trade. You're not supposed to use this as a swing trade signal to hold this for longer than a day, but it is a beautiful area that you can use as a confluence for your intraday or your day trade, right? So you have a order block that's not fresh. It is on the second retest, but it is recent still, not fresh, but still recent. And on the H4, right? If you do the quasi right here, you would see that right here. Let's do it with you guys. Live analysis, right? So you have a established downtrend price. This is the neckline, left shoulder, the head. Price goes all the way up here and then comes back for the possible structure to be seen. This is on the H4, and let me see. We have a an overlap of H4 and H1, which you can see right here within these two horizontal lines, where price could have some kind of a reaction, possibly all going to this level, perhaps on its way down later on, right? Or we never know, but that's the general idea. It's not to hold for much longer. It's just for a session, and maybe even less than that. Let me go to lower time frame. So you have the reaction here. If you go to the 1 hour, you can see that there's also a quasi in here. Right here, you can see this is the quasi, and it goes all the way to the highest point, and it comes back for that possible reaction on this level, right? So that would be, I think it was on the 2 hours. Yes, it was on 2 hours. Actually, the quasi was a little bit different. My apologies if that confused you. This is the quasi, and this is the highest point, and that is the entry order block on the H2, which has a confluence or alignment with the H4. Okay, so that is the area of interest. And if you go to the 5 minute, or even in this case it was the 2 minute, you can see why I got in on that trade. This is the quasi. I'll show you right here. This is this is how I trade, and this is how I put bread on the table, right? So the established uptrend, price goes all the way, breaks the neckline. This is the neckline. It breaks it already, but then comes back for one of the entry order blocks that we have here, and we have a reaction. And within that reaction, I get triggered, and I go long, put my stop below it, and then just wait and accept whatever comes, whether that's a stop loss or the market reverses completely. That's up to the market. And Peter, our friend, asked me, what am I targeting? Well, on the H4, there isn't a reason. The target would be all the way up here in 610. And let's check the daily, just to make sure that I'm doing things correctly. What is the daily ATR doing? 111. That's the current rate. And you can see that the current range is already beyond the ATR level. That means that a long made sense, just in terms of the ranges of the day. And on the H4, let me see if there's anything else to guess. Oh yeah, so on the H4 there isn't any levels all the way up here, but that does not make sense because it's too far away. The H2, it doesn't give us any indication, and the H1 is the first one, right? The H1 is the first order block that is after the reversal, after this complex of price action. That's the first area we are heading, or that's the first area, logical area for price to go to. So I put my stop loss in front of it to front run it, and I just let go. There isn't a lot more to target. You could argue, this could be a better target, and there's perfectly a good good reason to put it there. But I will just enter and then leave my target if it hits top loss, which is not very uncommon because you can see how hard these drops are. It is more likely to continue lower than it is to make the reversal. And I'm very aware of that. But to compensate that, I have in this case, a 1-to-6 risk reward ratio. So it doesn't have to, I don't have to be 50% of the time right. I only have to be more than 17% right, or actually a little less than that in this trade to be right. And that's easy given the confluence that I have, the top-down analysis, the overlap of the different time frames. I know my win rate is around, actually a little bit more than double that, around 35%, and these trades will work, and that makes it handsomely profitable because it's a 1-to-6. All right, that's the trade. For those who are wondering, I saw while I was talking, I saw that the chat was quite active. And we are less than a minute from the US Open. So back to you, Samir, to see some price action originating from the NAS or the Dow, whichever you are looking or eyeing to take for that trade.
All right. So let's see what we can do today on NAS or US 30. Maybe Remy can. Okay, now it's fine. So we have to build this story so that price action makes sense to us, or we can come to a decision which makes most of the sense. Which makes, or maybe which scenario is having most confluences. Let's go to the daily time frame and let's see what we can do. Okay, daily time frame rejected from this fair value gap, closed bullish. We haven't swept any high or low yet. But the recent daily candle definitely is showing momentum to the upside. So maybe we can push higher. But this is not enough. We do need more information so that we can make a decision. But for now, daily candle do looks bullish. This candle can go high. Let me mark the daily high and daily low. Going to the 2-hour time frame. NYSE is there. 200 EMA is bullish on the 2-hour time frame. This trend line is already gone. Right now we are in a consolidation phase. 15-minute. Let's come straight to the execution time frame, which is 15-minute time frame. Okay, 200 EMA is trading somewhere in between. So I think we can get a fake out also and still can go up. Why? Because the confluence to the upside is a little bit more than to the downside. If I have to take shorts, what will I do? Let me go to the 5-minute time frame. I will wait for the price to, let me draw this trend line. Let me make it something like this so that I can have more touches. If I have to take shorts, I will wait for the price to close below this, and then 1-minute time frame shows some kind of consolidation, and then I will take the trade. If price took this, use this trend line as a support area and goes back up and goes back above the EMA, little bit of consolidation, then I will take the trade. Let's take a look at the weekly candle also, how weekly candle is performing. Okay, yes, so wick is huge and the pressure was from the downside and closed bullish. But we are also at the resistance. I know NAS is pushing way too higher. It has made all-time highs. So US 30 also have that kind of strength, I think, based on the weekly time frame. It is also a consolidation. We need to break out of this consolidation on the weekly time frame also. And these candles are also very strong. I do think we can test this area at least. Of course, not this week, maybe next week or coming week. We also can break to the upside. So definitely looking good for the upside. But as I mentioned, we do need some kind of confirmation. And right now we don't have any. So I will see how price behaves around this area, which is a trendline support area. This also can act as a support area. We can bounce from this area. So this is a very crucial moment. Let's go to the 1-minute time frame. Let's observe what price is trying to do. Okay, right now we are straight up in the impulsive phase, going to the 5-minute time frame. Can we reject from this area? This is also the trend line area. 1-minute time frame will show us if we are going to reject this area or not. How will it show us? You might be wondering. It will slow down in the momentum. This is the scenario number 1. Or we will see a rejection and then something like this. This can also be the trade for me. Or, we can also break to the downside and then maybe retest move. We will see. We have a couple of scenarios now. So let's see what price does now. This trend line is getting broken here. 15-minute is also showing momentum to the downside. And this is not enough. Yes, trend line is getting broken. Momentum is there, but the entry pattern is not there yet. So we have to wait for the entry pattern. And for me, what is the entry pattern? For me, it is simple. Chart pattern can be consolidation or a triangle pattern and then a breakout of that. This will be my entry pattern. And I will take the trade something like this. My stop loss can go above this area and TP will be 1-to-1. I need the perfect setup or perfect pattern, which you normally see in an image. I have observed the perfect pattern have good win rate and they work out a little bit better than any random patterns. So that's why I need a perfect pattern. This was not a perfect pattern. If you try to draw trend lines like this, yes, it has broken, but this was not the perfect pattern. And if I give you an example of a perfect pattern type of thing, what I will consider as a perfect pattern, maybe this area. This I will consider as some type of rising wedge and then breakout. This type of thing will be good if I get that in US 30. Remember, it has also swept this low. So it can also do a V-shaped recovery type of thing. But if it is an actual breakout, price will give us the sign and it will slow down in momentum, and then we can plan the entry. So this will be the idea for US 30. We have to wait and let's see what it does. And the other scenario can be, what if we've impulsed way too much to the downside? We never saw a pullback. What can we do in that scenario? So let's discuss about that also. Let me delete this. Let's go to the 4-hour area. Can we utilize any information on the 4-hour? Not really. We don't have anything. 1 hour, we don't have anything. 30-minute. Yeah, I think we can only use this point as a liquidity point, and we can draw this trend line, something like this. So if price impulsed way too much to the downside and tap on this trend line, this will be my reversal trade. I'm not expecting a huge momentum to the upside. I will just capture my 1-to-1, and that will be I will be done for the day. So let's see if we see a pause here and we can short it, or we impulse down way too much. That can also be that can also be good for us. Both the scenarios make sense, but we need that entry pattern. I'm repeating it again and again. The entry pattern is must, and it should be in a perfect shape as a trade pattern. So that's why I'm saying shape. But let's take a look at NAS 100 also. What NAS is trying to do. I have observed these two pairs are or assets are moving, in an opposite way. If NAS is making all-time highs, US 30 is doing nothing. So price is already slowing down its momentum. So this to me is a correction. I am expecting impulse now. So we need to gather confluences where impulse can happen. For that, we need to go on the higher time frame so that we can observe the things, or we can use the information that we have. Okay, this is a fair value gap on the daily 2-hour. Do we have any trend line or anything that we can use? Okay, this is the trend line. We are not there yet. So definitely, if price goes a little bit more down, still can use that information, and still we can look for buys. Let's go to the 15-minute time frame and let's see what price is trying to do. So yeah, this is a consolidation phase right now, but I don't want to execute a buy right here because the trend line is right here. We can get a fake out here and then price tap this trend line. Let's take a look at 4-hour time frame also. Yes, this trend line is valid on the 4-hour also. 15-minute. Yeah, I think this breakout can be a fake out. Can we utilize that information and we can maybe short it? We will see. Now let's go to the 1-hour time frame. Okay, there is a small fair value gap, and if I go to the 15-minute time frame, which is the most important time frame for me when it comes to execution, yeah, it is not giving me that much confidence as US 30 is giving me, so I will rely on US 30 today. So all right, we are seeing that momentum, which is a part of our plan. We did the planning. We are getting close to the area where we are planning our entry. We don't need to get excited. We have to observe and we need to wait for the pattern. And still, this is not the entry, this is not the area where we need to enter. We need to find entry somewhere around here for longs. So for shorts, still if we can get a correction, that will be good, because still we have a decent range in my opinion to target. Yes, still we can capture 1-to-1 if still we get the correction to the upside, a picture perfect pattern, a chart pattern. So we still can use that information and we can take shots. So now it's time for wait, and we need to wait, and we need to observe price closely Basically, I need to do that because this is the part of my plan. I'm just showing you my plan here, my trading plan, what I am planning. What are the thoughts going in my mind when I come to the charts. So let's see what price does here. Right now, nothing we're gonna do. We are still waiting and let's see what we get. Probably after 5 to 10 minutes, I will give it a look once again and we can see what price is doing. If we are preparing the shorts, we will execute the trade because our plan is ready. We are just waiting for the entry pattern. Once we get that, we will not, second guess here or there. Should I take it? Should I not? Execute? Then it's the time we need to execute if it fits our criteria. For me, as I mentioned, so that's what I'm waiting for on US 30. I think somebody was asking about gold. Let's go to the 15-minute time frame. Okay, this will be the shorting area for me on gold. I'm waiting for this area. So yes. All right.
You're
Do we
waiting
need
to
to
go
check
short?
DXY before this area will be the shorting area for me? I know Fibonacci is like this also, which is making which is making sense actually. But if we go to the higher time frame, maybe daily or weekly, I am using this information and I am considering the way I'm building the story, this can be a liquidity point. If the volume was there, it should have continued higher. So I think this buys can be a fake move. The actual move can be sells based on my story. Of course, I can hit a stop loss also. People entering buys here can price can go all the way here, and this will be my stop loss. But that's fine. I am confident in my analysis. I know this type of things do works 50 to 60% of the times, and that's what I need to be profitable. I don't need to get 80 to 90% accuracy. Even 40% is good for me. I just have to train my mind so that I execute. I don't make mistake in the execution part. Rest, it is all probability.
All right, that makes a lot of
All
sense.
right.
Samir, Abra says thanks to an EUGU. No problem, my friend. Jew Leonardi asked if we check the Dixie, the DXY, the dollar index, dollar strength index before trading major pairs. You could. It gives you information about how the dollar against a basket of currencies is faring, meaning because whenever you have two currencies, the movement when it comes to when that pair moves, you don't know if which of the two. Like in euro dollar, you can always ask yourself, is it the dollar moving or is it the euro moving? But with a Dixie, you get the information. If it's the dollar, you will see it in Dixie, and if it's the euro, you will see it in the euro dollar and not in the Dixie. So it gives you that possibility of discerning which of the two is moving, which of the two currencies is moving at that moment. However, since the euro dollar is the biggest component of the Dixie, a lot of the times, what you will see is that they overlap. They have a high correlation, meaning you get basically the same information from euro dollar as you would from the Dixie, um, with some variation, but it's mainly the same thing. So it's a somewhat limited information you're getting, or it's somewhat twice or double duplicate information you're getting from already from EU. So if you have an EU um, analysis done, let's say top-down analysis, then it wouldn't make sense to check the Dixie. But if you're trading something else, maybe um, something that's not the euro, then looking at the Dixie would make increasingly more sense, right? If you're trading the Aussie dollar or something else, then looking at the dollar index makes sense because it'll tell you what the dollar is doing, and which will be different than what EU and is doing. All right.
All
Let's see.
right. Abra is asking, what's your max pair tolerance? So I trade the pairs that I have experience with. For me, The pairs that has given me decent results are the major pairs, which is EU, GU, AU, USD JPY has given me decent results in past. USD CAD has also worked out good for me. So I'm just, taking some notes from my past experience, and I'm using those notes now, whenever I have to optimize my system, or whenever I have to make decision what I have to do. Because I have mentioned this couple of times, I am a dynamic type of trader who like to see the performance in, let's say, 2 months, 3 months. If I'm having good performance, I will continue to use that thing. If I'm having bad performance, I might can use other thing. But my foundation will be always the same, the fundamental part of my strategy, which is impulse correction. And yeah, the execution can be different. Sometimes it's a liquidity execution, sometimes Fibonacci, sometimes pattern. And this pattern thing always remains with me. As I mentioned, as I explained my USD CAD trade, I still look for that consolidation here on the smaller time frame. If there was an impulsive leg, I wouldn't be executing this trade. So yeah, gold wise, let's see if we get a pullback around here. I will enter my trade. Of course, it can happen. It's not gonna happen like in one candle. It can take couple of minutes. We may can get this trade tomorrow, probably London session. So I'm just gonna leave my trade something like this for the stream reference. If we get here, that's good. But if we break to the downside, then I think we're gonna get closer to this area. Then it might can invalidate this scenario right here. So I will delete the area, then if we break this area. So yeah, I'm just waiting for gold now to pull back and then take some action. So still it is a tricky pair. I don't trade it that much, but the higher time frame is making sense. And let's see what we do. If we go to the daily time frame, and if I decide to trade from this Fibonacci, and that is also valid actually. 4 hour is showing the impulsive momentum. Right now we are in a consolidation phase. We are in a consolidation phase, and I am expecting the impulse based on the 4 hour time frame. So this analysis is also valid. This area is also valid. So yeah, let's see now. If we pushed way too much, then this can be the buying area. But then I will not be expecting a huge target. I will just take my 1-to-1 and I will get out of the trade. So this will be the trade idea for me. Fibonacci aim for particular zone, yes, it is 0.71. You are right. And let's take a look at US30. We was getting a very aggressive momentum to the downside, which
Before you
can
do that,
indicate, yeah,
bef- before you do that, let me give a little update on the trade on GU, because it is not looking good, and I'll tell you why that is the case. I will not take it out. I will just take the stop loss, but I'll tell you what I
okay.
see that I already know that this trade is likely not to work out, right? So we had a great area, right? I refined the in area of interest, and it's this is based on what we talked before. I refined it even further, and the setup is nonetheless valid. And this is the area, right? This is the area of the quasi that not supposed to, but if the market is going to reverse, it has a good chance of um, reversing price, right? It's there, and you can see it's a strong, it's a potent air, and you can see right here that the market does acknowledge, does react on it, with with buyers coming in. I read it on the lower time frames, but you can see it clearly here on the 5 minute, how the outside bar was created, and that further confirms me that this area indeed was the level that is able, not necessarily it's going to reverse price all the time, but it is able to reverse price if everything else, if it is going to be reversed, then this is a great area to be going long from. And that I did get it, put my stop down below the area. But watch this, right after So you have the market coming. This is basically the pattern that we now have. Probably is going to be hit. Well, I don't know, but it looks like it's going to be hit within the. There we go. This is what we see here. So instead of price, what we want to see when these when you get these triggers, when price comes back, creates the quasi, and has a reaction from the quasi, meaning this leg, right? You want this high, this swing high, to be higher than the previous one, because if price is going to reverse, there is no other way. It needs to take out these swing highs, and it failed to do so. That's a very important. It doesn't mean if it fails, it's always going to be. I mean, if it doesn't make a higher swing, it doesn't take out the previous swing high, you're guaranteed to go. It's going to go short. I mean, going to fail, but the chances will then have diminished very quickly. And you can see as soon as it is a swing high, a lower swing high, and here it's supposed to make a higher swing high. Did not do it, and you can see how the weakness as it sets in. That's that's not a good sign for this trade. As I said, I'm not going to be taking this out. If this trade stops me out, that's what I intended it for to do. But you can build your case. I don't like to be taking these trades out, but you can certainly make a case reading price action as the trade is open to have an active trade management to close out the trades before the stop loss is hit. You can save some some of the risk that you're running. I decided not to do it, but the reason that I did it just because of efficiency. I prefer to just put it in, put my stop loss, and walk away, and do something else instead of, trying to pinpoint, not pinpoint, but trying to needing to babysit this constantly, because you need to be reacting on price action. You're probably going to be taking that stop loss, and that has all to do with the weaker swing high or the lower swing high right there. If it moves back in my position, that's fine. I'm still there. I'm still in it. But just to give you some insight as to how the market should not look like when you enter. It shouldn't be making lower highs if the reversal is, if the area is the area that's going to be propelling price for higher prices. It needs to go in with a lot of good impulse, and it did right here, and it had a continuation, but it needed to take out this high. Actually, there was an outside bar here on the lower time, or not on the 5-minute, that it failed to take out. That was the 5-minute. It needed to take out this and close above it. It can then come back down, but it made its point that it's ready to change direction. And here it's not making, it's not convincing that it wants to go. It can still push higher, but it failed the initial test to do so, to indicate what it wants to do. That's what I wanted to ask, to share with you guys, while the trade was still open, and also to share this is how I trade. This is how we trade. We show you, the trades while we're in it, before they go to TP or stop loss, and guide you a little bit what we think, why. And even if we think it's not going to work out anymore, I think there's valuable information there for you watching and thinking, okay, all right, so how should I manage my emotions or my expectation after it enters? Because once you enter, it's looking great at that moment, perhaps, but a couple of minutes later, should I take it out? Should I, all these doubts creep in, and it's good to have some kind of a. I'm not saying my way is the only way or the best way, but it is. I've been trading for some time, and I think it's helpful for others to at least have some kind of reference example as to how others are doing it, others that are profitable and consistent. Go ahead, Samir. We're going to look at the
Yes.
US 30.
Yeah, that is you just mentioned a good point. That is part of trading, and I think with time you realize this thing. And here at The 5ers live stream, so you're getting to know the phase of trading. So you might be in unprofitable phase right now, but once you get to profitable, you move into the stage, and Victor is showing you his live. It's a live psychology check, and all the things are the way he's seeing the market. Can be stop loss wise, can be TP wise, can be analysis wise. So okay, we are at my screen. I told you guys my plan. I will again reshare my thoughts on US 30. So this is the trend line we are having. This is the daily low. We have broken that. 15-minute time frame. Once it get to this trend line, I want to plan for my longs entry. But that doesn't mean that I will execute right at the trend line. I need to see that slowdown of momentum on the 1 minute, which right now we are having it. It is a plus point for me. So I'll be getting ready for my entry now. What do I need? I need price to form this pattern that I have, marked out. So this pattern, I can even take aggressive entry here without the breakout right here. So I can take this aggressive entry because I am used to seeing this kind of nature. And I know there will be divergence on the RSI also once we move this way. So I don't have to, check there. So now we are also just 4 minutes away from this live session. So I'm giving my plan. Once we get to this area, it should be in corrective form. It shouldn't be impulsive, something like this. It should be in corrective form. And you guys can expect me in the entry, in the trade, somewhere around here. So I will share this live with you guys tomorrow because I know my stop loss will be a little bit big, and this trade will not happen in 5 to 10 minutes. It will take some time. I can even hold this trade for tomorrow. And it is not weekend, so yes, I can do that. On weekends it is very risky, guys. You should not hold the trades over the weekend. If it was different market condition, I wouldn't have said this. So right now, considering the market condition, we are seeing gap up openings, gap down openings, so that's why I will not do that. So as it is Wednesday, I can do that. So let's see now what we get on US 30. I think there is 90% chance I am going to get the consolidation, so I will be in the trade. But yeah, it is still the waiting time. I have been there, guys, when I was developing the strategy for my own self. Of course, these concepts I haven't invented. I am just taking the piece of puzzle, and I'm just placing in the way I feel it makes sense to me. So this is what I will call it. And I was discussing the point. I have been there where I have taken the aggressive entry, that my stop loss is sacrificed, and then I have taken the stop loss, and then price moves in my favor. So, and I have done that also where I drag my stop loss to say to myself, oh, the original entry was here, my original stop loss was here, so let's drag the stop loss. So now my risk is doubled. I have been there, but as experience teach you things, so that's why I am doing this self-talk prior to taking the trade. So even if it, goes like to the upside, it is still fine. My plan is I have to take a trade here. That is the only thing that I can do, follow my plan. Rest, it is not in my hand. So, I cannot control anything. The thing that I can control is I can follow my plan and I can control my risk. If I am supposed to take 1% risk, that is under my control. So you should manage the things that is under your control. The outcome of this trade, I cannot manage that. So I don't know what this trade is gonna do. So I will try to do my best. The thing that I can manage, my execution I can manage, my risk I can manage. So I will try to do best in these two things. So I want to execute here, I will wait. And let's see, I might can set, I don't even have to set the alarm. In my phone I check my charts here and there after 10 minutes, 20 minutes, because these type of consolidation do take time to happen when it comes to my area. So I will be monitoring the charts on US 30. Looks promising, the area is nice, the way US 30 is moving now looks promising. I have to wait for the for this area. That's it. So that will be the closing word on US 30. I can look at gold now maybe, but for that we do have some chat is asking question. Okay, Hemant Aradhya. Okay, Samir, Wednesday weekend swap has been shifted to Friday, right? No, it has not. No, it is not. You have got huge profit on gold if you would have entered. Let me see what gold is trying to do. Uh, where I can enter? This is not the part of my trading plan. I cannot execute like this. If I do, maybe this can be a profitable trade, but I know in the long run, it's gonna be a painful journey. I have been there, and I am not gonna go there. So that's why I'm sharing few crucial points with you guys. The thing that is in your control, you can manage that. So I have designed this plan for myself. So I have to follow that. This is the only thing that I can do. Of course, for your strategy, it might be a selling trade. You might be selling here. So that is fine. But as per my rules, my strategy, so this is not where I want to get involved in the trade. And you don't have to get influenced by me. If this is your trading plan telling you to sell, I think you should follow that. In the long run, I know your thing also will work out in your favor. Please do the analysis on GBP, JPY. All right, I will cover that. But okay, I'll take a minute. I'll just read the chat quickly as we are running out of time. Okay. Uh, okay, they mailed a swap. Okay. So I haven't checked the mail. You can check the mail. So you can get updated with that. But before ending the stream, let's do a GBP, JPY.
I'm not sure if it's mine. Please let me know in the chat, everyone, because I think we have lost contact with Samir. Let's see here. Okay, no, Samir is back. Go ahead. I think you're muted, or yes.
Check.
Go ahead.
Yeah.
Okay, go ahead.
Okay, I think now it should be fine. I will take just 2-3 minutes to cover this GBP JPY trade. Right now, weekly, swept this high, this low is there, this low is not swept yet. So we reject it from this kind of demand area. You can also call this as a support area also. Going to the daily time frame, this is a higher low, higher high. Still, we haven't breached this area. Going to if I draw the Fibonacci on the daily time frame, 70% is getting respected. So on the daily time frame, I'm bullish on GBP JPY. I can ignore this information. Why? Because going to the weekly time frame, we have closed above this area. If we would have wigged out, then I maybe would have told you to do something like this. But as we have closed, so I will just follow this price action here. We are on the 70%. I am expecting move higher based on the daily. So now it comes to the entry. Actually, we are right at the entry. I was seeing the chart. Let me go to other chart. Okay, I was seeing the charts. We are right at the entry based on the 70% retracement area. And if you see, price is slowing down already, which is a sign for me to enter, as I am not familiar with GBP JPY based on this strategy. Yesterday also with Richard, I was focusing on strategy and correlation with a particular asset, as that USDT strategy will not work in a good way in Forex. So I have not tested this Fibonacci thing on GBP JPY, how well it works. On the major pair, it does works well. But this is the entry signal to go long on GBP JPY. So I am expecting bullish price action here. So yeah.
Yes, the opening range on Nasdaq as well. I'm gonna switch to my screen a little bit, if that's okay with you, Samir. We
Yeah,
have
it's fine.
on the higher time frames, we have a couple of things, couple of levels you want to be taking, taking the time to look for. First of all, we had an amazing run, right? So it is only logical for price to go in the opposite direction to retrace some of these levels, and the first level on the daily time frame for support or supply, not supply, demand, is a long way to go. So we still have about, on the daily time frame, in any case, we have about 400 points before the next daily demand zone, and even that, after such a great extension, is a lot of the time isn't enough to stop price, right? So that's on the daily time frame. The 4-hourly, yesterday we had an area that we created, that we actually used that order block for a reaction. You can see this reaction we got here. It is within the levels, right, from the low of this candle, the low of that candle, to the high of the following candle. You can see the reaction. Even if we're extended, this is the order block that was created. That's the movement of the order block. Price comes back and then does the reaction. Beautiful reaction, even though it didn't extend to the as a breakout for the let me check here something on the background. Even if it didn't yes, even though it didn't move the market in the extension of the opening range. So we have that. So we have the break of the H4. That's why I left it. Not only that, we have a second order block that was created on NAS that, we right now, not 5 minutes ago, we got a outside bar that was created after we retested, or we retested it successfully as a bearish area, which is this, right? So after yesterday we had the fresh order block that has this reaction. Today we created a bearish order block right here, and right now the previous candle retested it and had that move, right? So basically, if you're not sure what I'm talking about, this is the move that created the order block. Price goes back to retested and move out. So basically that's already done, and may continue much lower, which makes sense on the higher time frame, or that could be it could just consolidate from here. And if you go to the lower time frames, what can you see? There is, price leaves supply areas very neatly, actually one after another. So you can leave them on your screen to understand where price is likely to have downward pressure for that continuation, meaning it could go to this area, but especially this area for that continuation lower. That could be something you could be looking. And if you're trading the opening range, if you go to the 1 hour, it's wider, so it doesn't really help you. If you go to the opening range, what you see is, if you look, this is the open, right? So that's the open on the 15-minute. You can see that we just broke out of that 15-minute opening range. What does that mean? That means that, sellers are eyeing to be stronger. However, there is one little reaction or one little thing that could still happen, and I'm going to tell you what I see here. So even though, yes, the higher time frames tells us, on the, we could, expect some kind of retracement next couple of days, next couple of sessions. If you look at the actually H4, but also on the H2, the market is telling us, price action is telling us that it wants to go lower. But if you go to the 50, the 50 in the opening range as well tells us that the market wants to maybe retap and continue lower. So multiple ways to look at the market tells you that. But there's one little thing here that you actually, it has been already invalidated. Let me show you this. All right, so you have a quasi, and this also tells you that it wants to go lower. So everything tells us clearly here that it wants to go lower. That means that the probability of price going lower are just, very high. And which is, established downtrend, price breaks it here, and if it was going to go higher, it should react to one of these order blocks, entry order blocks, which is this is one. And you see here how the market is, at least not yet, not reacting to that order block, right? It is just going south as we are speaking, and it is, clearly not interested in going lower. So you shouldn't be thinking, this is a sweep. The likelihood, I think, for this happening is, let me go to a lower time frame to see if we have some price action that we can read. This is the low of that opening range. This is the order block. I don't see it. I don't see the reversal coming in. It might happen, but I don't see it. To me, higher time frames, H4, H2, the hourlies, and also the opening range tells us that the market is weak, and it doesn't convince me that this is a sweep and it's going to go higher. So it's all tells me, price action is telling us that it's likely, unless it changes suddenly and start creating bullish structure. Right? There is a 5-minute here, which is created on the. All right, so let's do that together with you guys. So there is on the 5-minute, even though it invalidated right here, it did created a bullish order block, right? Still missing 6 seconds, but that will be the 5-minute live trading. So if the market is going to reversal, this is the last opportunity for it to go higher. If it doesn't do this, closes below this level, it's absolutely gone, in my opinion, and it's going to go south. And it's going to be a retrace day in terms of the retracing the movement of Friday and the previous week. If it does this, then we can go higher. And if it's unable to, then we are going to break low. If it break this order block, comes back, it's just likely to go lower. It doesn't even have to come back. Something like that. These are the two options that I leave. I will let price tell us what it wants to do. Let's check the chat. Let's see if what the chat is asking us. No problem. Let's see. Thank you, Evelyn. We appreciate all of your support, all of you watching, your time. Oh, we are way over time, Samir. What's happening? It's price action that's holding
Yes,
us busy.
price is
Not.
moving. Hmm.
So we suddenly have reached the end of our stream. We will be watch the market if this will be the case, or as it looks like it's going to be lower, perhaps the breakdown of that area and the continuation, which makes a lot of sense to me, because everything is lining up: the order block, the quasis, higher time frame, the daily, and even the opening range initial price action. Awesome. Samir, everyone watching, we're going to have a session on Discord today. Yes, today we're going to give out 10 hub credits. If you're interested in getting 10 hub credits, those are $10. You can add them to your next account you buy with the Fivers. The only thing you have to do is be in our Discord session, listen actively, interact with us, and you have a chance of winning 10 hub credits. As easy as that. All of you are invited, and don't forget to like and subscribe this this stream, this channel, because that is how you can support. If we did anything good to you, then that's the way to give us a token of appreciation back for your you know as a favor, if there's anything we did for you. All right, so that's it for today. The market is reacting on that order block. Look at that. Any last words, Samir?
So I have covered almost everything.
Uh, your
Psychological.
Yeah, your connection is slightly okay. You're back. Go ahead. I think we missed you. Your connection is not
Yeah,
completely there yet.
I think there is a problem in my connection. So, guys, I'll see you tomorrow. I have pretty much covered everything: psychological part, technical part, what trades I'm looking at, the way I execute. So, yeah, these kind of streams, I wish it was there like 7 years ago when I started trading. So, guys, make sure you're taking advantage of this opportunity. And as Victor mentioned, Discord can be the place for you because there are like-minded people like you, and you can also earn or get 10 hub credits. So yes, I'll see you tomorrow, guys. Thank you so much for showing up and watching this stream. Take care, guys.
Perfect. The Discord link for everyone who's interested, it is in your hub account or your hub space or area. When you have an account with us with the 5ers, your hub space, that's where the link is. So you got to have an account with us, and the entrance to the Discord community is completely free. And we have every weekday we have um, calls that for free, obviously, for you to attend to interact and to have a good time while learning, while exchanging lessons in the market. So that's it for us. Thank you very, very much, and I hope to see you soon again. And watch that order block, how it let's put it on the 1 minute as we go off here. As you can see how the order block, right, price created it, came back, retested it, and actually I thought, everything looked so weak. I thought, this was just a continuation lower, but lo and behold, the price reacts from that. All right, that's it. Thank you guys. See you tomorrow. Bye bye.